just 1% in the pre-market. Joining us now, one of the biggest bulls on this stock for quite a while on the street, ARK Invest CEO Cathie Wood. Cathie, thanks for making time for us this morning. Let's just talk about what Dan Ives said to us yesterday, that he believes Elon Musk is crossing a line and that the board needs to step in. Do you share that view?
Well, I have to tell you, we've been dealing with controversy around Elon Musk in one form or another since we first bought the stock when the company was founded in 2014. And we own Tesla it's one of the top holdings in 3 of our ETFs, so ARKK, W, and Q. So we are watching this like a hawk, no question about it. But with the experience over the last 11 years, we turn around today and see Tesla really not an EV manufacturer anymore, moving into the robo-taxi age, we believe successfully, and we believe it will scale much better than most of its competitors. We see SpaceX really owning 90% of all of the satellites out there, Neuralink transforming lives of paralyzed people, people with ALS, and probably most surprising of all, XAI. Now, we own all of those, again, in our venture fund, following them very carefully. XAI is, on some benchmarks, it hit a point that O3 Pro hit in June. It hit it in February. So, you know, we are very focused on barriers to entry, technology, moats, and we believe that the moats that Elon has built, and obviously this is not just Elon, he's attracting the best and the brightest to help solve some of the world's biggest problems. So again, we do trust the board and the board's instincts here, and we stay out of politics.
Well, we'd love your opinion on the current situation, just on Tesla specifically. You mentioned some phenomenal companies doing some incredible things. For Tesla, though, do you believe that Elon can pursue his political ambitions at the same time pursuing the best interest of Tesla shareholders?
One of the announcements Elon made recently is that he is going to oversee sales in the U.S. and in Europe. And when he puts his mind on something, he usually gets the job done. So I think he's much less distracted now than he was, let's say, in the White House 24/7.
At what point do you see sort of the political landscape shifting, though, not just for Tesla, but for the haves and the have-nots in some of the big tech space? I know you've had a complicated relationship, say, with Apple, which seems uniquely pegged by some of these tariffs. Is there anything that you could see that would make you like that stock again, or do you think that really it is going to fall out of the Magnificent Seven?
Yes, we've been watching Apple for a long time with an AI lens, and that started, I'm going to say, about 7 years ago when it was becoming serious about autonomous vehicles. If you think about the ultimate mobile device, it's an autonomous vehicle, and that should have been Apple's to win. And what we've seen there is one turnover of management teams after another, and it's all around, you know, autonomous driving is an AI project. It's the largest AI project on Earth, we believe. And so losing the talent that it has, and as I understand, it lost another one today to Mark Zuckerberg's top 50. So they've had a lot of trouble in this regard, and I think the burden of proof is on them.
Do you think that it is time to follow the talent, that this is going to work, the gamble that you're seeing over at Meta, and that that's the path of travel for the other big tech companies that are going to just eat some of the companies from the inside out, take the talent, not necessarily buy the company?
You know, it's a very good question. We're trying to figure out if what Mark Zuckerberg is doing today is much like he did when he was pivoting hard to the metaverse. Which proved, because he thought that was the next big thing, and that was incorrect. AI is the next big thing, no question about it, and you do have to have the right DNA, and you have to move fast and break things, as he would say. So, you know, it'll be interesting to see if he's able to turn his open source strategy, and we've admired that quite a bit in terms of generative AI, into a leader again, or as we were observing it, Apple's Llama 3 at the time was improving at a faster rate than some of OpenAI's models. And that was true of open source generally. And then that has stopped. So yes, he had to do something. Is this the right thing? Why did that stop? I don't know.
Kathy, next time you're with us, we'll have a longer conversation. Two leaders, incredible men, doing incredible things. ARK Invest CEO, Kathy Wood from New York. This is Bloomberg.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in...
No, they think in like
100
hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were going to probably just hit it. And so far, we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I'm never doing that again.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
As Bloomberg's global financial correspondent, I get to meet the people shaping the way money flows around the world. And I want to bring you with me. Now we're playing.
Yep, now we're playing. First and foremost, I am a capitalist. The capitalist system is the best system in the world. There isn't another one that works as well.
Citigroup moves $4 trillion a day.
5.
Wall Street used to be a place.
I love all these new Wall Streets. Y'all Street, Wall Street South.
Now it's more of an idea.
The optimism here is infectious.
You think our New Yorkers are negative?
Yes.
Anything that trains people to understand probabilities and just think through things with a greater degree of nuance is a service to humanity.
I hope you survived the day.
I did. It was a busy day.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
The administration is looking for that last bit of pressure to get these deals where they want them to be.
This is a perpetual negotiation that we'll continue to see unfold.
This is President Trump at his best, bringing the pressure and supporting his negotiators.
The market is trying to operate like this is going to be a nothing burger, but we are seeing tariff rates go up.
As the days and weeks accumulate, we're going to get greater certainty around what the trade policy posture is going to be.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
This was the week, this was it, July 9th, that was the day you would get additional clarity on trade. You're not getting it. Live from New York City this morning, good morning. The third hour of Bloomberg Surveillance starts right now with equity futures on the S&P slightly firmer, just a touch positive, up by 0.1%, a bounce back on the NASDAQ of 0.2%. Your week ahead still includes jobless claims coming up in a few days. It still includes earnings from Delta Airlines. What it won't include is clarity on July 9th on the path forward for trade.
Because ultimately that can's been kicked and people are watching that and they're saying, okay, so August 1st is the new July 9th. Maybe. Have we gotten any certainty? And I think that's a valid question. Is there a certainty in the uncertainty? The fact that there is some sort of prolonging in the deadline at a time when companies are figuring that the cap is not 145%, maybe it's 25%, maybe it's something like that. And that, I think, is what people are trying to figure out at this point.
Most people think the temperature was taken down after Liberation Day. If you look at some of the letters that went out yesterday, it does look like another maximalist approach, escalate to de-escalate, because essentially the rates are the same, but Trump's giving them 3 more weeks to come to the table. I'm still waiting on what happens with countries like India, like the European Union, like Switzerland, where we know that there have been tons of negotiations at the table and a lot of talks. Potentially this week, we get actual frameworks and agreements with some of those countries.
Investors want to make it really simple. July 9th was meant to be a clearing event. It's not going to be anymore. For the Federal Reserve, they were going to wait to get 2 months of data, maybe sit there in September and reduce interest rates. When they get together at the end of July, they still won't know what the tariffs are going to be a day later.
Is certainty overrated? I mean, I'm asking this question genuinely because we've been saying, we just need certainty and then we can keep flying and then people can keep, figuring out their plans and stocks can keep going up and businesses can keep going and the economy will be just fine. And we don't get the certainty and people are saying stocks can keep going up and the economy is going to be just fine. So what gives with that? Is it basically the uncertainty is something we can live with if there's a band that it sort of ranges within?
With Trump, the only thing certain is it's going to be bumpy and it's going to be uncertain. But this from the National Foreign Trade Council represents large U.S. firms saying the strategic uncertainty is producing some short-term results, but continuing to threaten exorbitant tariff rates is just paralyzing for the business decision-making and erodes trust with their allies and major trading partners. So at some point, the businesses are still potentially holding off on massive decisions until they get the final results.
Inflation hasn't spiked. The economy hasn't collapsed. Is that sufficient to sit here and say that things are okay? I don't know, but for the time being, things seem to be okay.
July 15th, or later this week when we get Delta earnings, we'll see how okay it is and what pockets are falling out or not, what pockets are accelerating. It was not that long ago when inflation was a good thing for companies. If we do get inflation, can they pass that along? I mean, we're talking about Porsche having lower sales. Is that really the clientele that's going to be worried about some sort of price increase, or is it a product mix issue? I keep going back to this, with particularly
the Porsche 911, the economics of the Porsche 911.
Okay, so people are really out there saying, well, I don't know, an extra couple
rates
thousand.
Right now, chairman comes up early, emergency meeting.
I don't think I could go from 120,000 to 121,000.
Not sure that moves the dial for them.
Correct.
For the July meeting, anyway.
Oh.
Might move the dial in September, Bramo. You never know.
Yeah.
Might be really freaked out about that.
Oh, no, the Porsche prices.
Futures this morning, positive by not even 0.1% on the S&P. Busy 60 minutes coming up. Alex Altman of Barclays as markets keep climbing a wall of worry. Stacey Rascon of Bernstein on tariff whiplash in the chip sector. And Amanda Liner of BlackRock on the risks of being too defensive. We begin this hour with stocks pushing higher as President Donald Trump signals a willingness to continue trade negotiations. Alex Altman of Barclays writing, the backdrop for risk assets is as benign today as it has been all year. There remains room for stocks to grind higher into month end. Alex joins us now for more. Alex, good morning.
Morning.
What's the price of the continued uncertainty here?
So I think the price of continued uncertainty is that we're going to end up with essentially an environment where Lisa, I think pretty much covered it. If we're just going to have a period where companies can't make decisions anymore, and consumers are going to hold off their spending decisions, at some point that is going to bite. And we talked about this a while ago, if you remember. We may be past the sort of peak uncertainty. We're probably not past the peak negativity. And I think we've just got to sort of take stock of the fact that at the end of the day, tariffs is another word for taxes. There is a tax that is coming towards the economy. And whether we split that between the corporate or the consumer is kind of irrelevant at this point. We're going to have that tax that will get hit in H2.
The way you explain it implies the worst of the data is still in front of us and not behind us. But what we've heard from many equity investors so far this morning and the past week is they're okay with that because the Fed's going to cut interest rates and it's going to be better in 2026. Do you take a different view?
I would take a slightly more balanced view. I think really my view stems and starts at two things. One is positioning. So from a positioning perspective, we talked about this before, I think that's a lot of the reason why stocks have got to where they are. The problem is now stocks are where they are, and we're back at trading at sort of 22 times. If we start taking an optimistic view on 2026 earnings, we're trading on around about 21 times. So stocks are not particularly cheap as a starting point, and that at the end of the day is going to create a bit of a headwind in terms of what the path forward is for risk assets. Risk assets at the moment are thinking, oh, everything's fine because nothing's actually hit the economy yet. Of course it hasn't, because we've been in this purgatory period. So we have to work off an assumption that there will be a tariff hit in the second half of the year, and it will either hit the consumer or it's going to hit corporates, or potentially a little bit of both.
You're the most bearish, bullish person I've ever met in my entire life. You're making an argument, and I'd say, okay, so you're selling stock. No, I'm buying them, because I think they're going to continue going up. So can you square that circle, please?
Yeah, sure. So look, we came into the quote that Jonathan just gave just now was basically us at the beginning of June, which was we were bullish, and we to a degree still are, largely as a foundation of AI CapEx, this fiscal tailwind from the OBBB, which is going to be about 40 to 50 basis points. And then positioning. I think you've really got to put positioning in front and center as part of your investment process right now. Because when investors were so disconnected in terms of their positioning to the market, vis-a-vis where the S&P was trading, we knew that there was a systematic bid that was going to actually drive risk higher. That's still happening today, and actually that's underpinning a lot of our bullishness right now. But fundamentally, it's becoming more difficult to get extremely bullish on the index at these levels. So what we've actually decided to do at this point is start to look a little bit more rotationary under the surface. And primarily, that's looking at something like within the small cap space. So we're actually turning quite constructive on small caps here, and that's driven by the OBB primarily, simply because it's getting a disproportionate benefit to smaller companies at this juncture as a function of the depreciation amortization and also the interest deductibility. You put those together, and actually that provides a significant tailwind to smaller companies within the market. So that's where we're actually quite constructive right now.
Incredibly counterintuitive if you expect the economy to roll over, to be constructive on small caps. But I get your point about the OBBB and how that could potentially be stimulative. If it's stimulative, how does the Fed cut rates at a time when potentially inflation is going up? Potentially you get some sort of fiscal boost from the one big beautiful bill. And the economy isn't rolling over yet. So there is this idea that you could get this absorption of some of the price increases by the consumer.
I'm not sure about whether the consumer can absorb any more price increases. I mean, do you really want to see your coffee go from $7 here in Manhattan to $8 tomorrow? You know,
I get free coffee.
Fine. Okay, well...
Carry on.
Convo killer, Bramwell. Let the man speak.
About your matcha.
All right, move on. Sorry
Alex, we
about
fully
that.
Understood where you were going. Continue, please.
So someone's going to have to absorb it somewhere. Even if you're getting your free coffee, someone's paying for the coffee. So and so therefore, is it actually the corporate instead? Anyway, the point I'm trying to make is that I think there is an absorption capacity within the economy. We could talk about a slowdown that's not a recession. We could talk about interest rate cuts by the Fed, but we're talking maybe 25, 50 basis points. Is this really going to move the needle off where the base level is right now? And I don't think it's material. So when I think about things like small caps and why I'm constructive on them, that's really driven, again, by the positioning argument. And I really want to hit home on this, because positioning is ultimately what's driven a lot of the market higher over the past couple of months. It's been positioning and it's been earnings upgrades that's largely been driven by the FX component as well. And I think that positioning dynamic is now going to start percolating into other parts of risk.
Alex, I'd love to ask you about what you're talking about, the fiscal tailwind for the one big beautiful bill. Won't that just fade when the economy's confronted with the tariff rates? Don't they cancel each other out?
I think they do eventually. And I think essentially what we're trying to do, Anne-Marie, is trade the sequencing. And I think that's really important. If you take the S&P in 2025, we're up, whatever, 4, 5, 6% or so, that clearly is not telling the picture of what's happened over the course of this year in the first half. And so every month has really been a story in its own way. And I think all we're trying to do is continue that story. Each chapter is about 1 month long at the moment.
Someone else mentioned this. It's about the sequencing. What's next, then, when it comes to policy in Washington?
Well, I still think we're going to get clarity, or hopefully some clarity, on August 1st in terms of those tariffs. But I think what's important is that yesterday, as a case in point, you had a bit of negativity that the letters got sent, but we've still got 3 weeks where we can get deals done. And I think people are forgetting, again, the sequencing there. What is the probability that we're going to get announcements from Switzerland or Europe or whoever it may be? That's going to be positive incrementally for risk. So I think that's an important point.
But there's one cloud, and it's China. Isn't that going to be months and years in the entire Trump administration as they try to get a grand bargain?
Most likely, and I think it's interesting that the rare earth deal was only set for a few months as an example. So yes, we are going to have this issue down the line. I will just highlight one point though in terms of the uncertainty and Trump providing the bumpy ride, as you call it. I think it's important to clarify that between 2017 and 2021, i.e. when Trump was actually in office, he actually oversaw a lower period of the VIX than average going back to 1990. And that includes COVID. If you take out the actual COVID months, basically Q1 and Q2 of 2020, it's dramatic. We're talking 4 or 5 points lower on average in the VIX. So even though Trump may talk a bumpy ride, actually his track record is a lot less volatile than you think.
When did that vol trade blow up? Early 2018?
That was February 2018, yeah.
Did that have anything to do with policy?
No, it had nothing to do with a load of short VIX
There are
positioning.
3 skills that need to change. The first skill is you need to
yes,
learn.
and people still
if you
talk
haven't
about it
used
today
AI already,
there's a
you
lot
are
of like short vol strategies in the market again, but they're different kind of short vol. It's not selling puts, so to speak. It's selling calls, which is a very different prospect in terms of the impact it can have on the market.
Good to see you, sir.
Nice to see you.
Grab a coffee on the way out.
I will. It's free.
Right, good. Alex Salmon of Barclays. I'm told it's really good. Appreciate your time, as always. Let's give you an update on stories elsewhere this morning with your Bloomberg Brief. Joining us now, Lizzie Burden. Hey, Lizzie.
Hey, John. President Trump has delayed imposing higher tariffs on US imports until August 1st, while sending letters to countries detailing the levies they'll face. The letters include 25% tariffs on goods from Japan and South Korea, and plans for more than a dozen other countries. The president also teased the possibility of further talks ahead of the new deadline. And more than 100 people have been confirmed dead in floods that tore through central Texas over the weekend. Local, state and federal officials have faced criticism in the aftermath of the tragedy. Senator Ted Cruz downplayed concerns that President Trump's cuts to the National Weather Service played a role in the failure to evacuate people. And here's one for you, Anne-Marie. The New York Knicks have announced their next head coach. Two-time NBA Coach of the Year Mike Brown is going to be taking over the team coming off its first conference finals appearance in 25 years. Brown is coming from a successful 3-year run in Sacramento that saw the league's longest ever playoff drought come to an end. And that should be my brief, John.
Lizzie, thank you. More from Lizzie in about 30 minutes' time. Up next on the programme, the Morning Calls, plus Stacey Ruscott of Bernstein on tariff whiplash in the chip sector. Live from New York this morning. Good morning.
Going to be the consequence for U.S. markets. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
From the world of politics politics to the world of business. Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
You're still judging Bramo.
No coffee, no TSA pre-check.
Listen, we all have our things.
Everyone's got their things.
Exactly.
I'm sticking up for you today.
Thank you. I appreciate that.
Pretty
I've got a
brutal
lot of
stuff
things.
coming from the other side of the desk.
Yeah, you would go travel with her without TSA pre-check or global entry
I would just
coming
go
in
through on my own. Global entry and let,
story.
you know.
Really,
We
you're
have
sticking
done
with her then.
I think we've done that.
I'll see you later. I'll see you at the
See you
lounge.
later, Bramo. Done that before. I'll do it again. Equity futures on the S&P, positive by 0.1%. On the Nasdaq, up by 1/3. That's the price action. Let's get you some morning calls. First up, Wells Fargo raising its price target on Amazon to $238, saying it's the best setup of the mega cap internet stocks for the second quarter earnings. That stock is up by 1/3%. Your second call from TD Cowen, upgrading Capital One to buy, seeing upside following its purchase of Discover. That stock is up by 0.9%. And finally, KeyBank raising its price target on shares of onsemi to 65, saying tariff-related pull-ins are driving near-term upside. The stock is up by more than 2%. Let's stick with the chip makers. The sector facing potential headwinds after President Trump unveiled 25% tariffs on both Japan and South Korea. Samsung's profit falling for the first time since 23, with the company pointing to US chip curbs weighing on results. Joining us around the table, Mandeep Singh of Bloomberg Intelligence. Mandeep, good morning.
Morning.
How difficult are things getting for this industry?
Well, right now we are seeing 2 pockets. One where things are really booming on the AI data center side, and the other is where tariffs will weigh in terms of the pricing for some of these devices, whether it's an Apple iPhone or a Samsung device. So clearly there is that factor, but there is no doubt that the AI data center wave is what's driving the bulk of the demand and the investments. And that continues to be very strong, irrespective of the tariffs.
How do you factor in the impact of tariffs when you don't know the tariff rate or you don't know the date the tariff rate will take effect?
Well, so a lot of the speculative pull forward, I think, is driven by the uncertainty, and that's been playing out over the last 3 months. So for companies that are looking for more gear that they have to get from China or the countries that may end up paying much higher tariffs, they have been front-loading a lot of this stuff. And I'm sure it's going to keep going until there is certainty, because there is a lot of back and forth when it comes to the tariffs.
Is the uncertainty more about the tariffs when it comes to the semis, or is this really about the potential restrictions and what those are actually going to ultimately look like at a time when we've seen a rollback of some of the initial constraints put on China with respect to semiconductor manufacturing equipment, et cetera? Isn't that the bigger issue?
Well, so when I look at the China exposure for a company like NVIDIA or any of the other chip makers, it has somewhat de-risked, at least for this year. Anything that ends up happening in terms of a deal will be positive news for these companies to be able to sell to China. With that being said, there is always that aspect that what if China really decouples in terms of their chip dependency and, use their own Huawei chips or something else? And what does it do for the market long term? In the case of NVIDIA, it's a 20% revenue exposure. So you completely take out that forever. So that's what I think the administration doesn't want, which is why they backed off from the diffusion rule. And I do think they want the US-based companies to be able to sell to China, because at the end of the day, it is revenue for NVIDIA or AMD or all these chip makers.
Here's a quote for you this morning. Our necks hurts. Liberation Day, on again, off again tariffs, export controls, rates skyrocketing, increases in global conflicts, you name it. When a car rolls over that many times, it's natural to have some whiplash as a result. Joining us now, Stacey Rascon of Bernstein. Stacey, that was your quote. You also said, sleep through the accident, walk away unscathed. Stacey, can we walk away from all of this unscathed in the sector that you cover?
I don't know. The reason we said that is it was just sort of funny when I wrote that note, which was a couple of weeks ago. Given all the volatility and everything that happened, if you'd just gone to sleep on January 1st, you would have been fine. Right? That's kind of what I meant by it. And it's been really amazing to me, amid all of the volatility and everything that's going on, like if you just look at the endpoints, how stable things have actually been. And we'll see if that continues. Again, I don't know. It looks like the news flow and the volatility is starting to pick up again, as you mentioned earlier.
But what you're basically saying is that a lot of these rates can be negotiated away. But at the same time, Stacey, a lot of them can also stick. What happens if they do stick?
Yeah, you bet. So, we got these tariff letters yesterday. And again, it was on Korea and Japan and Thailand and Malaysia and a bunch of other companies. To be fair, most of those rates are effectively what the reciprocal rates were anyways, plus or minus, right? And we're all waiting to see if the reciprocal rates actually get put back on August 1st. So this does sort of feel like a last hammer, to try to maybe get a deal before that deadline happens. So we'll see what happens. I don't know if these rates actually go into play. I don't know how long they stick if they go into play. I don't know if there's any changes. Like we'll have to see what happens. In terms of the actual risk, you asked the question earlier, how do you size this stuff if you don't know what it is? It's very difficult, right? And it's sort of even more complex for semis because most semiconductors don't enter the U.S., by themselves. They enter inside other things like smartphones and PCs and cars and what have you. And so most of the tariff impact that we've been looking at so far has been indirect. It's the end products maybe get more expensive and there's elasticity of demand, and so you have less demand for those, and therefore you may have less demand for semiconductors. And to be fair, it's hard to size. And in the near term, I think I heard earlier, like you're talking about, we've been actually seeing some pull forward, which makes sense given all that uncertainty. Now, there is one area for direct impact that I think we are waiting for, and this is the sectoral tariffs, that the 232 investigation that the Commerce Department put on April 1st. And that may directly impact semiconductors, and the comment period's over. We're waiting for a decision. My suspicion is that those will get put on at some point, and the impact sort of depends, right? I mean, if it's a 25% tariff on semis, that kind of sucks, but we could probably deal with it. Like semiconductor ASPs broadly are up 50% over the last 4 or 5 years anyways. If it's 100% tariff, then like that's a whole other ballgame. Like, and I don't know what that's going to look like until we actually find out. And so that is sort of a headline out there, or a headline risk that I think we're waiting for in the space now.
What's the tariff rate that would actually torpedo the AI trade right now?
Well, it's interesting. So the AI trade, like the AI servers, the way that the tariff structure is currently set, they're actually not as exposed because it turns out most of the AI servers that come into the U.S. come in through Mexico. And they're USMCA compliant, there's no tariffs on them at all. And so to the extent that those supply chains can run through Mexico, that actually preserves things. I also think there is one advantage with the AI is that the demand is actually off the charts. And whereas, for a smartphone, all of a sudden if your iPhone cost doubles, they may sell less of them. If the pricing of AI servers were to go up 20% or whatever, my suspicion is they would still get bought. And so there's a natural, push of demand on the AI side that I think is helping a lot. And then you have this other avenue through the USMCA, that's the U.S. Mexico-Canada agreement, free trade agreement, that helps to at least somewhat insulate them, at least relative to other spaces that have the potential to be hit more by tariffs if the tariffs actually get put into place.
Stacey, you mentioned smartphones. Can we just finish on that? What it means for Qualcomm, a lack of demand there, just what is priced at the moment from your standpoint?
Well, so Qualcomm's very, very cheap, right? And I mean, it's people are worried. We know Apple's going away, and like there's headwinds, and there's no catalyst from that. Now that being said, in my opinion, it's you could argue like even with ex-Apple, I think they're growing EPS double digits, and it's like 14 or 15 times earnings ex-Apples. But if people are waiting for a catalyst, there isn't much for now. But I actually think it's sort of an interesting. It's a good time at least to sort of like sharpen your pencils. 2027 and beyond, when the Apple revenue gets small, it starts to look interesting. So it's 18 months away. In terms of the smartphone demand, and again around tariffs, the U.S. Imports about 10% of the world's smartphones. Half of those are iPhones, and more than half of those are iPhones. So it's really not so much that we import a lot of smartphones, we import a lot of iPhones. And again, Apple started to design their own chips. That revenue is going away from Qualcomm. We already know that. And so the extent that like tariff, higher prices and everything might impact smartphone demand in the U.S., to the extent that it's insulated or isolated more to the Apple side of the equation than the Android, it's actually less fundamentally impactful for Qualcomm over the long term because that business is going away anyways.
Smart. Stacey, appreciate your time. Thanks for making time for us. Enjoyed the note as well in the past few weeks. Stacey Rascon there of Bernstein with the latest on that business. Mentioned Apple at the end there. Mandeep, just quickly, this war for talent, Meta going after Apple. What was your reaction to that story?
Well, Meta right now has the compute, they have the researchers, and they are spending big. When it comes to Apple, they haven't even started investing in their own data centers, so I'm not surprised they're losing talent, because if you're an AI researcher, Meta or OpenAI or Anthropic are the companies you want to work at because they're investing big. They have Apple still has the distribution, but they have clearly underinvested. So I'm not surprised they're losing talent.
And Zuckerberg comes along writing checks with a lot of zeros,
Yeah,
apparently.
tens of millions of dollars, and that's what you think that college interns should aspire to.
Real money.
Oh, yeah.
Yeah. Up next on the program, Michael Reed of RBC Capital Markets on the future for rate cards, plus Yahara Anand with your morning movers, taking a look at a downgrade on an incoming member of the S&P 500.
The countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Jennifer Zabasaja in Cape Town, South Africa, and this is Bloomberg.
David Weston, join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Stocks are positive by 0.1%. The open about 60 minutes away. Just yesterday, snapping a two-day winning streak on the S&P, pulling back from all-time highs with the biggest move lower since mid-June. But based on what we saw at the start of April, this is nothing as we delay the trade decision from April 9th, or rather April 9th on a 90-day pause, to July 9th, from July 9th now to, where are we, August 1st.
Yeah.
Am I up to speed? Just about.
Maybe. Are we up to speed ever? August 1st? Can August 1st become September 4th? And that really is going to be the key question. And then what do we have? A policy of uncertainty.
And a Federal Reserve that is stuck between a rock and a hard place and isn't cutting interest rates anytime soon unless this labour market starts to crack. More data on the labour market later this week. With 60 minutes until that cash open, let's get you some morning movers. We can do that with Yahara Anand. Hey, Yahara.
Hi, John. We start with Datadog, which, as you said, is joining the S&P, but today it is lower 2.6% on a downgrade. Guggenheim slapped it with a rare sell rating, and the reason has to do with OpenAI, which is Datadog's biggest customer. Guggenheim says that OpenAI may be ditching its tools, opting instead for an in-house system, and they say that could cut into revenue in the second half for this company. Next up, we have shares of Circle Internet. They are down 3% after Mizuho initiated coverage on the stablecoin issuer and gave it a sell rating. The firm says that Wall Street's revenue expectations are way too high for the company, citing rate cuts coming and also rising costs from its partners like Coinbase. They are setting an $85 price target on this stock, which is much lower than the current levels. And we end with Tesla, worth taking another look at. It is still up about 1% here in the pre-market after it fell 6.8 yesterday on that news that Elon Musk was forming a new political party. And this is coming as we get a new note from Dan Ives calling this the tipping point for Tesla, saying that the board needs to act now and set the ground rules for Musk. John?
Yahara, thank you. Thanks for this morning. That stock bouncing back by 1%. Let's turn to fixed income and get to the bond market. Yields for 10s and 30-year treasuries climbing to the highest levels in more than a week ahead of new auctions as the June payrolls report pours some cold water on rate cut bets. Joining us now is Ira Jersey of Bloomberg Intelligence. Ira, let's just start with the rate cut bets and deal with the front end of the curve, and then we can deal with some of the supply we might get in the next few weeks. It feels like after the data on Thursday that we were pricing out rate cuts, not pricing them in. At the same time, a lot of economists said the details of that payrolls report were actually quite fragile. So what's the outlook for rate cuts look like from where you stand now?
Yeah, so well, I actually think that we're not going to see any rate cuts until probably the fourth quarter of this year. Just it has to do with data timing mostly, and also the continued fear over how tariffs are going to affect inflation expectations more than anything. But the market certainly has priced out and then now has priced back in a possibility of a September rate cut. So we're still, interestingly, we're still only pricing 50 basis points of rates cuts for this year. It's just a matter of when they start, right? So do they start in September and then the Fed pauses and then goes again in December, or do they go November, December? And that's basically been or I should say late October actually is when the Fed meeting is. So it's the market's kind of worried more about the start of it rather than the magnitude of cuts.
Ira, we've been worried also about the supply, so let's go through some numbers. We get something at the front end today, 3-year notes, $58 billion worth. As we work through the week, 10-year notes, 30-year bonds as well. Ira, I've heard a lot of caution around this story. Lisa's been talking about it continuously for good reason. Have you seen any concern in the actual auctions, though? Any concerns around getting the supply to clear, getting it away?
The June auctions went very well, actually, particularly for the longer end of the yield curve. And I think as we approach that 5% level, we'll see some, on the 30-year bonds, we'll actually see some decent demand there from the liability-driven investors, so things like insurance companies and overseas pension funds. But this tariff situation does have some of is rhyming with what happened in April, and this fear that Asian investors in particular, who are pretty big buyers of the long end of the Treasury curve, might actually start to pull back on the amount that they purchase. And if that's the case, then that's why we watch these auctions to see, do we have demand in the primary market? And I think threes today probably come and go without too much difficulty, but certainly Thursday's 30-year auction will be the one that really will be keenly focused on to see if we do have a lot of what we call indirect demand. So these are demands from investors who bid through third parties. So watch that metric as a key to the strength of demand at that 30-year auction.
Ira Jersey of Bloomberg Intelligence. Ira, thank you, sir. Yields are rising this morning by 4 basis points on a 10 and 30-year. The 30-year about 4.95. Lisa, $22 billion of 30-year bonds coming in 2 days' time.
And it's especially concerning, to Ira's point, the international picture isn't exactly constructive right now. There's a question about international buyers and whether they get demand at home or whether they see opportunity at home. I'm looking right now. If you look at Japanese 30-year bonds, and I know you're thinking, why am I mentioning that? But yields are actually climbing back toward the all-time highs, above 3%, on this fear that Japan might have to borrow more money to plug gaps in the economy from the tariffs, any kind of slowdown. So this is a really interconnected and global story.
It's a global story. Well said. It's certainly not just the US, it's the UK as well. We saw some of that in the last week too. Looking ahead to some economic data later this week as well. Jobless claims coming up in a few days' time. Jobless claims have been okay. They've come back down to 233. The estimate for Thursday is 235. Joining us around the table to discuss the labour market is Michael Reid of RBC. Michael, good morning.
Good morning. Thanks for having me.
Let's talk about the problems and where the problem is. Is it a demand-side issue or a supply-side problem? What is it?
Right now, we see it as a supply-side issue. And that's not to say the demand side is certainly slowing. It is. But what we're looking at is a situation where we have a record number of retirements, and that really has shown up in the data in various ways the past couple of months. And on top of that, you have the immigration inflows that are slowing. So that's really reducing the supply of workers who are available to fill the job openings that we have.
That said, some people say, well, there's almost half the population or 4/10 of the population that's out of work or just permanently unemployed. Why can't they get back into the workforce and just take up some of these jobs that the immigrants are leaving behind?
I mean, that's easier said than done. If you think about who's out of the labor force, there's a lot of reasons. First and foremost, you have folks who've retired, and they're at the point in their lives where they don't want to work anymore. Secondly, you have folks who have various family reasons, whether it's caring for children or a growing number of folks who are citing reasons, growing for their aging parents. So that's another reason why people aren't able to enter or re-enter the labor market. And then lastly, a big bucket of workers, or I should say a big bucket of folks who sometimes are workers but later in life exit the labor force, are really those persons with disabilities.
So if you look at this, I guess that a lot of this is really difficult for people to understand, especially at a time when college graduates are having a hard time getting jobs. You think, okay, people can paint a nice story for why the labor market's actually pretty tight, but it's not showing up in terms of the opportunities that it feels like there are right now. What's the explanation for that?
Yeah, so the way we think about this and what we measure is the matching of college graduates in terms of their degree and the job openings that we see. So if you have folks that are graduating, say, for example, with degrees in business or in engineering, but the job openings that we're seeing are in healthcare, for example, they're not going to be able to be employed in that sector necessarily. They'd have to go back to school and get a degree that aligned with that. So there is a bit of that structural mismatch in terms of the skills. And then on top of that, you have some geographic mismatches, wherein the jobs that are open, you don't have graduates necessarily who live or want to go to that area for various reasons.
What about wages? The Treasury Secretary talks about when you close the border, Americans get higher wages. Are you seeing any evidence of that?
Well, what we're seeing right now is that the cohort that is benefiting the most due to slowing immigration is the folks who don't have a college degree. So really folks who maybe went to high school and are seeing more opportunities as a result in sectors like construction or leisure and hospitality.
So they're coming in and filling these jobs that were formerly filled by immigrants. In that respect, then, are you concerned about the inflationary impact of a wage spike spiral?
So some sectors, yes, there's still very much strong demand. So let's talk about leisure and hospitality for a second. That's a sector that's really being driven by that retiree cohort that I mentioned earlier. Those are the folks who really we think are responsible for a lot of the travel, whether it's airplanes, stays at hotels, dining out, et cetera. So there's very much a strong demand for those services. And we're seeing that there is still wage pressure there. And when you look at kind of that pre-COVID path for hiring in that sector, we're still short where we should have been absent that disruption.
As I hear you describe some of the issues and some of the forces in the labour market right now, they sound more structural than cyclical. Does that lead to a different outcome at the Federal Reserve? How do they approach that issue?
Absolutely, and I think that's what we're trying to figure out right now. So there are some cyclical forces at play, but they're rather muted right now. We are looking for some potential layoffs in trade-related sectors, but we're just not seeing that yet. As you noted, jobless claims are still very low. So now you have to think about kind of that natural rate of unemployment, NAIRU, right? And where that is relative to the unemployment rate now, they're quite close, but should we be thinking about NAIRU perhaps being a bit lower given the conditions that we're looking at? Less immigration and a large retiree cohort. So maybe we're right there. And that begs a question for the Fed, do you want to start cutting now where you think, NAIRU is perhaps right where we are at 4.1%? Do you think NAIRU is perhaps a little bit higher at 4.3? Are they willing to accept a bump in the unemployment rate? So I think that's part of the debate for the Fed. But at the end of the day, when you have a 4.1 unemployment rate, it's really hard to justify interest rate cuts.
This goes back to something we said earlier on in the program. When they get together in September, what they wanted in September was several months of inflation data off the back of a final decision on tariffs. They're not going to get that several months anymore. If we get a tariff on August 1, they'll only have a handful of months. Look, when you look at that situation, Lisa, the only way they can cut interest rates based on the threshold that they've established is if they can no longer stand there and say the economy's solid, we can wait. If they have to say the economy's starting to crack, we can't wait anymore, that's the reason to cut interest rates.
They have to see the unemployment rate go up significantly, and that's not what we're seeing. And frankly, what we just heard from Michael Reed, to me, highlights why we're not seeing that increase in unemployment, even though it seems like companies aren't hiring quite as much. You've got the cyclical changes and you've got the structural changes, and you put them together and you say, what can the Fed do? How does the Fed respond? Well, they can't go out and train people. So how do they sort of use policy to deal with something that is pretty profound?
And still not that well understood at the moment, at least. More jobs data later this week. As I say, initial jobless claims dropping on Thursday morning. Michael Reed there of RBC Capital Markets. Michael, thank you, sir. Appreciate it. Let's give an update on stories elsewhere this morning with your Bloomberg Brief. Here's Lizzie Burden. Hey, Lizzie.
Hi, John. President Trump hosted Israeli Prime Minister Benjamin Netanyahu at the White House last night. The Israeli leader told Trump he'd nominated him for a Nobel Peace Prize. The US is pushing for a ceasefire in Gaza that could end more than 18 months of fighting and see the release of the hostages still held by Hamas. Elsewhere, Apple's top executive in charge of AI models is leaving the company for Meta. Sources telling us here at Bloomberg that Ruoming Pang is joining Meta's new superintelligence team after being offered a package worth tens of millions of dollars a year. And Shein confidentially filed for an IPO in Hong Kong. The Financial Times reporting that the fast fashion retailer sought the China Security Regulatory Commission's approval for its listing. Shein had filed for an IPO in London about 18 months ago, but has been unable to secure regulatory approval. That's your Bloomberg Brief, John.
Lizzie, thank you. Thanks for this morning. Up next on the programme, we'll set you up for the day ahead. Plus, we'll catch up with Amanda Lynham of BlackRock on the risk of being too defensive. That conversation up next, live from New York. You're watching Bloomberg TV.
AI should be for everybody, from leaders to the working on floor. And we can save 90% of time, 50% of workforce. AI is core in centers of change. And therefore, we invest heavily to AI. Actually, we started more than 10 years ago. Because we think the machine in the past helped our hand and legs. Now the machine helps us in brain.
Are you betting all your money in this right now?
When the OpenAI appear, immediately I asked whole corporations study how will you bring generative AI to their job.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens, I'm Matt Miller, the Circuit de la Sarthe in Le Mans, and this is Bloomberg.
Bramo getting absolutely hammered in the commercial break. This continues.
I will get TSA approval. Listen, I don't need to be anyone's charity case. I don't need to get your guest passes
We're
for
going
Claire.
to crowdfund this now.
We're not going to crowdfund my TSA approval. Let's move on.
Chaos this morning. Let's move on. Equities on the S&P just about positive by 0.1%. April 2nd was absolute chaos. April 9th, we've got a 90-day extension. Before we even arrive at July 9th, we've had another extension of 3 weeks. We'll see you again on August 1. Equities positive on the Nasdaq 100 by 0.2%. That's the price action as we count you down to the opening bell. Your trading diary for the week ahead is shaping up as follows. At 11 a.m. Eastern Time, we'll hear from the President of the United States holding a cabinet meeting on a Wednesday, Fed minutes. On Thursday, earnings from Delta Airlines, plus an important round of jobless claims, which retreated just last week, and we'll see if that continues for the weeks ahead. More comments from President Trump expected in a few hours' time then. More letters expected as well. Bloomberg's Tyler Kendall joins us now for the latest. Good morning, Tyler.
Yeah, hey, John, good morning. Well, we're not just waiting on President Trump to speak at 11 a.m. Eastern because he's convening his cabinet, which often means that he goes around the room and he has officials give updates in their particular area of expertise. We are expecting some of those top trade officials that we watch closely to give updates as well, including the Treasury Secretary Scott Bessent, the Commerce Secretary Howard Lutnick, and the USTR Jamison Greer, who we all are understanding have been holding these trade negotiations in recent days ahead of this 3-week extension that we've now been given. We've been talking a lot about those countries that did get letters, like Japan and South Korea, but we are on watch for if any other ones will get letters too, because it's been interesting to hear from sources familiar telling Bloomberg News that some countries actually appear on the cusp of perhaps some framework agreements, including Taiwan, India, and also the European Union, and what's really been a reversal of favor for the trading bloc. But John, people familiar tell us here that ultimately to get some sort of monumental breakthrough in order to announce the agreement, that was going to be very difficult to reach by the original deadline of this Wednesday, July 9th.
Tyler Kendall, thank you. Monitoring the latest down at the White House with the President of the United States. I have to say that's been a surprise for me over the past few months, the fact that Europe's no longer back of the line, that they might just accept the 10% with some exemptions and we move on.
And it was a reversal from Europe as well. They were not willing to at first deal with the 10% across the baseline tariff. They were going to come out and retaliate. It's interesting because basically Europe and Japan have swapped places in terms of where they are in the order and basically the willingness of this administration to do a deal.
That's the situation in Washington. Here's the view on Wall Street this morning. Amanda Lynham of BlackRock writing the following. We expect episodes of macro volatility. We remain attuned to the opportunity cost of being too defensive and under-risked in this environment. Amanda joins us now for more. Amanda, good morning.
Good morning. Thank you for having me.
Great to see you. The risk of being too defensive with stocks at all-time highs and credit spreads near the tights for the year.
Yep.
Explain, please.
So I think in a time like this where there's a lot of uncertainty, often the reflex from investors is to just generically move up in quality. And we've been pushing back against that and basically saying that there's a case for selectively moving down in credit quality. If you look, for example, high yield total returns have outperformed investment grade year to date. Subsets of high yield, including double Bs, have outperformed triple Bs. So I think what the market is telling you is that, yes, we're expecting volatility. There's residual uncertainty. But if you focus on kind of back to basics credit work, companies are navigating this. And we are paying incredibly close attention to the micro level commentary of companies in this environment. And I think what the market is actually seizing on is companies guiding towards 2026 and 2027, outlining all of the operational levers that they can pull to navigate this uncertainty. And I think that's what's giving some comfort. Now, is there a lot of scope for spread tightening? No. But our income, our all-in yields in corporate credit still attractive? Yes. And I think that's really what we're emphasizing.
That's exactly what I wanted to ask you, the idea that spreads are near all-time tights on high-yield bonds. You're not getting compensated in addition to treasuries that much at all relative to history. Why doesn't that worry you?
Well, there is some market segmentation there. So the trade-off between treasuries, yes, the spreads are tight, but back in late 2024, we've characterized that as warranted resilience. So those spread levels, there are a host of reasons, macro, fundamental, technical, why those spreads can remain in that tight range. I think from our perspective, when we talk to investors, they're looking to deploy capital into corporate credit. And so what we're really saying is if you're buying corporate credit, buy it for the income, the carry, the yield, not for the potential total return boost from tighter spreads. And I think really the point we're just trying to make is if you're waiting for a sustained sell-off in credit spreads, we view the bar for that as pretty high.
So it's pretty remarkable that not only is this not April 2nd, but that here we are with yet another trade war brewing and escalate to de-escalate. And not only are people not getting bearish, we've got David Kostin over at Goldman Sachs upgrading his S&P forecast. You've got an upgrade over at Bank of America. And here you are in the credit space at BlackRock saying there's a risk we're not getting risky enough. And that essentially that's what we have to go. Are we just discounting the policy uncertainty entirely? Is that sort of been stripped out of the picture?
We're not discounting it. The title of our third quarter outlook, for example, was two-sided risks. So we're absolutely recognizing that there's still a lot of uncertainty. There are still a lot of potholes that we need to navigate in this environment. What we're saying, however, is that the economy has shown relative resilience. And so taking a complete risk-off posture, in our view, isn't the way to go. In fact, again, going back to the lower-rated pockets of the corporate credit market, they've outperformed. It kind of reminds me of in the early stages of the Fed's rate hiking cycle when rates were being hiked significantly and there was an expectation in Europe and the US that it would lead to an imminent recession. The economy surprised to the upside. I feel like that's a little bit what's happening in the corporate sector, is that it's actually turning out that corporates have a lot of inventory purchases, and so they're actually navigating this. And I think the bottoms-up credit work is signaling that there is a little bit more resilience, I think, than many expected. That does not mean, however, that we are expecting a more challenging growth inflation mix. So that doesn't mean that we aren't expecting some softening in the data from here.
Were you able to get to this point because we saw reversals from this administration when the market pushed back on some of their policy proposals?
I think we got to this point because companies have been a little bit more forthcoming about the options that they have at their disposal. And so when you look at retail earnings, for example, over the last month, some of these retail companies have actually guided towards they can actually offset the full cost of tariffs starting in 2026. Yes, there may be some near-term volatility and some near-term headwind, but I think those sort of concrete details are what's giving investors the comfort to actually do the bottoms-up credit work. That doesn't mean that all these companies are created equal. There will be some winners and losers in this. But I do think it's hard to ignore when companies actually present that full suite of levers.
Do we need Chairman Powell to cut?
I think that's probably more of a boon for the equity market, frankly, than the credit market. I think actually if rates stayed in this regime, that's a pretty supportive technical for corporate credit in terms of all-in yields. There's been some increase in default rates, but by and large, companies have incorporated that higher borrowing cost. So I don't think it's a prerequisite for continued resilience in corporate credit. I think maybe the equity market might be disappointed a little.
We can live with rates in the fours on Fed funds.
Yes, I mean, you've seen some floating rate borrowers default, but those are largely repeat defaulters. So by definition, that should have been priced into the market. I think ideally it would be nice to have some additional normalization cuts, but you know our view, we're not expecting easing. So I think that's really the base case for us.
What you just said there was fascinating, that any kind of rate cuts would help the equity market more than the credit market. Is the credit market now clipping the coupon, all-in yield story, period, full stop. And if rates go down, that will be challenging in terms of justifying why you should purchase credit at these spreads.
I think psychologically there is some hesitation for investors if we would see, for example, high yield all-in yields below 7%, right? That kind of gets some attention. I do think that it's more of why are you buying credit? For carry, for income, for yield, not for the total return boost from tighter spreads or lower rates. That's historically been the driver of total returns, not our real view in this cycle. For sure, it would help fixed rate, long duration product. But I think if you look at the fact pattern of inflation above target, growth holding in, still residual uncertainty, the commentary from the Fed, we're not expecting the first rate cut until the fourth quarter. So really, that's kind of our base case.
We heard that again earlier this hour. Amanda Lynham of BlackRock. Appreciate it. Thank you. Amanda Lynham there on the latest. You mentioned the upgrades from Goldman and Bank of America. I think we should call them what they are. Market to market, just a little bit, right? Both their year-end price targets were below where the market is right now.
They're market to market. It's slightly above where we are right now, at least when you look at Goldman Sachs.
Yeah, 63 and 66 of both of those banks, yeah.
So you could say this is just market to market, but the timing is remarkable. I mean, you have to just say they're coming out with this on the same day that we're reigniting the trade war, maybe, but the market's ignoring it, kicking the can, and it's just sort of notable.
Credit to Chris Harvey of Wells Fargo.
Yeah.
Just stuck with 7K. Never changed his price target.
I thought that was great. By the way, parenting tip, I'm going to start sending letters. If they misbehave, I'm going to send
to the kids.
To the kids.
Stating the same thing, just with an extension.
Exactly.
Do you think the behavior is going to change?
Thank you for attention to this matter. I hope so.
You think they're going to adapt and adjust to
You
that?
have until September 1st to change your behavior.
See how that works out. Or back to school for you, which is where they're going anyway. From New York City, we've got a new deadline. It's August 1st. From New York, good morning.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Was it easy to get the pandas to come back to Washington, D.C.? Did the Chinese say, we have some extra pandas, we don't know what to do with them, we're going to give them to you?
Well, it was a little more difficult than that. It probably took us, it was about over the course of a year where we had conversations with our colleagues in China, and we were able to get pandas here very quickly. I think it's a testament to the relationship we've built over decades, to the conservation success that we've had, here with our pandas and our panda program. And so it was a lot of conversations, but I think we always knew in the end that we did want pandas at the National Zoo.
How many pandas are there in the entire world?
So this is incredible because this is all due to this panda program, and this is so important. So when we started with giant pandas 50 years ago, there were fewer than 1,000 pandas in the world, right? We're talking in the wild and zoos, fewer than 1,000. And decades later, there are close to 2,000 pandas in the wild now. Actually, I think a little over 1,800. There are over 700 pandas in breeding centers. So as part of this program, we have tripled the number of pandas on the planet.
But still a small number of pandas.
Because of this program, there are more pandas on the planet, more quality panda habitat in the wild, and pandas have gone from being endangered to being vulnerable.
I'm Alex Rodriguez. And I'm Jason Kelly. And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road. We're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
A little bit of a dead cat bounce this morning, 30 minutes until the start of the cash trade. I'm Matt Miller.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
He's open to talks. President Trump signs a wave of threatening letters to trading partners, but delays what is now a soft tariff deadline of August 1st. Plus, Wall Street is trying to keep up with the twists and turns of Trump's tariffs, and Goldman Sachs is raising its S&P target for the second time since May. And on the corporate front, Apple's AI efforts, already fairly poor, take another blow as the tech talent war heats up in Silicon Valley. Katie, what are you looking at?
I'm looking at that stock, and there's not too much to say. It's up about 0.1% right now. Of course, as Matt just said, it lost its top AI modeling executive to Meta in a setback for Apple's AI ambitions. Meta has been on a hiring spree, an acqui-hiring spree, to accomplish artificial super intelligence, which sounds even scarier than just artificial intelligence.
Yeah, it's going to kill us, definitely, sooner than climate change. Renewable energy stocks, speaking of, like Enphase and First Solar, are falling after President Trump called for new rules that would restrict access to tax incentives for solar or wind projects that already had been pared back by his budget bill. You can see these shares getting, well, in some cases, absolutely crushed, down 6% for First Solar. Katie?
We'll talk about all that and more, but let's get back to trade, because President Trump revealing a wave of letters threatening key trading partners such as Japan and South Korea with high tariff rates. The president pushing off those increased duties until at least August 1st, and he says he's open to negotiations.
Well, I would say firm, but not 100% firm. If they call up and they say, would like to do something a different way, we're going to be open to that. But essentially, that's the way it is right now.
For more, we are joined by Bloomberg Washington correspondent Tyler Kendall. And so firm, but not too firm is the deadline. What are we expected to take from this? Is it a negotiating tactic?
Yeah, hey, Matt. Well, perhaps the administration could think that way. We know that one of the reasons why they sent out these letters to begin with, according to the Treasury Secretary, was to apply maximum pressure. They were hoping to light a fire under these trading partners to put their best offer on the table. But when we look at the rates that were actually proposed in these letters, they're not really, they're marginally different from what we saw on April 2nd. For example, some are a little bit higher. Japan, in one instance, is seeing a boost by only 1 percentage point, and many of these countries are actually facing the same rates that they were threatened before, like South Korea, South Africa, Indonesia, for example, although probably worth mentioning that some actually did see some lower tariff rates like Laos and Cambodia, the latter of which saw the biggest drop from 49 to 36%. I think what we can take from this is that President Trump has framed these initial letters, these initial countries, as the trading partners that the U.S. at the moment are the most frustrated with when it comes to negotiating. And perhaps that could inform how the White House looks at these negotiations going forward. You heard President Trump there saying August 1st is firm, but not firm, signaling that he's open to negotiating and that ultimately these tariff rates could change moving forward. One thing's for sure, this is all pretty fluid, Matt and Katie.
And it seems like there's just a laundry list of deals and countries that need to be negotiated. But for a lot of investors, Tyler, what really matters is the relationship with China, that crucial trading relationship. What is this current state of play?
Right. So the Treasury Secretary, Scott Bessent, Katie, has indicated that he will be meeting with his counterpart in coming weeks. We know the U.S. still has been raising concerns about those export licenses when it comes to critical minerals, which really was seen as sort of the linchpin in keeping these negotiations moving forward. And what's been particularly interesting about this round of letters, these tariffs, of course, separate from the negotiations with China, are the countries that got some of these letters and were prioritized, like Japan and South Korea, which we know the U.S. had been prioritizing prioritizing for certain reasons, including the strategic ones, when it does come to countering China moving forward. Of course, these are sort of on separate tracks because the China negotiations are just totally different. But it has been interesting to see the White House try to light the pressure, light the fire under some of these Asian economies that we really haven't seen much movement when it comes to a deal.
Absolutely. It'll be fascinating to see how that shakes out. That is Bloomberg's Tyler Kendall with the latest on trade. But let's turn to equities right now, because clean energy stocks, like Matt highlighted, falling today after the president called for new rules that would cut access to incentives for solar and wind products. Joining us now is Bloomberg's energy and climate change reporter, Will Mathis. And Will, it's interesting to see these big drawdowns in some of these names, because we had a pretty good week in the sector last week, at least when it comes to their share performance. What exactly has changed?
Well, the Trump administration has clarified that there could be some additional restrictions on the eligibility for tax credits, which were already pared back by the big beautiful bill. And there was a bit of a jump last week, but that was kind of a jump based on avoiding the worst case scenario, that an earlier draft of the Senate bill looked really bleak for the sector, and what passed ended up being not as bad, but it's still much more negative than it was this time last year before Trump came in.
Do you get any pushback from, we're going to talk a lot about Texas today. We have Ari Rastegar on, a real estate mogul out of Austin. And I think of Texas as the biggest state in the country for wind and solar. Are they getting any pushback from these, red states that also have huge business in renewables?
I think so far, Trump has been very effective at getting the Congress to line up behind him. What I think we'll see what that pushback will look like is when or if this starts to affect power prices, because, like renewables or not, they are quickest to build in many cases. It takes a long time to permit and develop a new power plant. If you want to build a new gas plant instead of a wind farm, it's going to take years to buy a turbine. And so if you have rising demand, like you're seeing, especially in a place like Texas, like you said, with AI demand and air conditioning demand with these hot summers, you need more supply. And if you don't get that supply that was going to come in, you're going to see prices go up. And if prices go up, that's when people, regardless of their political parties, start to complain.
All right, Will, thanks very much. Will Mathis there covers renewables for us at Bloomberg. Turning to the AI talent war in Silicon Valley, Apple's top executive in charge of artificial intelligence models is leaving for work at Meta. It's another setback in Apple's struggling AI efforts. Bloomberg Tech co-host Caroline Hyde joins us to explain. So, Caroline, we know that Mark Zuckerberg is paying tens of millions, if not $100 million to get the best AI minds in the country. Now he's taking from Apple, which already has issues.
It has issues. It has morale issues, particularly in the Apple Foundation model department, which the current exodus seems to be coming from. This isn't going to be the only executive. This is the leader at the moment. So Roming Pang led about 100 people in the Apple Foundation's models team. He's a distinguished engineer. If you're a key AI researcher, if you're a key engineer, where do you want to go? You want to go where they're paying you the big bucks, but they're spending the big bucks to win a super intelligence. That's where you want to take your talent. At the moment, you're looking at Apple and thinking, sorry, you're not even perhaps depending on the models that I'm building for you. You're looking outside to third parties like Anthropic or like OpenAI. Morale is pretty low. They've already lost some talent. This could just be the start of the marching that goes from Apple to places like Meta, which are spending and luring the top talent right now.
Well, you touched on what I've been wondering about, which is how this folds into the news of last week, that Apple is basically looking at outside AI to build that new version of Siri. And it makes sense to, I guess, pile that on to what we're seeing now when you talk about morale.
Yeah, there's peaks and troughs, right? So when you look back to WWDC, we did actually see a little glimmer of the fact that these foundational models that the Apple team have been working on, AFM team have been working on, did start to get opened up to third-party developers. You're going to build your apps on there. There was a feeling of enthusiasm for that. However, you then think, okay, what actually thus far does Apple Intelligence do that's built in-house? Maybe translates the odd text, maybe translates the odd email. But really, they depend on partners to do the bulk of image generation, image analysis,
And therefore, even their coding, Xcode that was being opened up, that's dependent on Anthropic and other particular rivals. So what really is being done in-house isn't much. And no wonder we're therefore starting to see some of the top talent wanting to get paid more, because we know that Apple doesn't pay the most over there, and indeed wants to go to a team that feels full of enthusiasm to be on the winning side and join the likes of Alexander Wang from Scale AI, to join the likes of people who have founded GitHub and be that sort of source. So I think we could see not just one, but many start to leapfrog. And I think this is a tale of two halves. You want to go to a winning team, you want to go to where they're spending money. Mark Zuckerberg is having lunch with these people. He's inviting them over to Tahoe, his personal house. You're going to get an ego boost when back at home at Apple, your ego is really diminished and you're seeing some of the AI heads lose their control of their remit.
Right, if you're in this unit. I mean, I'm looking at the screen time on my iPhone, right?
Yeah.
I spend 4 hours and 46 minutes a day.
That's pretty good, actually.
On this phone, but if I look at the breakdown in apps, Bloomberg obviously the most, then Chrome, then ChatGPT. I mean, Apple doesn't necessarily need to be one of the apps I spend my time on, as long as I'm doing it on this device, right?
Precisely, and I think that's always been the argument. They don't need to spend gratuitous amounts of billions of dollars building their own large language models, paying up for data centers, if basically they can be the home for all these services. But then what does Apple become? Apple becomes a longer term, revenue generator, but maybe not the innovator. And where do top talent want to work? Innovation hubs. And I think that's where the pull and the push is going to come. What ultimately is Apple going to become? Are they ultimately going to rely on third parties? They should make that decision sooner rather than later.
Absolutely. That's the question that investors are asking. I do want to briefly talk about Meta before we let you go. What exactly is super intelligence? What exactly are they trying to build with these acqui-hires that they're spending gobs and gobs of money on?
Well, they're the one key company that we now dub a hyperscaler in terms of they're building their own data centers, they're getting their own compute, that are able to really monetize. Basically, the ad services have become so much better, far more efficient. They're driving revenue. And I think Mark Zuckerberg is starting to realize that, okay, if we're going to go all in on AI, if it's going to be a winning formula for my company, I need to win at superintelligence. Whether or not, I mean, if you hear Sam Altman and some at Brad Lightcap talk about it, they don't really know why Mark wants to lead superintelligence, but many would just say you can't come second. If you're going to build the underlying technology that is as good as a human across the remit, whether it's coding, whether it's building advertising imagery, whether it's becoming a productivity hub. Look, we've seen what Facebook did in its prior iterations. It wanted to be the place where you brought work. It wanted to be the place where you were socializing, but also doing your enterprise.
Where you go, right? I'm going to the Bloomberg, I'm going to Chrome, I'm going to ChatGPT. I'm not going to Facebook, right? I'm not 75. So,
but what about
you
Instagram?
going to Instagram?
Yeah.
Exactly.
Because that's got, and what about Meta AI? Remember, they recently pulled out and have an individual app now, which is meant to rival ChatGPT. So I think Mark Zuckerberg's got his eye on a much bigger prize here that isn't just going to be your social networking and your advertising. It's going to be all things to all men when it comes to AI.
Well, I can't wait to see what exactly is built. Caroline, great roundup. As always, that is Bloomberg Tech's Caroline Hyde. You can catch her at 11 a.m. But let's take a look at this market right now. A little bit of a lift, but I stress a little bit, especially when you consider the drop that we saw in the S&P 500, in the NASDAQ 100 yesterday. Seeing this bounce back now as price targets are raised for the big index. Coming from Bank of America just in the past couple minutes, they just raised their price target to 6,300 for year end from 5,600. That follows that upgrade that we saw from Goldman Sachs this morning, the team led by David Kostin, also bumping up their year end price target. So there's some optimism creeping into this market.
Yeah, no, I mean, we're already at all-time highs, so it's pretty optimistic now.
But when it comes to the sell side community, it feels like it always takes a little bit of time to get on board.
Yeah, no, absolutely, and we're starting to see more. I think as you get the certainty of the big, beautiful bill, as we start to get certainty from tariffs.
Do we start to get certainty?
Eventually, you'll start to see more price targets raised. Coming up, Goldman Sachs, as Katie just mentioned, also boosted its S&P target. And Deutsche Bank calculates the tariff impact on earnings. Are tariffs going to eat into margins? We'll discuss all that and more with Emily Rowland of Man U Life, John Hancock. This is Open Interest.
of investment agreements.
Deals were once again on display.
The Saudis are open for business.
The cessation of sanctions against Syria.
Another big victory for the Crown Prince. Concerned that not enough guardrails may be set up just yet.
Headline after headline. Trust Bloomberg for on-the-ground coverage.
The numbers will be quite substantial.
Up-to-the-minute reporting.
Driven the price of oil down.
And the analysis you need.
He's basically going to vault this region into the same sort of sphere as the US and China.
No one covers geopolitics like Bloomberg.
Bloomberg launches our inaugural 25 African Startups to Watch list.
About 2.5 years ago, we created a solution. We are able to generate refrigeration using the sun and water. We're able to store energy in the form of ice, as opposed to storing energy in the form of lithium batteries. We're integrated in every refrigerator, a pay-as-you-go technology, allowing individuals and small businesses to be able to pay as low as $10 to own a refrigerator.
Uncover is a women's wellness brand that is specifically made for women of color. It's based in Africa, which is the most underserved beauty market in the world. We are making Africa a priority and not an afterthought. We believe that the population on this continent deserves to be formulated for, heard, and we are giving this consumer a voice.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Let's get now to high interest. Look what's making headlines around the world. Amazon's Prime Day kicks off today. The retail event being impacted by President Trump's trade war as some brands opt out of the sale and shoppers plan to pull back on spending because of tariffs. Prime Day lasts for 4 days, so it should really be called Prime Days. Robinhood CEO Vlad Tenev said the firm is in talks with regulators over its offering of tokenized equities in Europe. Last week, Robinhood announced retail investors using its app in the EU could start trading tokens that represent shares of U.S. equities on the blockchain. That move drew criticism from companies like OpenAI, which is weird. More than 100 people have been confirmed dead in floods that tore through central Texas over the weekend. The news marks a grim milestone as searchers use boats, dogs, and drones to locate victims. 10 children and 1 counselor from the Mystic Girls Summer Camp remain missing. We'll continue to update you with any developments on this tragic story.
To Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome back to Open Interest. There were some new strategy notes out this morning that show the impact that tariffs may have on coming quarters. You have Deutsche Bank strategists expecting tariffs to reduce earnings by 2 percentage points for second quarter S&P 500 earnings growth. Meanwhile, you have Goldman Sachs raising its 12-month target for the S&P 500 to 6,900. That would be a gain of 11% after factoring earlier and deeper Fed easing. Bloomberg's equities reporter JP Barnard has the details. And JP, I want to start with the Goldman note because, okay, they raised their target. This is the 4th time this year that Goldman has raised their S&P 500 target. And I think that really speaks to how when it comes to analysts, when it comes to investors, when it comes to news anchors, we're just trying to figure out the narrative here.
Yeah, absolutely. And that was a problem basically over the past 3 months because nobody really knew, like, okay, the wobbles of April, how are they going to affect the consumer, the corporate earnings, the corporate margins, the overall economy, what's going to happen. And I believe now at this point, we have a much clearer picture as that the consensus is building that we are going to see a little bit of an impact on corporate margins. And there is a consensus that the earnings season is probably not going to be as good as the previous ones, but it's not going to be like terrible. And then on the other hand, like your macro picture is still like pretty good. I mean, inflation is still all right. I mean, maybe it goes up a little bit when we get these tariff impacts, but not dramatically. The job market is still doing all right. And so there's a sense of that investors are willing to look through the short-term noise maybe, but that the overall picture remains one of being bullish and being healthy. Positioning is also not extended. The market is not like super rich, maybe a little bit hot in the rally. But I mean, like bottom line is there are a lot of reasons to be optimistic here right now, and so I believe many people who stayed cautious over the past 3 months don't have another choice than just like acknowledge that fact and reflect that in targets and estimates.
JP, how different does this market feel than early April? I mean, we thought tariffs were going to result in empty shelves and prices so high that consumers are facing starvation, like potentially world wars, and it looks not so bad, does it?
Yeah, absolutely. I believe like the narrative that we had for a very short term in April where everybody was like, okay, we're going to get like a probably deep recession and a total breakup of global supply chains and global trade, that narrative lived up for just a couple of days, I would argue. And now we are in a much more moderate universe where we feel like, okay, the world is going to move on from tariffs. Okay, the overall tariff percentage will going to be higher, and that is going to be kind of a tax thing for everybody, but it's not something that is going to derail the overall economy. It's not going to derail the consumer at this point. And I mean, like, there's always a chance that Donald Trump is doing another step, and we saw this over the weekend, that headline risk is not fully fading at this point. But I believe everybody has understood now his tactics, his way of maneuvering through the whole thing, and that we are not getting this worst case scenario.
All right, JP, it certainly seems like that is the way the wind is blowing. Really appreciate your time. That is Bloomberg Equities reporter JP Barnett. And let's keep this conversation going now with Manulife John Hancock co-chief investment strategist Emily Rowland. Emily, it's great to have you with us. So we talked about the Goldman call. You also have Bank of America bumping up their price target as well. And I was just listening to Bloomberg Surveillance. You had Amanda Lyman on from BlackRock saying that there's a risk here of being too defensive. And I'm curious if you also see the fog clearing to such an extent.
You know, we do, Katie. You know, there's a lot of things going right today. You look at things from a technical perspective. Of course, we've got new all-time highs in the S&P 500. We've got sentiment that's gone from deeply negative to positive, but probably still has some room to run here. We've got a broadening out of market participation with financials and industrials getting in on the game. And then from a more fundamental perspective, the U.S. economy is doing fine. JP just talked about the labor market. The last few reads we've gotten on that, from initial claims to non-farm payrolls here, have been pretty solid. Corporate earnings growth, analysts are penciling in 5% this quarter. It might not be the 13% that we got last quarter, but still on solid footing there. Corporate default rates are low. You know, we think really the only challenge here is that there's very little risk being priced into markets. That's probably the biggest risk right now. The S&P 500 is trading at 22.3 times forward earnings. That's close to the 10-year high. Corporate spreads are narrowing in on 268 basis points. That's incredibly tight, near 10-year tights. So we're just at a tough starting point for markets, but certainly a lot of things going right, but it is reflected in the price.
What about opportunity, Emily? I have a trader who always writes in about deregulation. Is that something that no one is really looking at?
Yeah, certainly. I think there's deregulatory moves going on in the background that are going to be accretive to corporate earnings. I think also the certain components of the big, beautiful bill, full expensing of CapEx should result in an acceleration in CapEx spending. That's also going to be a positive for corporate earnings. So there are things going on that should definitely support corporate earnings. I don't want to paint the most amazing picture out there because we have seen record profit growth, and we are starting to see some pressure on corporate margins as the cost of capital remains elevated and revenue growth starts to come down. So it's about identifying those companies that can do a better job.
Emily, we got to leave it there.
Margins.
We will be right back at the opening bell with Emily Rowland. Don't go anywhere. This is Bloomberg.
Davos, you were asking a question of President Trump, and he didn't quite answer the question, and he asked you a question. So the question he asked you was something like, why are you not banking certain groups? What is the answer? I don't think he gave you a chance to really answer that question, but what is the answer to that question?
Well, first off, the Bank of America has 70 million consumer customers and millions of small businesses all over the country, all over the world. And so we bank everybody. But the real question was about overregulation, frankly. And so as you look, what's happened is because the interpretations of AML, anti-money laundering, BSA, Bank Secrecy Act, KYC, know your customer, know your customer's customer. You know, there's a lot of burden upon the banking system to both report suspicious activity reports and do a lot of analysis. And we have to close accounts, so we can't tell people why we did it. And often we're told by authorities to close accounts. That creates confusion. Another area comes up in this discussion is in the crypto area where the regulator said you can't bank crypto operating companies, employees of crypto companies, et cetera. We are allowed to do, we bank everybody, but the operating company, they said that's a high-risk activity. Ask us for authority, and guess what? You would have never gotten the authority. So that came up as an issue. So at the end of the day, it's about getting these regulations right.
Key investors, top executives, global innovators.
Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onim, only on Bloomberg.
Bringing you up-to-the-minute tech news whenever and wherever it happens. I'm Ed Ludlow in Las Vegas, and this is Bloomberg.
Moments away from the start of trading, this is Bloomberg Open Interest. I'm Matt Miller. We're looking at futures that are doing not a lot on the S&P. We had a pretty decent sized drop yesterday, but from record highs. So we're in wait and see mode, a lot of traders will tell you, when it comes to tariffs. You can see the NASDAQ futures up 0.2, Russell futures up 4. So maybe more on the positive side. You hear the opening bell. At the New York Stock Exchange, you've got Core Civic ringing the opening bell. I think it's like they run prisons. So when Donald Trump was elected, the stock basically tripled, right, overnight. Down at the NASDAQ, Natera, NTRA, they're up 227% over the past 5 years. So they've had a pretty good run. In terms of the stocks that we're watching, Apple is front and center, but not really moving too much.
Not moving, but I promise it's interesting if you take a look at the details. We're watching Apple because it's lost its top AI modeling executive to Meta in a setback for Apple's AI ambitions, which has already seen plenty of setbacks. Remember that Meta has been on an acqui-hire spree to accomplish artificial super intelligence. Apple shares can't really decide what to do. They were down, now they're up, but we know that they've been a big underperformer so far in 2025.
Yeah, also watching in terms of stocks that are moving, renewable energy companies. You can see here Enphase is down 5%, Nextera down 2%, First Solar down 3%, after President Trump called for new rules that would restrict access to tax incentives for solar or wind projects that already had been pared back by his one big, beautiful bill. All right, that's a roundup of some of the stocks we're watching. At the top, we're going to continue to bring you movers as this market gets trading. Right now, we're back with Manulife, John Hancock, co-chief investment strategist, Emily Rowland. And Emily, we're kind of in wait and see mode when it comes to tariffs, right? We thought July 9th would be the deadline. Then we were told maybe August 1st, and Trump said that's not too firm. So how do you invest around this kind of uncertainty?
Yeah, Matt, we always try our best to minimize political and geopolitical inputs in our investment process because they're just so difficult to handicap here. You know, it's really easy to have analysis paralysis if you're trying to digest all the news around the big, beautiful bill and around tariffs. What we're hoping here is that investors can move on to away from politics and towards profits. And we'll be able to do that next week with the start of earnings season with the big banks. It kind of reminds us of, I don't know if you remember that famous Bill Belichick interview about 10 years ago. They had lost to the Chiefs. He's in the press conference and he just keeps saying, we're on to Cincinnati. We're on to Cincinnati. We're on to Cincinnati. And that's kind of what we're thinking about as it relates to earnings season here, and analysts are penciling in 5% earnings growth for the S&P 500. We are looking at opportunities to see companies that can maintain margins in a more challenging environment here. Quality leadership coming back as we enter the back half of the year. Momentum and technicals have really sort of driven cross-asset leadership, and we think those high-quality stocks that can produce solid earnings results have the ability to see some price appreciation into earnings season.
So numbers aside, when it comes to the upcoming earnings season, we were having a great conversation with Lori Calvasina yesterday, and she made the point that we need to see more guidance. These companies have had 3 months to figure things out. And you think about the narrative from last earnings season, it was that basically companies didn't know what was going to happen. No one did. This time around, what are you expecting when it comes to the guides and the conversations that we'll get on earnings calls?
Yeah, I think there's still some, question about how tariffs are going to impact some of these companies. But you're right, it was amazing last earnings season, you saw companies giving 2 sets of guidance, scrapping guidance altogether. So hopefully we should have a little bit more of a robust set of information from corporate leaders this quarter. But what we're watching more specifically is just sort of how depressed, the returns have been in the United States versus Europe. So you look at analysts penciling in about negative 5% growth for MSCI EFA earnings. And meanwhile, they're looking at, mid-single digit returns in the U.S. European markets have far outpaced their U.S. counterparts, even with negative earnings growth. A lot of that has been driven by the weaker dollar. I think that's going to be another important conversation in the earnings season that's upcoming here about how currency dynamics have impacted profits. But we think that there can be a comeback here, given those better economic and relative earnings trends in the United States that have really been discounted versus European counterparts.
So do you sell Europe short and use that cash to buy the U.S.? I mean, what a pair trade.
I know we would be fading gains in some of those areas of the market. You look at things like European financials up 20+% this year, and their earnings have been negative 8%. To us, this has been a big shift in sentiment. It's sell everything America, whether it's stocks, whether it's dollars, whether it's bonds. We've seen huge capital flows into Europe. We still have international stocks in our recommendations, but it has been a relative underweight. I know that's very out of consensus now, but we're digging into that given better relative economic and earnings trends in the United States.
Absolutely. Nice to hear a contrarian there. I want to go back to something that I mentioned in the previous block, and that was that comment from Amanda Lynham over at BlackRock. She was talking specifically about credit, but she said there's a real risk here of being too defensive, that there's a risk of being too in love with those high-quality names. Again, that was in the context of fixed income, but do you think that you could apply that logic to the equity market as well, that maybe you should be looking at maybe more of those growthier companies right now?
Yeah, Katie, I listened to that interview. I thought it was great. And we do like growth. We've been overweight U.S. large cap growth stocks for years now. The challenge, of course, is the valuations. The S&P 500 growth index is trading at almost a 50% premium to its 20-year average. We're still there. Because we think that the earnings can deliver, but we have to protect against that valuation risk by owning some things that are on sale. We've been looking really closely at stocks that have superior return on equity, so great measure of shareholder profitability there, and marrying that with parts of the market that have solid PEG ratios. We can only talk about these things on Bloomberg, of course. Everybody's got their CFA textbooks out, right? So that's PE divided by earnings growth. It's a measure of how much you're paying for future earnings growth, because we don't want to overpay. So it's bringing us to sector overweights in areas like technology and comm services, but also more defensive parts of the market like healthcare and utilities. It's really that intersection between quality and valuation, cheaper valuation, that's going to, I think, create the playbook that you want for the remainder of the year.
I look, Emily, at INGO all the time, the Bloomberg Index browser, and year-to-date returns are just down the line strong in fixed income, but especially in things like EM and high yield. Are those opportunities fading, or do you think there's still legs there?
Still legs, as long as default rates stay low and the economy stays on solid footing, which is what we're seeing right now. It's not much of a, we do think there's some opportunities there. The challenge, again, is the starting point where you're near 10-year tights on corporate credit. We've been neutral on the space because our view has been quite constructive on the economy and on the health of corporations here. But if you look to high quality bonds, they aren't kind of priced for perfection the way equities and credit are. In fact, we don't think bonds are sniffing out the disinflationary trends that we're seeing across housing and shelter, which is a key measure as it relates to inflation. There's so much myopic focus on the potential inflationary impact of tariffs on the good side of our economy, but we have to remember that that's a much smaller part of our economy. In fact, services is much more significant, shelter and housing being the biggest component of services. And there's a lot of things changing on the housing front. Supply is coming online. We have the most supply since 2020. Demand is slowing in the face of unaffordability and untenable insurance costs. So home prices are actually starting to roll over, that we think has a massive influence on disinflation and potentially the ability to counteract any potential goods inflation. The bond market's not sniffing that out. Yields are still elevated. We would take advantage of those elevated yields, lock in income for clients, get that cash off the sidelines, and create an income stream that can last for years.
Yeah, encouraging people to move out of cash. It's been a difficult climb to get them to do that. Yeah. Emily, it's great to speak with you. Hope to do it again soon. That is Manulife John Hancock's Emily Rowland. Let's get a check on this broader equity market right now. You can see we're just about unchanged when it comes to the S&P 500. We're still pretty dang close to all-time highs when it comes to your big benchmark, even with that decline that we saw yesterday. When it comes to the split of how the single stocks are doing right now, it's almost even. You have 268 names in the green, 232 in the red right now. You look at what's leading, you have a lot of big tech up here. NVIDIA, Oracle, Broadcom, Tesla, Meta, the list goes on. For some of these names, this is just a bounce back from what we saw yesterday, but still a positive contribution. But then you look at what isn't doing too hot. Apple, actually, those losses accelerating right now. We know that they lost one of their key executives in AI to Meta. Shares down about 0.7%. JP Morgan also a sizable bump down there, almost 2%. This is what you're going to see on the sector level as well. Because you do have that bounce back in some of the big names, you have energy, healthcare, materials, and then tech up at the top. On a points basis, that's actually your biggest contributor right now, which probably speaks to how contained this movement is in the benchmark. But then you go to the bottom, you have financials, consumer staples, and utilities down at the bottom by 1.4%. We know that this has been one of the hot spots of this market, Matt Miller.
Yeah, very interesting to see consumer staples and utilities down there at the bottom, healthcare and materials up at the top. So those defensive sectors kind of split. That's what I obviously always look for. Coming up, we're going to talk about Apple losing its top AI model engineer to Meta in a potential setback for the iPhone maker's push into artificial intelligence. But is it really, if Apple has decided on partnerships as the way forward? We'll talk to Mandeep Singh about that next. This is Open Interest.
As Bloomberg's global financial correspondent, I get to meet the people shaping the way money flows around the world. And I want to bring you with me.
Now we're playing. Yep, now we're playing. First and foremost, I am a capitalist. The capitalist system is the best system in the world. There isn't another one that works as well.
Citigroup moves $4 trillion a day.
5.
Wall Street used to be a place.
I love all these new Wall Streets. Y'all Street, Wall Street South.
Now it's more of an idea.
The optimism here is infectious.
You think our New Yorkers are negative?
Yes.
Anything that trains people to understand probabilities and just think through things with a greater degree of nuance is a service to humanity.
I hope you survived the day.
I did. It was a busy day.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning.
This is Bloomberg Surveillance.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Welcome back to Open Interest. It's time now for our top calls. Some of the analyst action in focus this morning. And first up, Datadog is getting downgraded to a sell over at Guggenheim as OpenAI, which is Datadog's largest customer, starts to build its own monitoring system. That's good for a 4.3% decline. Next up, we have Wall Street weighing in on CoreWeave's all-stock acquisition of Core Scientific, and it's not positive. Both Stifel and Mizuho are downgrading the stock, citing near-term overhangs. It's still up almost 300% since its IPO, but down about 2.5% today. And finally, we have Capital One getting upgraded to a buy over at TD Cowen. The firm sees upside after its purchase of Discover and sees potential for significant buybacks in the future, Matt.
All right, so buy there for Capital One. Let's get to Apple. The top executive there in charge of artificial intelligence models is no longer working for Apple. He's leaving for Meta. It's another setback in Apple's struggling AI efforts, or is it? Bloomberg Intelligence Global Head of Technology Research, Mandeep Singh, is here. Mandeep, I've been struggling with this all day because I use this device constantly, right? Or my iPad or my Mac at home. But I don't use any Apple apps on those things, except for messages and music, right? I'm using Google's Chrome. I'm using Bloomberg. I'm using ChatGPT. So why does it matter if the top AI guy left, since they're going to use those other partners anyway to generate revenue?
So, I mean, when I look at Apple, traditionally they have develop their own ecosystem, whether it's their operating system, their own chips. They have optimized for performance. And you're right, for certain cases, apps, you know, from Google serve better when it comes to traditional search.
They don't go into search, right?
But with that being said, I think AI is that sort of technology that it will impact them in terms of, you know, providing a better voice assistant when it comes to Siri, or even, you know, scheduling the calendar. So Apple does have a calendar app. Well, what about scheduling the calendar through the AI that's on the phone? And that's where, you know, having an AI play does matter. I mean, you talked about ChatGPT. The usage of ChatGPT app is growing to almost 30 minutes per daily active user.
I use it 54 minutes a day.
So
just this entire hour.
And imagine if that type of AI was on the phone, where you could trust the AI, was focused on, you know, protecting your data, it didn't really offload it to cloud, then you will end up using it. So it is about the future, and that's what everyone is betting on. I mean, to me, both Meta and Apple are lagging behind in AI, but what Meta has done is really gone big in the last couple of months in terms of acquiring talent and paying up. And you can only do it when you're a founder-led company with all the voting rights that you don't care. You just want the top 50 researchers on your platform.
Well, why doesn't Apple pay up? Apple has a famous amount of cash on hand. They have so much money. Why don't they just go out and buy something if they're so behind in AI?
Well, so it's about capital allocation, and what Apple has done traditionally is, out of the $100+ billion in free cash flow they generate every year, they buy back their stock. They have done a lot of acquisitions, but those are more tuck-ins. They've always been about getting people, and that's what I think Meta is preempting here, is they're going big in making sure the top 50 AI researchers are working for Meta, and they're really bidding up. I mean, when I look at, you know, acquisitions, CoreWeave paying $9 billion, that's almost, you know, $30 million per employee, because the company they bought is a 300 people company.
Yeah.
So from that perspective, right now we are in an environment where AI researchers are really getting bid up, and it shows up.
When it comes to Apple, I mean, they're also extremely conservative when it comes to M&A. I was reading a Mark Gurman piece that pointed out that their biggest ever purchase was Beats. In 2014, that was $3 billion. And in their entire history, they've only made 3 transactions more than $1 billion.
Yeah, it's a great point. They just don't spend. They have a ton of cash. They don't spend it on acquisitions. I was given an article by Mac Rumors on the iPhone 17. It's rumored to be coming out in a different color than you've ever seen before. And I'm wondering if is that what they hope is going to drive the next iPhone purchase cycle? Blue?
At the WWDC, they showed the liquid glass display, so that's a big change in the look and feel. But
yeah,
look,
but not enough to make me buy a new phone, right?
And that's where the AI element comes into play as well. So look, AI will still be predominantly on the cloud. I think on-device AI hasn't really taken off just because of the size of these models. They require a lot of memory, so you can't, load up a large language model on your phone. You need a distilled version. And that's where there are challenges in terms of doing things on device, but Apple still owns the distribution. When it comes to the ecosystem they have, whether it's through partnerships or their own AI efforts, they will figure out a way. It's very easy to think, oh, they're losing traction. They're just prudent about how they go about things, but clearly they have underinvested in AI, and they'll have to fix it either through acquisitions or some big alliance, whether it's with OpenAI or Anthropic or Google. They just have to find that way.
Well, for those keeping track at home, Apple shares now down about 16% year to date. Mandeep Singh of Bloomberg Intelligence.
$3.1 trillion company.
Yeah, it's
still
really
worth almost
big.
twice as much as Facebook.
They're really big and they have a lot of money, and maybe they should spend some of
I hear you.
it, buy a company and get ahead in AI. That would be something. Coming up, one winner from President Trump's tax law, SoFi. Details next on how the private student lenders may benefit. This is Open Interest.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacroix, the ECB Forum in Central Portugal, and this is Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You said they ask interesting questions.
Bloomberg Television. Top experts, great questions.
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jumana Versace in Doha, Qatar, and this is Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. Let's get a quick check on stocks right now in the horseshoe. You can see the green chiclets dropping. Not huge gains, but the S&P 500 clawing back a little bit of what it lost yesterday. Right now at 62.36, still a relatively high level. Take a look at some of the stocks that are moving. The big kahuna is Apple. As I said, it's worth $3.1 trillion, a little more than that, even with today's drop, which is only 0.4%. Facebook climbing about 0.2%. So So not big moves in terms of the mega cap stocks. You do have SoFi moving up 6.7%, and we're going to focus in on a SoFi story, Katie, right now.
Yeah, let's do that, because we've talked a lot about the companies that would be negatively hit from the tax package, but let's focus on one industry that could benefit: private student loans lenders, and SoFi in particular. Joining us to explain now is Bloomberg's consumer finance reporter, Paige Smith. So Paige, you take a look at shares of SoFi. They've been on an absolute tear, currently trading at their highest level since 2021. What is the calculus here?
So Trump's big tax package has now been signed into law. So I think that it would really give private student lenders a boost, because if you think about it, students are still going to need to borrow for college. And this package limited the amount that some grad students and their parents can borrow to give, you know, those students the opportunity to get some higher education. So it's not like those students are going to just stop going to school. They're going to theoretically look for other options, and that's where we see analysts coming in and saying theoretically that SoFi would be the company that would benefit.
The most, right?
The most, yes.
And it's going to be a little bit more costly, right? Obviously, SoFi is going to charge a little more than you would get with a FWSB, which is the Federal Work Study Program.
FWSB, yeah, got that.
Remember that? So these students are going to have to pay up.
It depends. I think there are a number of different options, of course, but yes, I think that it would be fair to say that sort of federal student lending programs were kind of the gold standard for students who were looking for higher education loans. But, you know, it's important to remember that SoFi has been in this space for quite a long time. This is kind of where they got their start, and they know the area very well. So they have actually been sort of moving away from student lending and some of the loan-based business. It's not like they've abandoned those businesses. It's just that the company has put more of an emphasis on fee-based revenues. So, but theoretically, if there's this opportunity to be seized, Anthony Noto, the CEO, said on the previous earnings call that they would essentially go after the opportunity.
You know what? When we were kids, some parents would put college tuition on credit cards because you could get so many points. But I don't think they allow you to do that anymore, do they?
That's a good question, but that would be a pretty costly student loan. I'll leave it at that. I don't know if it's worth the Amex points.
Paige Smith covers consumer stuff for us here at Bloomberg. Coming up in the next hour, Hamilton Lane co-CEO Eric Hirsch on tariffs and the big, beautiful bill. Plus, we talk to the Oracle of Austin, Ari Rastiger, on real estate in Texas and nationwide. This is Bloomberg.
is Baltimore so important to you?
It's our state's largest city. And if your state's largest city is not thriving, your state can't thrive. And that is just a mathematical equation, because the only way this is going to be Maryland's decade is if it's Baltimore's time. And so that's why we did focus on things like being able to extend the Orioles lease and make sure the Orioles could be here for 30 years. It's the reason we focus on things like the Preakness and keeping the Preakness in Maryland for generations to come, while we've invested in the convention center. The reason we focused on housing and getting rid of the vacant housing. The reason we focused on violent crime. And now Baltimore is having amongst the most precipitous drop of anywhere in the country when it comes to homicides and non-fatal shootings and carjackings and auto thefts. So If you can have Baltimore thriving, your state is going to thrive.
So if somebody's watching this and they're not from Maryland, but they want to know a little bit about Maryland, what would you encapsulate in a paragraph or two about what people should know about the state of Maryland?
I would say Maryland really is American miniature. You tell me what you want to do. And no matter where you're standing in the state of Maryland, I can tell you where to have a world-class experience within 2 hours. We're the home of innovation. We're the home of Johns Hopkins University, the home of the NSA, the home of NIST. We have so much to offer in the state of Maryland, and I think it's one of the reasons that people are so excited about the growth trajectory we're on.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. The death toll is up to at least 104 now from catastrophic flooding in central Texas as a massive search continues for the missing. CBS's Maurice Dubois is on the banks of the Guadalupe River in Ingram.
Officials said they had rescued more than 850 people since the flooding began, but we have definitely seen the mood here shifting over the past 24 to 48 hours, with the grim reality setting in for families waiting for news.
Louis Depe has been searching since Saturday for a friend's missing daughter.
There's so many people willing to give everything to try to find these kids, and now it's probably turning into a different mission. Yeah. But the spirit of Texas is live and well and strong, and we're going to keep looking until everyone's found.
The president met with Israeli Prime Minister Benjamin Netanyahu and pressed him on Gaza. Correspondent Nancy Cordes is at the White House.
President Trump told reporters that he still thinks there is a good chance that a ceasefire deal can be struck this week. According to an official briefed on the negotiations, it would involve a 60-day pause in hostilities with a phased release of Israeli hostages and the withdrawal of Israeli troops from parts of Gaza.
Israel is still striking Gaza with hundreds killed in the past few days. Many were trying to access food. Airline passengers are welcoming news that after almost 2 decades, the TSA is dropping no shoes allowed rules at security screenings.
I guess it's a big time saver in the fact that I'm trying to take my shoes off, put them back on while also trying to wrangle my kids, get my bags, do all the things. It's just one more headache that you have to manage.
I had less smellier airports, I guess, so that's good.
The phase out began at a handful of airports yesterday, including Baltimore, Washington, Fort Lauderdale, and Philadelphia. There's a new malaria drug for babies.
Until now, doctors have given infants drugs made for older children, but that raises the risk of overdose. Swiss regulators have approved the new drug for babies developed by Novartis, which is offering it on a not-for-profit basis. Dr. Richard Price is with the Worldwide Anti-Malarial Resistance Network.
Nearly 40% of the world's population live in risk of malaria. There are 207 million cases estimated to occur each year.
About 600,000 people die of malaria each year. 3/4 of them are children under 5. Michael Wallace, CBS News.
The CDC says emergency room visits for tick bites in the Northeast are at their highest level in 5 years. Dr. Thomas Mather at the University of Rhode Island blames a damp spring.
So we had good conditions in May and June for tick survival.
A typical disease carrier in New England is the deer tick, which can be as small as a poppy seed. This is CBS News. Several leading medical groups are suing Health Secretary Robert F. Kennedy Jr.
The lawsuit accuses Kennedy of endangering public health with new COVID-19 vaccine recommendations. The American Academy of Pediatrics, American College of Physicians, and other leading medical groups are calling on the court to stop what they call Kennedy's unilateral, unscientific directive and restore the COVID vaccine to immunization schedules. In May, Kennedy announced on social media that federal authorities would no longer recommend COVID-19 vaccines for healthy children and pregnant women, resulting in sharp pushback from health experts. Steve Kathan, CBS News.
Royal watchers are in a tizzy after French President Macron arrived in the UK today and greeted Princess Kate with a kiss on the hand. Some say it was charming but uncommon and wonder if it broke protocol. The answer is no. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Paul Sweeney.
The real outperformance has been the U.S. corporate high yield. These are two big-time blue-chip companies. One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Our view is that the economy is slowing down.
There is the possibility of a death spiral.
Both quantum computing and AI are going to power the future.
People are just buying everything with tech.
Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Tuesday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We are also streaming live on YouTube, so head over to YouTube and search Bloomberg Live Radio, and that's where you find us. Coming up, we're going to check in with Sean Donnan. He's a Bloomberg News senior economics writer. Get the latest reporting on trade discussions between the U.S. and various countries around the world. Kim Forrest, she's a founder and CIO of Boca Capital Partners. We'll get her thoughts on the markets. Brandon Daniels is CEO of Exinger. It is a company that focuses on trade, supply chain, and how are tariffs impacting the global supply chain coming up. So, and then in the 11 o'clock hour, President Trump hosts his cabinet meeting at the White House. We will bring you parts of that cabinet meeting in the 11 o'clock hour as that occurs. So we got a lot coming up over the next couple hours. Lisa Mateo is here with me, Paul Sweeney, and we've got a lot happening. Let's go right to John Tucker. Get a Bloomberg Business Flash, John.
All right, guys, and this Bloomberg Business Flash being brought to you by IBKR. Will the U.S. Consumer Sentiment Index exceed 56 in July 2025 at IBKR Forecast Trader? The yes was recently at 24%. Start predicting today at ibkr.com/forecast. Last trading day for this contract, July 31st. Right now, the major stock averages, they have turned lower. Investors are hopeful the trade war will de-escalate, though. 5 of the 11 major index groups in the S&P 500, they're still higher, led by energy, and it's the solar stocks that are taking it on the chin after President Trump moved to scrap clean electricity tax credits a little faster than expected. Those stocks include Enphase. Right now, that is down just over 5%. Chris Grisanti, meantime, at MAI Capital, is cautious on these markets.
You definitely have to respect what the market's done since April 8th, which is up over 20%. So you have to respect that. But because of that, we're back to 24 times forward earnings. We have the tariffs sitting in front of us like an undigested piece of gruel.
Well, right now, the S&P 500, 7 points lower. That's down 0.1%. 62.22 on the index. The Dow down 144 points. The NASDAQ 100 just 5 points lower right now. And the AI talent war, that continues to heat up. Apple could be facing an exodus of top talent. One of the first out the door is a guy by the name of Ruming Pang, a distinguished engineer and manager in charge of the Apple Foundation Models team. He's going to Meta Platforms, where they have dangled millions and millions of dollars
like
a year. You're right. Top talent, they're worth something, and Apple's push into AI isn't exactly getting gold stars at this point. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Lisa and Paul.
All right, John Tucker, thank you so much. We appreciate that. A little bit of red on the screen here. Let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside Lisa Mateo. And we're joined today by Bloomberg's Christine Aquino. Christine, what are you looking at?
Taking a look at Amazon today, Paul, because it's Prime Day, which is actually 4 days starting today. Right. So Amazon, ticker AMZ, and not doing so well, actually. It's down 0.7% at the moment. So as we mentioned, Prime Day starts today. And the expectation by Adobe analyst Vivek Pandya is that the price drops will be probably steepest in apparel, electronics, and TV. So these are your high-ticket sort of spending items, right? That will probably be the most discounted. And Adobe expecting Amazon and other U.S. retailers to generate more than $23 billion in online sales during the event. But it seems to be that there's more subdued appetite for shoppers this year. Akeneo, which does retailer surveys, shows that of 1,000 U.S. shoppers, only 1 in 4, or rather 1 in 4, plan to skip Prime Day because of tariffs, and then more than half say that they will closely monitor prices. Are you planning to buy anything, Paul?
No. Lisa?
I'm not a big Prime. Sometimes I go on and I buy stuff I don't need and it just sucks me in. So
it's a lot of regret
so
after
Prime Day.
Yes,
it's the regret after. But I have to say, there are some good deals, especially those TVs, like you were saying.
All right, First Solar.
Yeah, First Solar, ticker FSLR. Exactly. Tough times continuing, down more than 3% at the moment, 3.5% looking at those shares right now. And that's because President Donald Trump, in an executive order on Monday, calling for new rules that would restrict access to tax incentives for solar and wind projects. And so, under the tax and spending bill law that was signed into law before we all went on a long weekend, solar and wind developments are eligible for tax credits if they begin construction within 12 months. But the speculation was that provision had urged the Freedom Caucus. And so the executive order now, which came on Monday, is being seen as a way for President Donald Trump to kind of strike a deal with that caucus. So the plan is to more closely scrutinize the incentives. And for solar being a provider of such technology and equipment, definitely suffering those consequences today.
Yeah, here in the U.S. and Europe, too, a lot of those European solar stocks, too, taking a hit. What about Bank of America?
Bank of America, ticker BAC, also extending declines. That's now down 2% from the open. That stock was caught to hold from buy at HSBC, and analysts are citing valuations that are increasingly stretched after a rally in the bank stock. I feel like you could say that for a lot of equities just in general, but focuses on banks particularly. And, HSBC analysts saying that fundamentals are strong. They like credit quality and an improving investment banking environment, but those are all well priced in. HSBC, though, raising its price target for Bank of America to $51 from $47. So that's currently in line with the current share price. And a reminder that Bank of America reports on July 16th. So that's just around the corner.
All right, that's when the new pup arrives in the Sweeney household. July 16th, nice. Big day. Christina Aquino, thank you so much for joining us, Bloomberg Markets managing editor there. For more conversations like this, subscribe to our new Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Trade remained front and center this week for sure. Sean Donnan joins us. He's the senior economics writer for Bloomberg News. He's down there in Washington, D.C. Sean, it looks like President Trump, he's issuing new tariffs, but I think the message is he's still open to negotiations. What's the latest?
Well, I think he's reinvigorating his attempt to try and get some deals. I think that's probably the way to read this. And he's also given himself a few more weeks to get those deals that he's promised. If you think back to April, there was this promise of 90 deals in 90 days that Peter Navarro, President Trump's trade advisor, laid out. Of course, they've gotten to essentially one deal, one ceasefire, and a kind of couple of social media posts on a possible deal with Vietnam that the Vietnamese don't seem to be fully on board with. So they've fallen pretty short of that target. And, they were facing this week the expiry of this 90-day pause that President Trump announced after markets swooned in early April after his Liberation Day tariffs were announced. But, President Trump's tried to play it yesterday by kind of, again, throwing out these threats via some good old-fashioned letters. that went out to 14 different countries. The biggest of them are Japan and South Korea, but also some really interesting kind of small countries that are included there. Bosnia and Herzegovina has gotten a threat for a 30% tariff, Serbia 35%, Tunisia 25%, Bangladesh, which actually is something consumers should be keeping an eye on because that's where a lot of clothes that are that we buy here in the United States are made. They're facing a 35% tariff threat. South Africa 30%, Cambodia 36%. Anyway, these letters went out yesterday. It's given everyone till August 1st, and at the end of the letter, on the second page, President Trump says, "Of course, we can have a chat. We can talk. You know, give us your best offer."
More negotiations.
And we'll see where we go. We get more negotiations. I think, you know, all of that said, the direction of this stuff is pretty clear. President Trump wants to get some tariffs in place. Tariffs are not going to go down from, you remember that pause, that 90-day pause? That actually has seen us paying 10% tariffs on imported goods from everywhere in the world. So, you know, chances are we're going to go up from there in the weeks to come.
So, Sean, is the 3-week extension, I mean, is that enough? Is August 1st going to be the last that we're going to hear from this again?
You know, I mean, the president himself said, you know, we'll see. He said that last night, and he's kind of opened it up to a possible extension. I think a lot of this is going to depend on the market reaction. And we saw that in April pretty clearly, that, you know, it's not just the equities markets, it's what the bond markets do, what the dollar does. You know, that's all stuff that they're monitoring pretty closely. I think one of the ways to think about this week is he's kind of thrown something out there to kind of keep the markets relatively calm in what could have been a pretty fraught week if all of these tariffs had gone up July 9th. Just to give you an idea, we're now sitting, you know, we started the year at an average applied tariff rate here in the United States of somewhere around 2.5%. We're now sitting around 15% with the tariffs that we have in place, not just that universal 10% tariff, but also some sectoral tariffs that have gone in on cars and steel and aluminum. And, you know, if all of the tariffs that he promised on Liberation Day went into effect, you'd be up above 20%. You know, we're already looking at the biggest tariff increase that the U.S. has had since the 1930s. You go up to that next step, and you're looking at the kind of late 19th century in terms of tariff levels. So, you know, there's a shock there, and we're still digesting that shock in terms of the broader economy, and I think markets are still trying to figure out how it's going to work its way through.
Sean, thanks so much for joining us. Appreciate it. As always, Sean Donnan, senior economics writer for Bloomberg News. He's down there in Washington, D.C. And Lisa, I was looking at some work from Bloomberg Economics, and they kind of did some analysis, and they kind of think where this is all going to shake out in terms of the weighted average tariff is maybe at 15.5% was all said and done. And as Sean was mentioning, it was, you know, right around 3% before all this started. So that's still a 5x increase in tariffs. That the question then, I guess, is who pays that? Is it going to be the importers, the manufacturers, the distributors, or consumers? And we'll have to see how that plays out.
Yeah, and then he's talking about how, you know, the market reaction to it and how that's going to be. I mean, today we've seen kind of a relief rally, kind of, you know, it's struggling, but it's interesting to see how much that'll pan out.
Yeah, so I think what the market's trying to say is just give us some clarity here. I think once we have some clarity out there, then maybe the companies can adjust. As Tom Keene has always said, companies adjust, consumers adjust, and that's how you deal with change. And so we'll have to see how that plays out. But we have the full reporting from Washington, D.C., a team of reporters covering this from a trade perspective on a global scale. S&P 500 down 2 points, Dow down 85, NASDAQ up 6 points. We're going to have more coming up. This is Bloomberg Morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. And the major stock averages mixed to little change. Moderna, the best performing stock right now, the S&P 500, up close to 8%. I'm not sure why. Enphase Energy is the worst performer. Right now, that is down close to 5% with the executive order to end clean energy tax credits sooner than thought. Meantime, profits for the Liberation Day quarter, we're going to start to see those as we get earnings starting next week. The tariffs, of course, are paid by U.S. importers. They should bite into margins, but we'll see. Right now, the S&P 500, 5 points lower, 62.24. The NASDAQ Composite Index, that is down right now. Has turned positive, up 2 points right now. Call that a little change. The Dow Jones Industrial Average, that is down 120 points. As far as yields, the 2-year up a basis point, 391. The 10-year yield is up just about 4 basis points. That is at 442. And this report being brought to you by Oracle. Attention growing businesses, Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Lisa and Paul.
All right, John Tucker, thank you so much. We appreciate that. Lisa Mateo, Paul Sweeney live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube as well. You know, I've always held this feeling that if this market's going to move higher, it's got to be led by technology. It's just been such a long time where technology has not been the leader. So I'm looking at the NASDAQ here, up 5.7% year to date, and it's up 34% off of that April low, so it's just been extraordinary, the snapback here. So is that going to lead us forward here? Kim Forrest, the founder and chief investment officer at Boca Capital Partners. She's in Pittsburgh. In a previous life, she was a technology analyst, and she was working for a living. So, Kim, how do you think about technology as the leader in this market? And I guess I'm kind of asking you about AI as a theme here. Is that still what we need to focus on?
I think we do for several reasons. First of all, in the past, and I wasn't just an analyst, I was an actual software engineer writing code.
Oh, boy.
For AI projects, believe it or not, back in the 90s, yes, we had AI then. It's actually pretty darn old. But regardless, I think what has been missing, in my opinion, since, I don't know, probably since 2010, is the tech leadership has been in consumer-oriented products, which are the opposite of productivity-enhancing objects. I'm talking to you, Facebook, Meta, now that we call them Meta, and Netflix, right? Like, we waste time on this stuff. So AI, I think, has been intriguing because it could add both to the consumer and, more importantly, to companies with productivity, and that's still the thing. But here's what I worry about. Large language models by design and large language reasoning by design are mathematical models, and they can't think. And even though it feels like they're thinking because they're talking back to you, they are not. And it's a huge issue that we have here. Yes, I think AI is going to be a thing for the next 15, 20 years as we figure out how to use it productively. But this first pass, I'm afraid if it blows up and people go, ooh, I'm getting too many wrong answers, this isn't productive, that it could kill a rally. And that's kind of my big issue with AI as it stands. And I've just thrown that thought bomb on you, so I'll be quiet here for a minute.
well, let's take that thought bomb and let me toss it back at you. When you're talking about the AI space and we talk where tariffs in the news, how do tariffs play into that AI space? Does that change the narrative too?
Well, it's really more about, like, can a product even escape out of the U.S. as opposed to a tariff? So there's an even higher bar than a tariff. We're not importing a whole lot of technology necessarily. Taiwan's kind of sticky, I guess. That gets some tariffs slapped on it, but we've had these tariffs in place for a very long time. So, and I don't think Taiwan is the object of any tariff kind of discussion at this point. So tariffs we can take off the table, but it's really the leadership of NVIDIA. Yes, most of those chips come from the island of Taiwan, but they're NVIDIA chips and thus get reported as American, I believe. So yeah, it's confusing. It's a very confusing time here with the tariffs adding to a confusing AI time.
Kim, broader market outlook here. We're going to start earnings next week. We'll have JP Morgan kicking it off in earnest here. What do you expect to hear from corporate America? What do you need to hear from corporate America?
Well, I think a little more certainty would be nice, wouldn't it? The last quarter seemed to have people taking estimates off the table or severely reducing them in many cases because they didn't know what tariffs were going to bring. Now, we've gone through most of a quarter with the tariff tantrums hanging over our head. As you pointed out in the beginning of this segment, you know, technology, which was the most affected, rebounded and has even eclipsed, in many cases, what it was in the beginning of this year. So apparently we're not worried about that. But let's see if companies can give us a good snapshot of what they're seeing for the remainder of the year. And that would assuage a lot of investors' concern, both retail and the professional investor.
Oh, and on that same space, Kim, talking about sentiment out there, when you're talking with clients, a reaction from your clients, when you're talking about trade negotiations, all the things going on that could have them a little bit concerned, a little bit worried, how are you easing those fears or those concerns for your clients?
Well, I'm pointing to the market itself because the market, I love that I'm in markets now as opposed to technology. It is a bunch of people betting with money about what's going to happen in the future. That is what markets are to me. And this sudden rebound and this belief that we can use technology to make ourselves better, stronger, faster, that's what, you know, productivity is really kind of encouraging and energizing to me. And that's where I point people, saying this is a different time with respect to politics, but it's the same where people are putting their money, and it's in the future, and it's building better products. And I think that is what the markets are telling us.
All right, Kim Forrest, thank you so much. The founder and CIO of Bogus Capital Partners, talking about her outlook on the markets and AI, getting into that as well. We're going to keep it here kind of in that AI tech space. I want to go to Mandeep Singh. He's Bloomberg Intelligence Senior Tech Industry Analyst. So Mandeep, we have this sign of just how competitive the AI space is for talent. So you have Meta possibly poaching Apple's top AI executive, offering this big payout. Explain to us, first of all, who this guy is and how much are they offering him?
Well, I don't know the exact dollar amount what they're offering, but clearly Meta is going big in terms of poaching the top AI researchers. We saw that with the Scale AI acqui-hires. They pretty much poached the founder. And look, I think they want to assemble the top 50 AI researchers that are out there who have got published papers, and they are paying up in this case because they've made all the big investments in terms of compute, in terms of infrastructure, but they don't have a cloud business or some other form of monetization that, you know, a Google has or a Microsoft has. So from that perspective, I think it's crunch time for them to really show that, you know, they can develop an ecosystem with their large language model, which has been underperforming relative to OpenAI, Google, and Claude. And I think it's the founder, Mark Zuckerberg, who really is going all out. I mean, you can't expect any other CEO to be that aggressive with paying $5 billion for 50 people. Literally, that's what the expense that we are talking about. So Facebook, Meta as a company, has over 76,000 employees with an expense base of $115 billion. They're adding $5 more billion for 50 people. That's what we are talking about here.
Wow, that's an order of magnitude.
Yeah.
All right, so it's clear that Meta's all in. What does this mean for Apple? If I were an Apple shareholder, I'd be concerned here. A, I'm losing talent. But B, it's coming from an area where I feel like I'm underinvested already. Perhaps I'm already behind. What do you think this means for Apple?
I mean, clearly, everyone on the research side realizes that Apple doesn't have the big AI cluster that these companies have. And, generative AI is all about having a large cluster, training your model on that cluster, and then really building from there. So from that perspective, Apple has lagged behind. And if you're a top AI researcher, there are better companies to work for right now. So I'm not surprised, a top AI researcher has ended up taking up the offer. But for Apple, look, they're going to use a combination of partnerships and some on-device AI investment, which is what they have done in terms of, their own model efforts. They're going to partner with Claude, OpenAI, probably Google as well, once the antitrust issues are over. And that's how they're going to provide the functionality. As long as it's cloud-based, they have the app infrastructure to offer AI. For on-device AI, they have to do it natively at the operating system level. You can't really leverage the large language model from OpenAI on device because you have to really open up your operating system, which Apple won't do.
I have to add some kind of AI in my resume. I think I'm behind a Paul on this. Mandy, what kind of tone does this set for the industry? What kind of message is this sending?
I mean, to my mind, this is a very high-risk play right now. The market sentiment is Meta can do no wrong. They are making all the right moves with getting these, big AI researchers. But at the end of the day, it is, they're doubling down on CapEx, adding more OpEx. So from a spending perspective, Meta is going all in. And so, once it starts to weigh on free cash flow and the returns are not there, which is why I said, with everyone else, you see the AI monetization. If you have a coding agent from Microsoft or Google, they are monetizing it. With Meta, all these are upfront investments with the hope that it will add more engagement time across their family of apps. They will probably have a killer AI product that they'll be able to monetize with, in addition to their recommendation systems. So the stakes are getting higher and higher, but clearly they are doubling down in terms of their investment. And at some point, the monetization question will kick in. Probably not this earnings season, but maybe a couple of quarters from now.
All right, Mandeep Singh, big numbers. That's his companies, folks. They traffic in huge numbers, huge investments, huge revenue, huge free cash flow. That is the state of global technology these days, centered in the United States. Mandeep Singh, senior tech analyst for Bloomberg Intelligence. We appreciate that. And again, Meta going all in, not that they weren't before, but it's just kind of another example of the type of investments they are making there. We kind of got a mixed tape here. Not too much going on the index level. Coming up, Brandon Daniels, he's the CEO of Exeger. He's going to give us his thoughts on tariffs and maybe what they mean for the global supply chain, winners and losers. That's coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. The major stock averages right now, I'll call them mixed to little change at this point. We'll start off with shares of Amazon, down about 0.6%. Their Prime Day being affected by the trade war, with some brands opting out of the Prime Day sale. Some shoppers also planning to pull back because of the tariffs. Moderna, the best performing stock right now in the S&P 500, those shares are up 9.4%. Meantime, Veronica Clark at Citigroup Global Markets, a guest earlier today on the program, says tariff-induced inflation will show up later rather than sooner.
I think businesses are going to try to hold off on raising prices as long as they can. This does not seem like a consumer that's particularly strong, and so you don't want to raise prices if you don't have to.
Right now, the S&P 500 up just 5 points, 62.35 at the index. The Dow is down 50 points. The NASDAQ 100 is up 52 points. Bidders for 3 New York City area casino licenses, they are projecting revenue that would place them among the most lucrative resorts on the planet, with estimates ranging from $2.2 billion to $4.2 billion a year. One of the proposals is for what they're calling the Coney, which is would be a casino on Coney Island.
There you go.
Of course. So the state and the city regulators, the approval is expected by December 1st of this year.
And I think Steve Cohen, the owner of the Nets, would like to do something
and
around
his casino
Citi Field.
would be like just about in the parking lot of Shea
Yes.
Stadium or Citi Field.
Exactly.
Anyway, we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Lisa and Paul.
All right. Lisa Mateo, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube. Thank you, John Tucker, for that update here. I think during the pandemic, we all became familiar with this concept of supply chains and global supply chains and where stuff comes from. And boy, when the ship stops sailing, that's a problem. And do we need to bring some of that stuff closer to home? And that's one of the reasons, I think, for President Trump and his focus on tariffs here. But let's get a sense of what the global supply chains are looking at now and how they may react in a world where tariffs are higher. Brandon Daniels joins us, CEO of Exiger. He joins us from Chicago. Brandon, how do you put into context all this talk about tariffs and kind of what it means for the global supply chain and how we get stuff, where we make stuff, where we import stuff from? How do you guys think about that?
Absolutely. Well, thank you for having me on. It's good to talk to you guys today. I think when we think about it, it is a reflection of a major shift in priorities across all countries from a global commerce perspective, right? Like when you think about what the United States is doing and what the administration is doing, is they're trying to prioritize 3 things, right? The first thing that we've in our discussions and in our talks with the administration, they want to bring back manufacturing where the United States can be competitive. And that's what our customers are utilizing our AI tools today and our multi-tier supply chain visibility to understand where can they actually source in the United States in a way that is at parity with their global sourcing requirements. And so that is mostly focused on where labor arbitrage has been taken out of the equation. So think things like additive manufacturing, think things like, largely automated production floors. Those are the areas where you're starting to see major cost collapse in between emerging markets and more sophisticated markets, because the cost of the manufacturing equipment, it's the same across the globe. The cost of the land, I mean, there's parts of North Texas that are cheaper than parts of Hebei, China. And with the volume of operators necessary in these factories going down and them having to be also more higher skilled, the major labor arbitrage effect kind of dwindles. And so they want to move those areas of automated manufacturing back to the United States. And so I see our customers focused on those commodity areas, as well as some of the more specialized areas that require automated manufacturing floors. that stuff coming back to the U.S. The second thing is national security and economic security. So from a national security perspective, there's a core focus on semiconductors because AI is the future of our national security capacity, whether it's in managing, UAS and drones, or it's in, fighting cyber attacks. AI is where it's at. And then the other area is in pharmaceuticals. It's actually keeping our, medical supply chains clean and independent. Obviously we pulled back the veil on that in COVID. Exeger was the technology utilized by the federal government to purchase $7 billion of goods and to do it in a way that didn't, in a way that could get it to the healthcare front lines quickly, and in a way that didn't allow for fraud, waste, abuse, and adversarial investment. And I think they're looking to try to expand that and trying to bring back pharmaceutical manufacturing, medical device manufacturing to the United States. And so when I look at this, I see those two first strategies getting, sort of being prioritized. The last one is honestly to ramp up our actual external tariff collection. There have been estimates between $30 and $100 billion of transshipment per year. You saw this in the deal with Vietnam, where it was 20% tariffs and then 40% tariffs on expected or potential transshipment goods, right? So one of the things that we've seen is China has used this sort of global economic coercion to create veneer centers of manufacturing across the globe. And the U.S. is trying to crack down on that to level the playing field.
All right, Brendan, I hear you talk about a couple of things. So AI, pharmaceuticals. One of the things you mentioned in your notes is how autos are going to be the best case study and how nuanced this policy really is. Can you dig into that for us?
Yeah, absolutely. So auto manufacturing is a great case study of where all of this might be going. I don't think we'll end up with just blanket country level policies. And I think those blanket country level policies will get nuanced down to the HTS code or to the actual sort of segment or sector of goods, right? And I think that they will get nuanced down to a place where, the recognized dependencies we have on critical minerals or specialty alloys or on specific goods that are indigenous to some of our allies, where those are necessary for us to do the manufacturing in the United States, I think those goods will become subject to exceptions or exemptions, very similar to USMCA. So automotive's a great example of this because basically you can have 15% of your auto that's being manufactured in the United States, you can have 15% of it be parts, components, and goods from other places. Right. And your entire tariff burden can be offset by the 3.75% tariff credit you get on the vehicle's MSRP, right? And so it's almost like you're tariff free if you have 15% of the goods coming from everywhere else. And that's because we realize that in many cases, there are things that the U.S. doesn't make yet. And it's going to take a while for the U.S. or our allies to build those things. Right. And we want to give people the ability to have some leniency there.
Red headline crossing the Bloomberg terminal. Trump says August 1 tariff deadline won't be extended. We'll have more reporting on that. Brandon, we've got 30 seconds left here. When you talk to your customers, who's going to pay tariff costs? Is it going to be the importer, the manufacturer, the distributor, or the consumer? Or how are these tariffs going to be borne by the economy?
I think the consumer is going to be the last to feel it. And I think, the fact is, this is going to be absorbed somewhere in the supply chain. In 2018, when we had the original Trump tariffs on steel, the entire defense industry, the entire automotive industry, airline industry, they all ate it, right? Because you just needed the steel, and you didn't want to affect the end market. I think that the consumer is going to be the last to feel it on this one.
All right, hopefully that is the case. Brandon Daniels, thank you so much. Brandon Daniels, he's the CEO of Exeger, joining us from Chicago via Zoom, talking about tariffs, talking about supply chains. Fascinating and fluid situation. Coming up, we're going to check in with Poonam Goyal, senior U.S. retail analyst, to talk to her about Amazon Prime Day. How big is that? This is Bloomberg.
This is Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio.
There we go. Welcome back to Bloomberg Intelligence. I'm Lisa Mateo alongside Paul Sweeney. So today is a day hardcore online shoppers have been waiting for. We're talking about Prime Day. It's not just 2 days, it is 4. But early spending hours are showing a little bit of a different story. Down 14%. Shares are lower this morning. Here to explain more about this is Poonam Goyal. She's Senior U.S. E-commerce and Retail Analyst at Bloomberg Intelligence. Poonam, thank you for joining us. So I have to start out. You have to explain what's going on with the spending. It's lower as we start to kick off Prime Day.
I think people know they have time, right? It's 4 days, not 2 days. So, you have the whole week, essentially, all the way up until Friday to go ahead and snag these deals. The deals are there, though. We're seeing things off 20%, 30%, even 60%, some things. So they're clearly pushing out deals. I think people will shop. They'll eventually come to it, but they have more time.
I don't know. Poonam, remind us all of this whole Prime Day concept here. I mean, it's July. I'm thinking about, am I doing hamburgers or hot dogs tonight? I mean, on the grill. What is this whole Prime Day thing?
Yeah, so Prime Day is essentially another sales event, right? It's in the middle of the year. It's ahead of Black Friday. It's to stimulate those summer purchases, back to school, the second largest season for shopping following holiday. It's really to just get people to spend, get inventory out of the way, right? Excess inventory, clear house, sell more. It's another sales event. And it's not just Amazon that kind of does this now. It's everyone, right? Walmart has its sales around this event. Target has sales, and so many others.
And is this more along the line, yes, they want to gain subscribers, but is this also a way for them to get more advertisers by kind of extending this out to 4 days?
Yeah, absolutely. So you said it just right. So there's really two main benefits for Prime Day outside of the sales that they generate. One is the subscribers. In fact, we ran a survey a little over a few weeks ago, which said, who is going to shop for Prime Day or sign up? And Gen Zs and millennials, more than half of them said that they're going to get the Prime subscription and keep it. So a great draw for the younger shoppers. And outside of that, yes, you're also right that, it's a day when people want to spend, and it's really going to target those that want deals.
This is tariff week. We've kind of defined it here this week. We're just talking about tariffs, it seems, since they got the tax and spending bill done last week. Markets focusing on tariffs. Remind us, Poonam, how you think this is going to play out for consumers. Everybody's trying to get a sense of, all right, if tariffs are going up, whether it's 10%, 20%, whatever the number is, how's that going to be kind of passed along throughout the retail food chain? Is it going to trickle down to the consumers? Based upon your conversations with your companies, how do you think that's going to work?
I think it has to trickle down to the consumers. If you think about retail margins, just operating margins, they're in the single digits, right? So as soon as you even put a 10% increase in costs, retailers are going to start losing more money. And now you're talking 20%, right? The rumors or what we hear so far, they're not signed, but in play is 20% for Vietnam, 25% for South Korea, etc. So they're higher. They're twice or more than that of the paused rates. I'll give you an example. Nike, in its last quarter's earnings call, said that tariffs are going to cost them $1 billion more. That is at the 10% rate. If we move Vietnam to 20%, which is where a lot of the shoes are made, that could mean almost doubling that increase in costs. And there's no way they can absorb that. They will have to pass it to the consumer.
So keeping that in mind, all that said, does that mean that fewer companies are going to be offering deals? Am I going to be able to get the same deals that I usually get on Amazon Prime, or are some of their brands kind of pulling back?
I think you'll get deals. And then here's the reason why you'll still see deals at the bigger retailers and why scale matters. Remember, Amazon has 3 businesses: the retail business, the cloud business, and the advertising business. Where does it make all its money? On the advertising business and the cloud business. So could you argue that they can use those businesses for the time being to compensate, to offer lower prices on the retail side? Absolutely. And they will do that. Walmart, when we heard about tariffs, also said that they're not passing the prices to the consumer. They're going to absorb it. Here's where scale kicks in. You can bargain for lower prices. You have more power. You have more buying power against your suppliers, too.
Back when my kids were younger, we'd go to birthday parties like 15 times a week, it seemed like. Buying toys at Target or Walmart was probably the smarter thing to do, but we went to the local toy store in town to, take care of them.
those people are going to get screwed, aren't they? Those
Yeah,
smaller
absolutely.
retailers?
It is going to be much harder for the local retailers because one, they don't have scale, and two, when prices go up by 20% or 10% even, the consumer notices, and then they start to find alternatives and seek alternatives. I think there will be a settling ground, right? Everyone's going to have to readjust to higher prices, and then you'll start to see discounts kick in again and so forth. But for now, when retailers go into the second half, pushing up higher prices, if we do get these higher tariffs, it is going to be a sticker shock for many consumers.
All right, Poonam Goyal, interesting. As always, Poonam Goyal, senior retail analyst for Bloomberg Intelligence. She's down there in Princeton. And you think about it, Lisa, I mean, Poonam says, based upon her discussions with her retail companies that she follows, she thinks the consumers are going to bear some of that. But the guest prior to that, Brandon Daniels, the CEO of Exiger, he didn't think so. So it's going to be interesting how this plays out here, you know, where in the supply chain the costs get absorbed. I kind of just feel like it's got to come to the consumer at some point for a lot of products. All right, for our listeners in the U.S., a reminder, you can listen to us via satellite radio and Sirius XM Channel 121, access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 129, presented by Oracle. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence begins right now as we look at a market down 5 points on the S&P 500, the Dow minus 155 points, but the NASDAQ eking out a little bit of a gain, up 3 points here. We'll have more coming up. This is Bloomberg Good Morning.
This is Bloomberg Intelligence with Paul Sweeney.
The semiconductor business is a really cyclical business. The market's telling me, here's another AI play. Just bid it, buy it. Is the market over their skis? Are people just too exuberant out there?
Breaking market headlines and corporate news from across the globe.
This was a big success story for Apple.
We like bonds. We think bonds are attractive.
Private markets have become very diverse.
What we're telling people is be cautious here.
Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
All right, coming up in this hour, President Trump is scheduled to host his cabinet meeting at the White House at 11 a.m. Wall Street time. Who knows when that will start? When it does, we will bring you portions of that. We're also going to check in with Ira Jersey, Bloomberg Intelligence chief interest rate strategist, get his thoughts on kind of where the Fed may go with the interest rate call. Some people were saying there might even be a rate hike there sometime this year. I can't imagine that. Gina Martin-Adams, Bloomberg Intelligence chief equity strategist. We'll get her informed thoughts on where these markets are going. She has the courage to be in the market. That is always her mantra. George Ferguson, Bloomberg Intelligence senior aerospace analyst. Talk about Boeing. It's all about the deliveries of the 737 MAX for the Boeing story, because that's the big cash cow for the company. So we've got the latest from George Ferguson on that. We'll get him off his sailboat, see if he can break some news here for Boeing. But right now, let's go to John Tucker and get a Bloomberg business flash.
All right, guys, thanks very much. And we are data dependent. We do have data. This is the New York Federal Reserve one-year inflation expectations numbers coming in lower than expected, 3.02%. The expectation by economists surveyed by Bloomberg was for 3.13%. Major stock averages right now, little change, and volumes, they are lighter than average for this time of the trading day. And of course, in the latest social media post, we told you about this a little earlier, President Trump says he will not offer any extensions to the new August 1st deadline for nations to begin paying so-called reciprocal tariffs. They don't pay them, by the way. It's, you know, at the port where you receive the stuff. That's who pays. Ed Yardeni, meantime, at Yardeni Research says new tariff threats from President Trump are just another negotiating tactic.
Trump has taken this to another level and to a global level of negotiating publicly with leaders around the world on trade. So it's not a pretty thing to watch, but I think the markets have figured out that this is going to get resolved in the next few months. It has to be, because otherwise Trump's going to really risk losing the midterm elections.
Right now, the S&P 500 down 1 point at 62.28. The Dow Jones Industrial Average down 127 points, and the Nasdaq 100 up 20 points. You saw this one from the Wall Street Journal. Technology from a startup, Black Dot, in New York City. A high-end ink shop now taking appointments for AI-driven tattoo robot. You want a robot doing your... well, not that you would have those. I was on the beach recently thinking to myself, tattoos on you? You know, looking at several individuals. I won't say who, but like, why? I don't get it.
There's nothing wrong with the tattoo.
I didn't say there was anything wrong with it. It's just like...
I can neither confirm nor deny that I have a tattoo. We'll leave it at that.
Yeah, I'm not going to go there. Anyway, we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Lisa and Paul.
I mean, talk about breaking news earlier this morning. Lisa Mateo just shocked the markets. But anyway, let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside Lisa Mateo. We're joined by Bloomberg's Christina Aquino. Christine, what are you looking at today?
I'm taking a look at Trump Media, Paul, ticker DJT. Those shares are up just over 1%, pairing some of those earlier gains, actually. That was up around nearly 2% earlier in the session. But anyway, it's still in the green, and that is because the company is plowing deeper into the cryptocurrency space. It has a new filing out for an exchange-traded fund on Tuesday, which is today, and that's showing that the social media firm, which is owned by President Donald Trump, is seeking to launch the Crypto Blue Chip Fund, and that fund will hold Bitcoin, Ether, Solana, Kronos, and XRP directly. This is actually the company's third ETF filing now. So if that launches, I mean, it's a pretty crowded space, but you know, the Trump media name holds some sway, so we'll see how that goes.
It's certainly getting around. Let's talk about something up my aisle, beauty, Ulta. Okay, can we get to that?
Yes, of course, Lisa. We love a beauty story. Ulta, ticker ULTA. So shares are up just under 1%, actually. So pairing some of those earlier gains as well, but still in the green. So yeah, that price target for those shares raised to $550 from $485 at D.A. Davidson. So that's about a 15% increase from its current price. It's right around there at $480 at the moment. And so, you know, Bloomberg Intelligence taking a look at Ulta's offerings, and they're pinpointing their in-store services as something that could really be a differentiator for the company, because people who use those services in store, so we're talking about their salon services, right? They spend 3 times more than if you were just coming in and picking up something from the shelves, which makes a lot of sense, right? So we did see the company last month reaffirming its outlook for fiscal 2025.
I learned how important the whole beauty thing is. I got a much greater appreciation during the pandemic when the world was shut down. You'd walk by the Sephora store on Lexington Avenue and 49th Street, packed with people.
Yes.
I mean, these people, I'm getting my beauty stuff. I don't care what's going on out there in the world. I mean, it was like, I don't need to go to a restaurant. I don't need to go to a bar, but I need to get my beauty stuff.
But you need to look good.
Yes, it was unbelievable.
And it's funny, it's a lot of the younger kids, too, who are getting things. I know
you
that.
had a lot of time to work on your skincare routine during the pandemic.
Well, as Alex Steele always tells me,
yes,
you got to invest in your face.
You have to.
John Tucker and I missed that memo, so sadly. All right, one more.
Let's take a look at Dow as well, ticker DOW. So those shares up as well today, extending gains, actually. It's now up more than 7%. And they're rebounding because they fell a lot on Monday. That's after the company said it would close 3 plants in Europe and take charges of as much as $790 million. Its debt was also downgraded to Baa2 by Moody's, which is citing the company's track record of elevated dividend payouts and share repurchases despite weekend earnings performance. So just a little bit of a rebound story for Dow there. And reminder that it is going to be reporting results on the 24th of July. So we'll see if those impairments will show up in those sets of earnings.
All right, great stuff. Christina Aquino, thank you so much for joining us. Christina Aquino's over there at Bloomberg News covering the markets. She's a managing editor there. For more conversations like this, subscribe to our new Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. All right, we are back into tariff talk seemingly all the time here. The big, beautiful spending bill, that's done. That's in the rearview mirror. Question is, how's the Federal Reserve thinking about some of the economic data they're seeing? How's the Federal Reserve maybe factoring in maybe a slower growth economy? Who knows? Maybe higher inflation. We're not seeing it in the hard numbers yet. Let's put these questions to somebody who does this for a living. Ira Jersey Chief U.S. Interest Rate Strategist for Bloomberg Intelligence. He is down there in Princeton, the home of Hoagie Haven, which is my favorite sub spot in the world. Ira, talk to us about the Fed here. You could argue, once again, that they could be sitting on their hands. They don't need to do anything rash. What's the bond market telling you?
Yeah, I've been arguing that actually, that I didn't think that the Fed would do anything until the fourth quarter of this year, just to wait until they have confirmation from the data. And a lot of the data, as you've noted, is okay, not great, and not falling off a cliff. That being said, there are little bits of things that are a little bit worrying. For example, here at Bloomberg Intelligence, we have an asset-backed securities strategist named Rod Chadahumbe, and he noted that subprime defaults within some of the bonds in his sector are deteriorating, and that is a concern. So you get enough of people defaulting, and that can feed through the system. So there are little signs that the economy is slowing and not necessarily great. But again, I think all this tariff talk is going to keep the Fed on hold until it's clear that inflation expectations aren't going to shoot up a bit because of what's going on with global trade.
So keeping the Fed on hold, what about the economic impact from tariffs? I mean, you had President Trump release these wave of letters. Now he's delaying the duties till August 1st, saying that is the final date, August 1st. Talk about that economic impact from tariffs.
Yeah, so it really depends on how it affects spending and the household wallet share, right? So if there's a lot of things that we import into this country are not necessarily needs, but rather wants, right? So will people not buy those imported goods and instead buy other domestic goods, or maybe go out to dinner once more, or buy other services domestically? So there could be a little bit of a shift in spending from goods to services, or imported goods to domestically sourced goods. That's all possible, right? So, and this is the uncertainty that comes out of the tariffs and tariff negotiations. And the last question is, as I noted before, nobody really knows exactly what the pass-through from these tariffs is going to be, because producers could cut their margins a little bit, wholesalers could cut their margins a little bit, and then retailers might cut their margins a little bit, which obviously isn't necessarily good for those retailers' profitability. But all of those things might mean that the increases in some of the goods prices won't be as dramatic as, say, the 25% tariffs from some countries would necessarily be, but maybe it's only a 5 or 10% increase, right? Still a little bit, but not as dramatic as that headline tariff number might suggest.
All right, Lisa from the Upper West Side writes in and says, how are those Treasury auctions going? Because when people stop showing up, then we might have a problem there.
Mm-hmm. Well, the June auctions went very well, actually, overall. I think we had one reasonably poor auction, but it was more like a mediocre auction. This will be a big test. You've seen this bear steepening in the yield curve the last couple of days. Part of that's on the back of things going on in Japan. Part of it has to do, I think, with the tariff angst and a fear that Asian investors who tend to buy a lot of longer-term debt of the U.S. might start to back off. So you've cheapened up here quite a lot before tomorrow's 10-year and Thursday's 30-year auction. So that 30-year auction, I think, will be a key indicator of, is there continued demand in the primary market from end users? So that's what we call indirect investors, is how they're couched in the auction stats, and that'll be the key test. I think today's 3-year auction will kind of come and go. Tomorrow's 10-year will be worth watching, but the 30-year is the big test of the week for sure.
All right, Ira Jersey, Bloomberg Intelligence Chief U.S. Interest Rate Strategist. Thank you for joining us this morning. We have something coming up here in this hour, the White House Cabinet meeting. So we want to find out some more information. What will we be hearing about? Is it possible new weapons, shipments to Ukraine? We'll be hearing more about talks about trade deals. Here to explain more is Mike Shepard, Bloomberg's senior editor in Washington. Mike, thanks for joining us this morning. So what do you think? What will be the first thing on tap that we'll hear from today?
Well, one question most at the meeting will concern trade. The president this morning signaled a little bit of a shift in direction from his comments last night about whether August 1st is really a firm deadline for countries to reach agreements with the U.S. Last night he had signaled that maybe it wasn't as firm as it sounded yesterday. Today he dispelled all those doubts with the Truth Social post indicating that August 1 was the date and that tariff payments would have to commence at that time. time. Now, the president is famous for also moving to maximalist positions to try to get counterparties to negotiate. That's true in business, and it's also been true in trying to reach trade agreements and agreements on other matters with other nations. So we're expecting more letters to trading partners to come today. The president has promised this. We saw 14 countries get letters yesterday setting tariff rates that would go into effect August 1st, Lisa. But those, of course, are still subject to negotiation ahead of that August 1st deadline that the president now says is set in stone.
So at this cabinet meeting today, is it all tariffs all the time, or are they going to be talking about, I don't know, wars in the Middle East, wars in Ukraine, issues in Texas? I mean, it seems like there's a lot out there, but tariffs is sucking all the...
Yeah, tariffs will certainly be at the top of the agenda, but Paul, you're right, it's not the only thing at all in the agenda. There will be questions about, as Lisa alluded to, the question of resumption of arms shipments to Ukraine. Those have been briefly halted under an order from the Pentagon last week, but last night during his meeting with Israeli Prime Minister Benjamin Netanyahu, President Trump indicated that no, those arms shipments would resume. He indicated they would be primarily defensive in nature, but didn't offer any other specifics. So we'll be looking to see if he offers any clarity to reporters when they bring them into the room once the meeting starts. And again, the meeting has not yet begun. He also may get some questions about the tragedy in Texas, too. He is scheduled to visit the region on Friday, and he is offering full support to Governor Greg Abbott and lawmakers from the region to try to ensure that recovery efforts proceed apace. And he will also, of course, be asked about the situation in the Mideast. The Prime Minister of Israel, of course, was here yesterday for a visit with the president. The two leaders were able to take in a little bit of the credit in their views for the success, as they see it, in the conflict with Iran. The 12-day war, as President Donald Trump has dubbed it, managed to bring the two Mideast adversaries, Iran and Israel, to a bit of a standoff, but at least halting for the moment Iran's nuclear program, setting it back several years, and also perhaps setting the stage for final negotiations on a ceasefire in Gaza, something the president has been pushing both the Israelis and Hamas to try to reach an agreement on. The two sides are commencing negotiations. We're waiting to see if we have an update on that as well, Paul.
Real quick question before you go. Who are some of the big names? Who are we going to be expecting to hear from later today?
Well, I think we would look for Howard Lutnick, the Commerce Secretary, of course, to talk about trade, Marco Rubio, Secretary of State, to talk about the situation in Ukraine and the Middle East, and then, of course, Pete Hegseth, the Secretary of Defense, to talk about those arms shipments. And then, likewise, really going around the table, we'll also want to see what Pam Bondi, the Attorney General, has to say, as well as other officials, Vice President J.D. Vance. Now, Marco Rubio may be joining from afar since he is traveling to Asia as of today, but we'll be looking to see what he might have to say as well about reports today that somebody had been impersonating him using AI-generated voice communications. The State Department has warned diplomats and others to be wary of these communications. We have a story out on the wire confirming these reports about somebody using AI to impersonate the Secretary of State's voice.
All right, Michael, thank you so much. A lot to cover there. Michael Shepard, Bloomberg senior editor in Washington, D.C. Again, the cabinet meeting, President Trump scheduled to hold at 11 a.m. This morning Eastern time, not being held at the moment. When they do get together, we will bring that to you, presumably sometime this hour, Lisa. And looking at the markets here, just kind of not much happening out there. I mean, the S&P is literally unchanged at 62.29, but I think everybody's trying to get a better handle on how this tariff thing is going to shake out. It's been months now of rhetoric, but it seems like we're getting a little bit closer to maybe a little bit more clarity. Maybe that August 1 date will be something that people can hang their head on. So we'll have to see here. I'm just going to call out Tom from the Upper East Side. He wants his Bitcoin, quote, up 640 points.
Does he?
Yes, he does. 109,000. I think he's secretly long a little crypto there. It's not just Matt Miller.
Not the Turkish lira? No, you're not
the
going
Turkish
there?
lira. Seismic for global Wall Street, and we covered it in spades this morning. Turkish lira weakening
out to a 40 level. This is Bloomberg.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. S&P 500 close to dead flat. 5 of the major industry groups in the index, they are higher right now. Energy, the best performer. Utilities right now, the biggest drag. Consumer expectations for future inflation, they have settled back to levels last seen at the start of the year. We got those figures at the top of the hour from the New York Fed. As Mike Shepard did point out a couple of minutes ago, President Trump said he would not offer any extensions to the new August 1st deadline for nations to start paying so-called reciprocal tariffs. Right now, the S&P 500 7 points lower. That's down 0.1%. 62.22 on the index. The Dow Jones Industrial Average down 137 points. NASDAQ 100 is 9 points lower. Amazon's Prime Day sales fell almost 14%. This is in the first 4 hours or so of the event. That is compared with the sales that we had last year. This is according to Momentum Commerce. As a result of Amazon shares right now, they are down 1.7%. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Lisa and Paul.
All right, John Tucker, thank you so much. We appreciate that. Lisa Mateo and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio in New York City. It's getting a little warm out there, kids. We're also streaming live on YouTube as well. All right, a piece of research just crossed my desk. Here's the title: Tulips versus Titans. Stocks to really watch as tariff pause ends. I have no idea what to make of that, so we're going to go right to the author of this research piece, Gina Martin-Adams. He's a senior U.S. equity strategist for Bloomberg Intelligence. What am I doing here, Gina? Am I buying them or am I selling them?
Well, what we've done is tried to identify the stocks for our client base that are most exposed and least exposed to trade. Effectively, what we've done is taken the entire S&P 500 and we look at all of the stocks' performance back in the 2018 trade war, as well as the spring period of trade turmoil. Looked at their performance during those two periods, and you'd be surprised, but the same stocks that underperformed in 2018 also underperformed in 2025. We then further screened that list based upon our supply chain work and our revenue exposure work to identify not only the stocks that are most technically exposed, but within that list, who are also the most fundamentally sheltered and or exposed to trade risk, so that investors can analyze these baskets for performance trends during the trade war period, which clearly we're back in.
Well, Gina, all that said, you mentioned the S&P 500. Okay, so we're talking about tariff negotiations going on, created a lot of market turmoil, but the S&P 500, yes, hit a record last week. A couple of other things: stocks rebounded globally from the April lows. Dollar jumped the most in 3 weeks on Monday. So with all that said, what is that showing?
Well, it shows that we had a remarkable downdraft and a remarkable reversal, but the stocks that performed worst in April, or at least as according to our work, the ones that we call the tulips, are still down 5% from their late January peak. So even though they've recovered, you're still sitting on losses for the stocks that are most exposed to trade. And I think that this is really important because just buying the index really masks a lot of underlying trends that portfolio managers are tasked with contending with. They have to understand who is likely to be most and least exposed. They have to understand where your trade risks are going to be long-term and enduring. And the tulips to us are those stocks that have that trade risk still embedded, that are risky plays in an environment where trade is going to come and go as an issue in the broader marketplace.
So, Gina, presumably as a good enters, I don't know, the port of Los Angeles, the importer will see the invoice, and presumably the invoice will have some tariff price on it, and the importer will pay whatever that price is, presumably. And then the question becomes, what happens then? As these goods go through the supply chain and ultimately end up on in consumers' baskets. How do you think about that?
Yeah. Well, we're already seeing it, and we're going to see it affect fundamentals in the second quarter earnings season for the first time in a very long time. Analysts are forecasting, after 2 years of consecutive gains in operating margins for the S&P 500, we'll see a dip in operating margins in the second quarter. So the first answer to that question is companies are paying higher costs for their imported goods. At the same time, we're seeing economic growth slow a little bit. The result of that is margin compression on the index. And that margin compression is now creating a deceleration in earnings growth to what analysts think is going to be 2 to 3% growth this earnings season after double-digit gains for the last several. So second quarter is the first experience that we have with this trade policy. And so far, it looks to be dampening margins and dampening earnings growth. The question remains as to whether or not companies will approach trade differently going forward. They could obviously start to try to test the market for price increases. They could think about negotiating further back in the chain with their suppliers to have the suppliers take the burden of the cost increase. And I think that that's an ongoing process. It's going to change segment by segment, company by company, industry by industry. So I don't think we can paint the entire index with one big brush. But it does look like we're already experiencing a downdraft in company pricing power as a result of the tariff implementations of the second quarter alone.
Well, Gina, can you take a look ahead for us? So we're getting set for bank earnings next week. What's your outlook?
For bank earnings specifically, or for the market?
For bank earnings.
Okay. It's a little bit narrow for my focus. What I will say about financials, a couple of things are really mattering right now for financials at large. The first is the Fed stress test, which are allowing the banks to deploy capital at a greater pace than we've seen in quite some time. Most of the banks have announced capital deployment plans for the third quarter, so we'll see dividend increases, buybacks likely increase as well, and that should help power some enthusiasm in financials. What really tends to get the bank stocks ripping and the financial sector at large performing very well is a Fed ease. And that's something that we're going to talk about a lot throughout the second half is will we or won't we get a Fed ease into the fourth quarter, into early 2026, because the yield curve is really obviously consequential to banks. The third thing I think you want to watch in the earnings season with respect to banks specifically is going to be lending conditions and sort of buyer solvency. So certainly we've seen delinquencies start to tick up, default rates start to tick up, in particular in the consumer space. How much of that is likely to continue? Are banks reacting with tightening lending standards, or are they seeing this as a relatively benign issue? Are key questions that I think you want to really spend your time on during the second quarter reporting season.
All right, Gina Martin Adams, thank you so much for joining us. Bloomberg Intelligence Chief Equity Strategist on the markets. All right, when I switch to the markets, we head over to Boeing because Boeing shares have really been under pressure lately. Investors waiting details from flight data equipment. So here to tell us more about it, break it all down for us, George Ferguson, Bloomberg Intelligence, Senior Aerospace Defense Airlines Analyst. George, I want to start with the flight data equipment to start here. Have they found all of them, and what particularly will they be looking for when it comes to this equipment?
Yes, I'm not totally sure if they found all of the equipment. I knew they had found some of the recorders. I think once they get into it, I assume you're talking about the Air India crash, right?
Correct.
Yeah, and when they get into it, I think one of the items they're absolutely going to focus on is going to be what was going on in the engines in that Air India 787. Look, a Boeing 787 can lose one engine and still take off and gain altitude. So the videos we saw, circumstances indicate that both engines potentially were not producing enough lift. So my guess is that's where the focus is going to be, is on what was going on in the engines. It was an 11-year-old airplane. So we think that when all is said and done, probably not going to be a manufacturing issue either at Boeing or GE from original manufacturer, and probably going to be some sort of engine issue, which I think would probably, put Boeing not in the responsible category, for that crash, even though obviously something we're never happy to see, and very sorry about that.
George, you've in your coverage of Boeing and your discussions with us, you've always made sure that we focus on what's important. That is the deliveries of aircraft. June was a great month, wasn't it?
Looked pretty good. So we see about 60 deliveries. Of that, I think we had maybe 42 or so 737 deliveries. 737 is the moneymaker, so that's super important. Of those 42, we're focusing very closely on how many were first flown in 2025. And the reason we're doing that is we know Boeing has a lot of inventory airplanes. So if they're boosting deliveries through inventory airplanes, that's indicating to us that the factory isn't as strong as we would hope. What we're seeing right now when we look at Cirium data is 5 of those 42 airplanes are inventory deliveries, airplanes that were flown previous to this year. So that indicates that something around 37 MAXs came through the Renton factory in June. That's a pretty nice number. That corresponds pretty well with Boeing CEO's indication that they were producing at a 38-ish throughput in the factory, and that they were going to be breaking into 42s levels sort of in the back half of the year. And so this absolutely confirms, I think, the improving health of the Boeing production system and that Renton factory.
Now, George, you mentioned CEO Kelly Ortberg. What's the word on the street? How has he been handling this new role? I mean, a lot of pressures on him.
Yeah, I mean, I think when it's all done, it's going to be a function of did he get quality improved? Did he improve throughput? Did he generate cash? Did he improve the balance sheet of Boeing? You know, sort of stave off any downgrades. And right now, I'd say the report card would be pretty good for what Kelly Ortberg is doing.
And George, you also told us that, you know, tooling up these factories to crank up production, it's not as easy as it sounds. It's a little bit more difficult than manufacturing an automobile coming down the line here. And that goes to the labor issue. You need some pretty highly trained labor. And coming out of the pandemic, that was a challenge. How is Boeing doing these days on that front?
Yeah, so you know, if we measure it from the throughput in the factory, it looks like it's doing better. We're hearing you know, better sort of noises from the supply chain that labor is stabilizing. I think we see it in the country, right? The labor market isn't as sort of white hot as it was coming right out of the pandemic, especially for you know, some of this manual labor that they're looking for. And so I think that helps stability. That stability allows you to go ahead and train people, improve throughput. So it appears to us, all those indicators that, you know, labor is stabilizing, quality is improving, and that's definitely having, you know, Boeing's benefiting from it.
George, you mentioned deliveries earlier. The Paris Air Show is a huge event for these airlines. Yes, yes. How did Boeing fare coming out of that?
Yeah, so we haven't seen a lot of orders for Boeing recently, and we didn't see any at Paris Air Show, right? They had pulled out. I think just, you know, as they were monitoring the developments of that Air India crash. But we really haven't seen a lot of orders recently for Boeing. I suspect that given the tariff backdrop, you're just not going to see a lot of orders for Boeing until that tariff backdrop gets cleared, right? Boeing has one factory they build 737s at. It's in the U.S. So tariffs between us and the rest of the world always get in the way. That has to get cleared up.
George, great stuff as always. George Ferguson, Senior Aerospace, Defense, and Airlines Analyst. Boeing, stock hit a 52-week high today. So, again, stock finally seeming to get back on its feet here. We're going to have more coming up. This is Bloomberg Good Morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash, and we are being brought to you by Oracle. Attention growing businesses, Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. And this is for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. Whole lot of nothing right now. Stocks mixed a little change a day after we had that broad sell-off yesterday. Now, President Trump did say he would not offer any extensions to the new August 1st tariff deadline. Got that headline on social media in the last hour or so. Karen Manna at Federated Investment, she was a guest earlier today. She says, like it or not, the passage of the big tax bill does give investors a huge degree of certainty.
Despite tariffs looming out there as a factor that needs to be resolved, perhaps less final than some others, I think that overall we've seen a narrowing of the range of outcomes and an overall reduction in the uncertainty.
Right now, the S&P 500 down just about 3 points, 62.27 on the index. The Dow Jones Industrial Average, 103 points lower. The NASDAQ 100 is up 4 points right now at 22,690. Meantime, profits for the Liberation Day quarter, we're going to start to see those appear next week, as Gina was alluding to.
Yep.
Tariffs, again, paid by U.S. importers. They should bite into margins, so we'll see that starting next week. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Lisa and Paul.
Countries that we put a tariff on, they don't pay.
They do not pay.
The importer.
I'll take you both by the hand. We can go to the Port Newark Elizabeth, which is just a few minutes away, and you can look at the tariff sheets and the importers coming to pick up their stuff. They're the ones who fork it over, and
Then the question is,
how does it get passed on? Does it get passed on to the consumers or the people who are getting that stuff, the manufacturers in the U.S. or the business in the U.S., do they just eat that, and how does that impact their margins?
Gina Martin Adams was suggesting
China is not paying anything when it sends its stuff to the U.S.
Got to make sure that reporting is clear, John.
I think I just did.
Yeah, I think you just
nailed it.
Is that controversial?
This is the pet peeve of the day, and we're going to nail it. So we've got our tariff math down correct. John Tucker, thank you so much. Lisa Mateo, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. We were just talking about tariffs, and that's been a cause of a lot of volatility in the stock market this year, although most market indexes are higher year to date, the S&P by about 5 or 6%, so there you go. Even the small cappers are back in the green again, and that's good for new stock market issuance, IPOs. Mike Casper joins us here. He's a Bloomberg Intelligence strategist. Mike, talk to us about the IPO market for some of these small cap companies. What are you seeing so far this year?
Yeah, so it's steadily healing from the dearth of IPOs that happened in 2023. So looking back to that year, it was actually the worst year on record for small cap IPOs back into the 90s, even worse than 2008, 2009, when obviously we were in the middle of the great financial crisis. So 2023, really bad. 24 starting to pick up. 25 has been pretty much a return to trend, right? So the pre-pandemic trend, we're almost back to that, at least on a nominal dollar deal value basis. The best quarter for issuance actually in the second quarter, going back to 2024 or 2021, sorry.
Yep. So how about SPACs? That was a thing back in the day. And I think if my eyes didn't deceive me, I've seen a couple of SPAC news items go across the wire. Are they back to any degree?
Yeah, they're somewhat back, at least in the small cap space. So when I'm talking about that 8.5 billion of deal value, they're still making up a little bit more than a third of total IPO issuance in the Russell 2000. We saw that bubble pop at the end of 2021, and into 2022, we got as low as 20% of total small cap IPO deal value made up by SPACs, but we're back to over a third now.
Now, when we go, when we talk in the breaks here, right? I was trying to find out, okay, IPOs, how do you find out so much? I learned IPO Go. You just head over there,
basic.
okay?
Yep.
And I click it, I head to the terminal, and a lot of stuff pops out, Mike. So explain to me, who does it say as far as like who's leading the list? Is it here? Is it Europe? Is it you know different areas? I mean, who's leading the list as far as IPOs?
Yeah, there's a pretty solid amount of IPOs, at least in the U.S. Returning to trend in the small cap space. In large caps, we've seen a few as well. You know, IPOs or company managements rather really love when there's certainty for stocks, and you're certainly getting that in the large cap space. So there possibly could be a new wave of IPOs into the summer as the S&P 500 is hovering around all-time highs. Company managements always want to IPO into the highest valuation possible. In the Russell 2000, we're still dealing with quite a bit of turmoil, so maybe a little bit shaky there. But again, tariffs really didn't dent the outlook for IPOs. They still came to market in the second quarter despite considerable uncertainty. So we're really seeing a pretty nice recovery, at least here in the U.S.
How are these IPOs performing?
So relative to the index in the Russell 2000, at least, which is my coverage, new issues in the month after coming to the market have outperformed to a clip. About 60% of them have outperformed the market. So pretty decent performance. And the way I look at that is a gauge of risk taking, right? So think about IPOs. They're kind of riskier shares. People haven't really felt them out in public markets yet. And they tend to be a little bit more volatile. So the fact that investors are willing to jump into some of these new issues is a healthy sign for risk taking in the Russell 2000.
Now, can you dig into a little bit? You kind of mentioned this earlier, but why tariffs kind of halted IPOs for a bit, and then when they picked up? Because I remember talking about IPOs, and Paul was like, "Woohoo!" You know, like, "Hey, we're back in business."
Yeah.
So get into why it kind of took that pause and how it's coming back again.
Yeah. So again, when you're putting yourself in the shoes of company managements, really. You would want to IPO your company at the highest valuation possible into a lot of certainty in the market, right? So you'd like things like all-time highs and policy certainty going forward. And tariffs obviously introduced a whole lot of uncertainty to the market. We had a bear market in the Russell 2000, narrowly missed it, at least on closing prices in the S&P 500. So that's really not a good situation for IPOs, but the fact that they still were willing to come to the market in the second quarter as things recovered, I think, is a very favorable sign.
Are there any sectors that stand out at you? Any industries that are coming to market more?
Yeah, so in the Russell 2000, it's always healthcare. There's always a ton of healthcare IPOs, and that's really been the case. These smaller drug companies, especially, they like to look for funding to help move their drugs through the FDA approval pipeline. So there's always a healthy amount of IPOs there. Financials also had quite a bit as well.
Now, this morning I was talking about the Financial Times. I always take things back to shopping. So Shein, it reportedly filed for an IPO in Hong Kong to pressure the UK for a London listing. Do you see this back and forth, you know, going between the Hong Kong and the London listing?
I don't look too much outside the U.S. really, so okay. I haven't been following that as much. But
so, what's the outlook for IPOs for small caps? Is it, bankers always talk about their backlog. What are you seeing out there?
Yeah. So again, if you take a look at the IPO Go function, you can actually sort for announced deals that haven't come to the market yet. And if you look across the whole U.S. market, which is kind of how I would prefer to look at that rather than set hard market cap deadlines, delineations. There's a healthy amount of IPOs that have been announced and are in the pipeline for this summer and later this year. Quite a bit, actually. Again, 2021 is the comp that we're going back to because that was a huge boom for IPOs. The most announced IPOs going back to 2021 we saw in the second quarter.
All right, Michael, thank you so much for joining us. Appreciate that. Michael Kasper, U.S. equity strategist. We had Gina Martin-Adams. She covers some of the bigger stuff, and Michael Kasper covers the small cap stocks, the Russell 2000, which is where a lot of people see a lot of value at different parts of the cycle. So we love getting a few minutes of Michael's time there. Michael Kasper, U.S. equity strategist for Bloomberg Intelligence, joining us live here in our Bloomberg Interactive Broker studio. The Russell 2000, it's up like a fraction of 1% here, but we'll take that on the year. That's on the year-to-date performance. So pretty interesting there. Coming up, we're going to check in with Geetha Ranganathan. She covers all the media stocks, and she's got a preview, Lisa. Okay, she's got a preview of the cable companies, and they're not only losing video customers, but they're also losing the broadband customers, and that is really challenging. All right, we've been waiting for President Trump to convene his cabinet meeting, and we see the room in the Capitol where they are gathered. The cabinet is gathered, so we will go to that when they begin their meeting. But in the interim, we're looking at the market here, Lisa. Not much movement. The indexes are kind of waiting here, so we'll have to keep an eye on that. But I look at the bond market. Yields are pulling up just a little bit, up about 4 basis points at 4.42%. All right, right now, let's go to Washington, D.C., President Trump and his cabinet meeting.
Great, unified, beautiful job. I want in particular, because of what she's gone through this last few days, done an incredible job. As you know, Christy, I'm going to ask you to say a few words about Texas. The first person there was the first person I saw on television was you, actually. And you've worked great with the governor, who's terrific. And you might want to tell a little bit about the trials and tribulations, but we appreciate the job that you and everybody have done. You had people there as fast as anybody's ever seen, so really appreciate it. We all do, and maybe you could say a few words.
Sure. Well, thank you, Mr. President. I want to thank you for your leadership. Texas is strong. And the people of Texas are incredibly strong. They've gone through something that is absolutely horrific. And it is heartbreaking to watch these families suffer the way that they are. As soon as this flash flooding event happened, you know, the governor has activated his emergency responders. Nim Kidd is his emergency management director, who is incredible, and has immediately worked with the local first responders to get help to individuals and get them evacuated, put requests into me. We deployed, sir, right away, as you know, because you and I were talking a lot during this time, the Coast Guard. We also had some assets out of Customs and Border Protection. Our BORTAC teams went in and helped with rescues and clearing debris so that we could get roads open and people get the help that they need. I think when I got there the most, sir, that day, as soon as I arrived on site, was getting a briefing from all the emergency responders, was just how unified they were in focusing on the fact that we're there to save lives. They were there to rescue people, find people who were still alive, and to reunify them with their family members. We as a federal government don't manage these disasters. The state does. We come in and support them, and that's exactly what we did here in this situation. FEMA went to an enhanced level immediately, but as soon as you signed the major disaster declaration, we were able to get them resources and dollars right away, just like you envisioned, through state block grants to help them with cleanup. And we're still there in presence, and FEMA's been deployed, and we're cutting through the paperwork of the old FEMA, streamlining it much like your vision of how FEMA should operate, and it's been a much better response to help these families get through this terrible situation. We still are looking for people. We're still looking for a lot of little girls and other family members that were camping along that river, and they will continue until they find every single person, and we will continue to help them and assist in that. I was surprised when I got there at the camp that day, right after this happened, the parents that were there, the parents that were looking for their children and picking up their daughter's stuffed animals out of the mud and finding their daughter's shoe that might be laying in the cabin, and just hugging and comforting people matters a lot. I'm extremely grateful for God's hand in that whole situation, because hundreds and hundreds and hundreds of people were saved. And this is a time for all of us in this country to remember that we were created to serve each other. God created us to take care of each other. And that when we do that, we are happier, we are more fulfilled, and we can walk alongside people on their worst day and help them get through it and come out the other side, knowing that we can continue to live a life that God has purposed for us. So they're grateful for you. Several times the day after the flooding, you and Melania were on the phone with me, and I want to thank you for that. That meant the world. I was able to tell many of those folks that I had been visiting with you, and that you had said, whatever they need, Christy, let's deploy it and get it down there and be helpful. And on Sunday, when the families were waiting at a church to identify their children's bodies, Franklin Graham and I called in and prayed with the families and read some scripture with them, and he was incredible in making himself available to that as well. We'll be back down there in a couple of days and continue to do all we can, but this is an unprecedented event. It really is. There's been tragedies like this around the country, but everyone is unique in different situations, and the response the federal government had supporting the state through this, I'm proud of the people that stepped up and immediately came. The Coast Guard, when they came in, they had a difficult time even getting the aircraft in and landed. They had to try several times in the weather to get it in and deploy. And I think we've heard about, our one Coast Guard member that was responsible for saving over 165 people, but that entire crew did incredible work. And all the first responders there did incredible work. And I know people are getting tired now, but they're getting reinforcements and volunteers are showing up. And I just want to commend the governor and his team for being the leaders. And they're so thankful that you're letting them make the decisions and manage the response like it should be. And then us supporting them with the resources of the federal government. We've already deployed dollars to the state, much like the block grants that you've talked about. Right. So they're grateful for that, sir.
There's never been a wave like this outside of the breaking of a dam. Because this was almost a wave that ended up being 30 feet high, more actually. Now with a dam you can understand it, but this approached almost with that speed. When you see a dam break, it's not a pretty sight. It wipes out everything, and this is the kind of thing that built up so fast. And it's happened 2 or 3 times before over the years, but not to this extent. But tell them when you met the father who was picking up the daughter's clothing.
I had walked through the cabin where all the little girls died, and I had kind of fallen apart in there, but I walked out of the cabin, and a gentleman was standing there, and he said, that man over there needs a hug. And so I walked over to him, and I hugged him, and I said, do you work here? And he said, no, my little girl was in that cabin. And he said, and I just found her best friend about an hour and a half ago. She had passed away. And he just fell apart. And so then we just hugged and talked for probably an hour about that. But then there was the grandpa was there looking for his granddaughter as well. There was a dad there of one of the counselors. The counselor was alive, but she was dealing with the fact that she had hung on to some of these girls and was trying to keep them out of the floodwaters and had gotten hit by something and had lost 2 of the girls and wasn't able to hang on to them and was going to live the rest of her life thinking about that moment when she wasn't able to hang on to these girls. But these parents were picking up their kids' belongings out of the mud and throughout the camp and putting them in bags. And then one of the dads said, I knew 50 of these girls here. So I knew that was her dress and my daughter's friend's dress. So he was picking it up and putting it in a bag to return to her parents. And so it was and then the director was there comforting everybody who had lost his father the night before too. And he was still there trying to facilitate all of these parents grieving their children and find them. So the strength of people is incredible. One of the things that I asked there today, that day, was that they all have escorts or counselors when parents come in. So from that point, that when they came into the camp, that they have somebody with them when they're going and looking for their children's belongings or looking for their children. And so very emotional, but also just so tragic.
The relationship with Texas and the governor has been obviously very good for years with me, but the relationship with Texas and their first responders and us with our first responders and lots of other people, and we brought in a lot of helicopters from all over. We had a lot of helicopters. It was actually dangerous, a lot of helicopters up there, but they were real pros, and they were responsible for pulling out a lot of people, and we got them there fast. And Texas had some good ones too, but the response has been incredible, and the fact that we got along so well, I don't even think that's a political thing, but we got along so well, and it was so unified. I think a lot of lives have been saved. That could have been as bad as it was. You could have lost double or triple. This thing was just really horrible. Well, congratulations on a great job, and appreciate it. I know you're going down. I'll be going down on Friday with First Lady, who will be taking a trip, and we don't want to get in anyone's way because that's what happens. The president goes and everyone's around focused on. I don't want anyone to focus on us, but it's possible they could have somebody saved still. There's a lot of areas. It's a big area, and probably unlikely at this point, but there could be. They're thinking there could be the possibility, but what a tragic situation. A good job, and we'll see you on Friday, and we'll finish out the day here. I think you've been reading a lot about. It's a terrible topic when you talk about financial after this, but we have a big country, and we've been doing very well. The tariffs, as you know, are starting to come in at record levels. Tremendous amounts of money are coming in to our country. We never did that before. We're not used to it. We only have tariffs going out. We only adhere to the rules of other nations who charge us tremendous tariffs because we were led by stupid people or people without any business sense. And I'd like to ask Scott, you could maybe talk a little bit about how well we're doing with regard to the money coming in. And the big money will start coming in on August 1st. I think it was made clear today by the letters that were sent out yesterday and today. Go ahead, please.
Yes, sir. We will have taken in about $100 billion in tariff income thus far this year, and that's with the tariffs, the major tariffs not having started till the
Treasury
second
Secretary
quarter.
Scott Bessent joining President Trump in the cabinet meeting live on Bloomberg.
By the end of the year, we don't agree with CBO scoring, but for those who do, the CBO scored tariff income over the next 10 years at $2.8 trillion, which we think is probably low. And sir, under your leadership, we're witnessing.
And they gave us no credit during this last little, the great, big, beautiful bill. I always use the word great. I add that to it because it really is what it is. It's never been anything like it, actually. And I want to thank all the Republicans that voted for it. And I want to, scold the Democrats because they're voting for tax cuts. They're voting for no tax on tips, no tax on Social Security, no tax on overtime, and many, many other things far more important than that. Great health care, and frankly, every Democrat should lose their election because it was purely political vote. They were told not to vote for it. So think of it: we got 218-2, and then with the Senate, we had 50-3. Democrats didn't vote at all, not one positive vote, with all of the good things in there. Economic development money, tremendous border money. Now you're loaded up on the border, and I don't think we're going to need so much of it because we had zero come in last month, so I'm not sure how much of it we want to spend. You may think about that. You may actually think about saving a lot of money because the wall's been largely built, and it obviously worked. But you may want to think about that. But so I think it's incredible when I watch the Democrats, and they have standard lines like they had Russia, Russia, Russia. They had the laptop from hell. It all came from Russia. They make things up and they go with it, and they feed it to you people in many cases. And they said, "Here's a line," and I hear the new line is death. Oh, it's death. Everyone's going to die. It's nothing to do with that. In fact, we're saving our country. Death is from allowing 25 million people into our country, of which 3 or 4 are stone cold, hard criminals. 11,888 are murderers, many of them committing more than one murder. That's death, and the Democrats did that. Joe Biden did that by allowing people to come in here just totally unchecked, unvetted, open borders, open borders. The whole world was dumped into our country from prisons, from gangs, from mental institutions. We have many people walking the streets, walking in areas that we don't know anything about, that came out of insane asylums. They released their the insane asylum population into our country, and it's amazing the job that you and Tom Homan are doing, by the way, on that. but we have to get them out. And we have no choice. We have to get them out, and we are getting them out. And so, Pete, you want to tell them about our great military and how well we did with respect to the bombers and the B-2? We had the pilots here 2 days ago, and they were incredible people. Go ahead.
Yes, sir. Truly a historic mission and demonstrated the skill and courage of the United States military. From those B-2 pilots and families that we had a chance to meet, sir, to the fighter pilots, to the refuelers, to the maintainers, to the air defenders who defended the base. What was demonstrated on the world stage was American
This is
military
Defense
might
Secretary Pete Hegseth updating the president live.
Fordo and Esfahan and Natanz that took notice in Iran. It was the rest of the world. That we have a decisive commander-in-chief willing to use these capabilities, which are the best in the world, as the president pointed out. No one else could have done what America did there on that night, and everyone took notice of that. With the one big beautiful bill, sir, we've got $150 billion additional to invest in Golden Dome and all the other weapon systems and stockpiles and shipbuilding priorities of yours. Another month, another historic recruiting bump. It's not just the Army and the Marine Corps anymore. It's the Navy, the Air Force, and the Space Force, all historically ahead of where they've ever been. So historic spirit inside the military. We had a chance to be at NATO, Marco and I, and see how the world responds to us saying it's time for you to shoulder the burden and take the lead for your continent. It only happens with President Trump leading. And we're proud to be a part of what's going on at the border, sir, with now a 4th national defense area where we're helping get to that number 0 and securing the border. But that mission, Operation Midnight Hammer, re-established deterrence. It reversed what happened in Afghanistan. You saw the debacle of what Biden allowed to happen in Afghanistan and what that did to our image. President Trump said, with Operation Midnight Hammer, we're reestablishing American leadership and deterrence, and we're proud to be a part of it, sir.
And our so-called enemies were watching. They watched every minute of it. They watched. There was very few people that weren't watching, actually, but they watched every minute. It was a perfect military performance, the likes of which we haven't seen in a long time. I mean, if you compare that to the same country, the hostages from years ago, Jimmy Carter, was unfortunate for Jimmy Carter. He was a nice man, but with the helicopters going down, the sandstorms, the prisoners, they get captured, then the election and the prisoners and Reagan and all the problems. It was nothing but problems. And that was a failure. And ours was not only the pilots. I mean, those machines flew for 37 straight hours. They didn't stop. They went skedaddle. You know the word skedaddle? It means skedaddle. They dropped the bombs, and somebody said, skedaddle. Let's get the hell out of here. And every bomb hit its mark and hit it incredibly. And as you know, the Atomic Energy Commission said it's gone. That place is gone. We had a lot of fake reporting, mostly from CNN, where a scammer a writer for CNN, who should be fired, by the way. She was involved with the 51 fake intelligence agents, if you remember that. She did that story, created a story out of it. She created a story out of the laptop from hell, saying it came from Russia, but it actually came from Hunter Biden's bedroom, or worse. Just a scammer, and she's still at CNN, which is pretty amazing. But we'll ask you a question about her. But they came up with this concept that maybe the attack wasn't that good. And I saw it happen right after the attack. I saw this person on CNN. I actually watch. I like to watch the enemy. You learn from the enemy. And I watch because you have to know where they're coming from. And I watched her say, Anderson, I'm hearing stories that maybe they didn't hit their target. Maybe it wasn't that good a hit. And they were hearing stories. The next day it was a little more, and the next day a little more. After 3-4 days, she was saying, I don't know. I don't think it was that. Except by that time, everybody knew it was hit perfectly. The evidence is in the planes. The evidence, the pilots are their best evidence. But they actually came out of their plane because they were here the other day, and they said, it was so sad. We did such a good job. We flew into very dangerous airspace. I'll never forget, we were in the Situation Room, and they said they have entered Iranian airspace, and everyone took a deep breath because they had more missiles pointed at them, but the equipment is so good, it's stealth, way up in the air, and it was stealth, and they went right through that, and they sort of, by the time they found out they were there, they were already gone. That was the word skedaddle, get the hell out of here. But they were right in the most dangerous airspace in the world, and they took those big, beautiful, very fast. They're unbelievable planes. I mean, they become really beautiful works of art. I always thought they sort of were cool, but now they look better than just cool, don't they? Huh? But they dropped the loads, and literally they would hit. If you look at this table from here to there, they had a half a refrigerator door is the way to best explain it. Take a refrigerator door, average size, cut it in half. That was their target. They hit every single one. Then we had 30 missiles, Tomahawk, shot from submarines 300 miles away. Every one of them hit their target. It was a perfect mission. Then they came back, almost 37 hours. Every plane worked perfectly. The mechanics were here too. I said, you got to get the mechanics here. We didn't have any problems. If you remember, they had a lot of problems with the helicopters, but they did fly through a dust storm, which they shouldn't have done. Sometimes you say, let's go back and try it on a nicer day. Dust and sand don't work well with helicopters if you know much about helicopters, but that was a horrible embarrassment to us. Then we had Afghanistan, which I think was the most embarrassing moment in the history of our country, and we would have gotten out. I was the one that got them down. I would have kept Bagram, the big air base, which right now is controlled by China, one among the most powerful runways in the world, thick with concrete and steel. Anything could land, and right now they were 1 hour away from where China makes its nuclear weapons. I was keeping it. Outside of that, we were leaving, and I would have been out faster than them, but we would have gotten out with strength and dignity. Instead, that was the most botched up mess I've ever seen. They left all that equipment behind, and every year they have a parade running down some third-rate street with the equipment. It's supposed to be Fifth Avenue. It doesn't work. But with all that equipment that they left, they should have taken every ounce of it. I was taking every ounce. I said every screw, every bolt, every nail you take out of there. And Millie said, I remember one time, sir, we're better off leaving the equipment. Why? Well, it's cheaper. I said, cheaper? You mean it's cheaper to leave a $150 million airplane rather than flying it into Pakistan or India or someplace, or just flying it straight home is cheaper? Yes, sir. That's when I knew he was an idiot. Didn't take long to figure that one out. But they left all that equipment, but they left their dignity behind. It was the most embarrassing moment, in my opinion, in the history of our country. Not that we got out. We should have not been there. But that we got out the way we got out, with great embarrassment and death. You had 13 young people. I've gotten to know their families very well, but you had hundreds of people killed that nobody talks about. You had the other side, many people were killed. Many people are walking around with no legs, no arms from that whole thing. They left from the wrong airport. They should have left from Bagram, because Bagram was a big base with hundreds of miles of fencing and territory around it. Nobody would be able to get near it. And they left. So, we've done a great job, and I think people are really starting to see it. They're starting to appreciate it. Pete's done fantastically. That mission was a work of art. And I have spoken to some of our perceived, I don't know if they're enemies, but they're perceived as being potential enemies. And they essentially said the same thing. Very impressive. There wasn't a thing that we didn't lose an engine. We didn't lose it. They landed and they were cheered. But the sad thing was they were cheered, and one of the pilots said, we were a little concerned because when we got out, we were told that on television they were reporting that we may have missed our targets. Sir, we hit every target. That's what I do for a living. We hit every target. In fact, when the bombs hit, a yellow haze came over the horizon that I've never seen before. It just lit up the whole horizon, brighter than the sun. It was like looking into the sun. He goes, we hit our target, because you know what that was exploding. And but they were a little downbeat because they listened to that fake CNN reporting and the fake New York Times. They worked together to try and say that it wasn't perfect. They couldn't say what they missed. All they could say is, maybe it wasn't perfect. And you ought to fire that reporter immediately. You should fire her. Real fake. And so I just want to congratulate those pilots. And, a lot of people don't like bringing things like that up. I do. I always like confronting, because otherwise the public doesn't know that you're a bunch of crooked people. But they know, they've learned. And the media has to straighten out their act. The media is down to 17% approval. You got to do a little better than that. It's important for the country that you do better. I think they ought to make a lot of changes. I think changes are going to be made to the media, but it's hard to have a really successful country if you have a corrupt media, and we really have a corrupt media. And nobody really knows why. I mean, why would you want to have open borders and criminals pouring into our country? Why would you want to have men playing in women's sports, transgender for everyone? You know, you'll have to figure that out. But some of you don't. I mean, I'm looking at some people, they love the country, but I look at other people and they can't. But we're really proud of our military. It was, and the people that maybe don't like us or want to play games with us, because I think that had you not had the situation in Afghanistan, I don't think Putin would have gone in. I think when Putin looked at how stupid and incompetent that operation was, he said, wow, this might be a chance. And we're dealing with him now too. We're not happy with Putin. I'm not happy with Putin. I can tell you that much right now, because he's killing a lot of people. And a lot of them are his soldiers and their soldiers, mostly. And it's now up to 7,000 a week. And I'm not happy with Putin. Okay, any questions? Yes.
Yes, sir. You just said that you're not happy with Vladimir Putin. Is there anything that you plan to do to act on that feeling of
Well, I wouldn't be telling you. Don't we want to have a little surprise? You know, one of the things we did with the attack is that, and you asked that question, I didn't mean to be rude, but I'm in a rude because I'm looking at some of these crooked people up here. So I'm rude, but your question was asked very nicely. But one of the things we did is we went over every fact. We wanted to get every fact straight. We wanted to have the distance straight, the number of pilots straight. Everything had to be correct, because we want to be, this was a very important mission. If we failed on this mission, it was beyond the war that, you know, obviously we had with Iran and Israel, and a lot of hatred, a lot of years and years of hatred, centuries of hatred. People have never seen anything like it. So we wanted to be correct with all our facts. So, you know, what I was doing is just asking, it would be great if the media would be correct with their facts. That's all we ask for. So, hey, go ahead. So finish it up.
Oh, yes. Just sort of turning back to Russia. If there's anything that you would signal about your displeasure with them.
Well, look, I'm very unhappy with them. There's no reason for this. It's turned out to be tougher, but it's only tougher. And I will say the Ukrainians were brave, but we gave them the best equipment ever made. We gave them the anti-tank busters that knocked out tanks. I mean, you just aim them in the direction of the tank and the tank is gone. We gave them missiles, the latest and the greatest. They were able to shoot down a lot of things that would have normally wiped out. You know, probably would have been a very quick war. It would have been a war that lasted 3-4 days, but they had the benefit of unbelievable equipment. And Europe gave them, and we gave them far more, because Biden shouldn't have done that. He should have equalized. And we should have given them the same, or we should have given actually less than Europe. It affects Europe much more than us, but we're in there for over $300 billion. Europe's in there for over $100 billion, but still, Europe gave a lot. And I will say this, the Ukrainians, whether you think it's unfair that we gave all that money or not, they were very brave, because somebody had to operate that stuff. And a lot of people I know wouldn't be operating it, and they wouldn't have the courage to do it. So they fought very bravely. But we gave them the best equipment in the world. We make the best military equipment by far. There's nobody close. You look at other equipment from other countries, it's not even close. That's why everybody wants to buy our equipment. And that's why we're going to step up these contractors now that make it, and they're brilliant, but they make it too slowly. And we have to step them up, Pete, and let them make it at a much higher rate. Unfortunately, we have to do that. But if you look at our Patriots, if you look at our Tomahawks, if you look at our, well, what we do with tanks is, you wouldn't want to be driving a tank. You would feel nice and secure, but they are javelins, they're called. And I gave them the javelins. Remember, they said Trump gave the javelins and Obama gave them sheets, right? They called Obama at that time. Barack Hussein Obama, if you haven't heard, did a terrible job. But that was a war that should have never happened, and a lot of people are dying, and it should end. And I don't know, we could we get a lot of bullshit thrown at us by Putin, for you want to know the truth. He's very nice all the time, but it turns out to be meaningless.
Do you want to sanction him? Lindsey Graham has a sanctions bill on Russia. Do you want him to move ahead with that?
I'm looking at it, yeah. I'm looking. The Senate is passing and passed a very, very tough sanctions bill. Yeah, I'm looking at it.
Can you sign that?
It's an optional bill. It's totally at my option. They pass it totally at my option, and to terminate totally at my option. And I'm looking at it very strongly.
Yesterday you said you want to see more weapons.
The Council of Economic Advisors released a new report saying that imported goods have actually decreased in price from December through March. Well, my question is, the Fed chairman keeps saying that tariffs are going to cause price increases. Are the prices just not passed through yet? Yes, exactly. Are the prices?
You do a better job.
Thank you. Are the prices just not passed through yet?
No, I think what's happening is everything's evening out. You know, when we charge, see what people don't understand, the other countries have been charged, almost every country charges us tariffs. We had deficits with everybody for years, for decades. And we were like this big monolith that made bad deals with everybody. We rebuilt South Korea, and we stayed there. It's okay, we rebuilt it, and we stayed there. And they pay us very little for the military. I got them to pay billions of dollars, and Biden then canceled it when he came in. I said to South Korea, as an example, we give you free military, essentially, very little. And I think you should pay us $10 billion a year. And they went crazy. But they agreed to 3. So I got 3 with a phone call. And I was satisfied. I said, but next year we have to talk. And then we had a rigged election, and we never got to talk. And you know what Biden did? They probably went to him and they said, listen, Trump treated us terribly, and we shouldn't be paying anything, and he cut it down to nothing. So that's what happens. It's ridiculous. That's the other thing. We're talking to countries about contributing to the military, not only just paying more in NATO, but contributing. We have 45,000 soldiers in South Korea. We have 45,000 soldiers in Germany, 52,000 actually. And that's a huge economic development for them. That's tremendous amount. That's like having a city. It's tremendous money for them, and it's a tremendous loss for us. So we're talking, in a very nice way, we're talking to them about it. It's very unfair. We supply the militaries to many very successful countries. I mean, South Korea is making a lot of money, and they're very good. They're very good, but, they should be paying for their own military.
President Trump, could I ask you a question about Jerome Powell as well, and then a question to the Attorney General? Jerome Powell, and then I have a question for the Attorney General. Jerome Powell, who you've been pressuring to lower interest rates, he's facing accusations of lying to Congress, which is a potential crime about the opulence.
He should resign immediately. We should get somebody in there that's going to lower interest rates.
Do you want congressional Republicans to look into that? Do you want congressional Republicans to investigate and pursue and punish?
I think he's terrible. I think, look, we're paying, I call him too late. T-O-O, too late. Like Too Tall Jones for the Dallas Cowboys. Too late. He's always late. But he wasn't late with Biden before the election. He was cutting him like crazy. It didn't help too much, did it? But he was cutting him like crazy before the election with Kamala. And Biden, he was trying to get them in, I guess. I don't know. He was recommended by somebody that worked for me. I like you better.
If I can ask the Attorney General a question too, President Trump.
Sure.
Your memo and release yesterday on Jeffrey Epstein, it left some lingering mysteries. One of the biggest ones is whether he ever worked for a American or foreign intelligence agency. The former Labor Secretary, who was Miami U.S. Attorney Alex Acosta, he allegedly said that he did work for an intelligence agency. So could you resolve whether or not he did? And also, could you say why there was a minute missing from the jailhouse tape on the night of his death?
Yeah, sure. Could I just interrupt for 1 second? Are you still talking about Jeffrey Epstein? This guy's been talked about for years. You're asking, we have Texas, we have this, we have all of the things. And are people still talking about this guy, this creep? That is unbelievable. Do you want to waste the time, and do you feel like answering?
I don't mind answering.
I mean, I can't believe you're asking a question on Epstein at a time like this, where we're having some of the greatest success and also tragedy with what happened in Texas. It just seems like a desecration, but you go ahead.
Sure. First, to back up on that, in February, I did an interview on Fox, and it's been getting a lot of attention because I said, I was asked a question about the client list, and my response was, it's sitting on my desk to be reviewed, meaning the file along with the JFK, MLK files as well. That's what I meant by that. Also, to the tens of thousands of video, they turned out to be child porn downloaded by that disgusting Jeffrey Epstein. Child porn is what they were. Never going to be released, never going to see the light of day. To him being an agent, I have no knowledge about that. We can get back to you on that. And the minute missing from the video, we released the video showing definitively the video was not conclusive, but the evidence prior to it was showing he committed suicide. And what was on that, there was a minute that was off the counter. And what we learned from Bureau of Prisons was every night, they redo that video. It's old, from like 1999. So every night the video is reset, and every night should have the same minute missing. So we're looking for that video to release that as well, showing that a minute is missing every night. And that's it on Epstein.
Mr. President, on the tariffs again, on August 1st, you've said it is the deadline. What incentives do countries have to negotiate? It seems that deadline keeps moving. It was April 2nd, now it's...
We didn't move that. It's always been August 1st, that's when we're paying. A statement was being put out today, and I put it out just to make it clear. It wasn't a change, it was August 1st. We don't change very much, every time we put out a statement, they say he made a change. I didn't make a change. A clarification, maybe. No, August 1st they pay. And everybody pays, everybody has to pay, and the incentive is that they have the right to deal in the United States. If they don't want to, they don't have to pay, and they don't have to deal here. But if they want to buy and make a lot of money and sell in the United States, they have to do that. If you go back and look at some of the good presidents, our country was the wealthiest, proportionately the wealthiest, from 1870 to 1913. It was an all-tariff country. We didn't have income tax. That came in in 1913. We had tariffs. And we had so much money we didn't know what to do with it. We had, we had a couple of presidents that were very, very strong. McKinley, I guess, more than anybody, but he was the tariff king, but he was very, very strong. So to say it, he made a fortune for this country, became very rich, and then Teddy Roosevelt went out and vice president, and he spent the money. And they said Roosevelt was a great president. And let's say he was a great president, but the money was paid by McKinley with tariffs. Tariffs are charged by other countries at levels that are ridiculous. And I call those other countries, and every one of them is willing to give us everything now, by the way, just so you know. Sir, we'll charge you no tariffs, nothing. We'll give you everything. We'll give you access to our markets. We'll give you everything. Is that a correct statement, Scott?
Yes, sir.
Howard, would you say that's a correct statement?
Exactly correct.
It's like they just don't, because they're very spoiled, because for years they ripped us off and we didn't have a president that understood it, or Secretary of Treasury or Secretary of a lot of different secretaries are involved, but certainly Commerce Secretary was, not doing their job. I don't know about Kelly, she's small business. We'll keep it that way, okay? Her small business is bigger than almost all big businesses. But no, they are very respectful of our country. But the incentive is that they have the right to do business with us. Without that, they don't have the right to do business. And that will be okay, too.
Will we hear in the next 24 hours, will we hear a flurry of deals that are finished?
We have a lot of them going out. But the deals are mostly my deal to them. We're picking a number that's low. We don't want to hurt them. And fair. We're picking a number that's lower than, in most cases, lower than what they charged us. But it's amazing when you've paid all this money for years and they get one president that's a little bit different and a little tougher on this subject, and they're willing to drop everything they've been charging us for years and years. We have countries going, we will have you don't have to pay any tariff to come in and do business. They're giving us total access to their countries. They gave us no access to the country. They say, well, you cannot go into our country. Okay, now we will give you total access and you don't have to pay any tariffs. but please don't charge us tariffs. And we don't like that deal. So the letters I send out are, we have made some deals. We can make a lot more deals. It's just too time-consuming. It just makes it more complicated. And we can do things over the years too. You know, we're not hard line. But it's about time the United States of America started collecting money from countries that were ripping us off and laughing behind our back at how stupid we were. Okay? Thank you.
Mr. President, on the tariff issue, so you've talked about India coming, but then a couple days ago you issued a new tariff threat to members of the BRICS countries for if they aligned with anti-American policies.
10%
That would be India, Brazil, Russia, South Africa.
They have to pay 10% if they're in BRICS. Because BRICS was set up to hurt us. BRICS was set up to degenerate our dollar and take our dollar as the standard, take it off as the standard. And that's okay if they want to play that game, but I can play that game too. So anybody that's in BRICS is getting a 10% charge.
Is that immediate, sir, or is that if they engage in some behavior?
Well, if they're a member of BRICS, they're going to have to pay 10% tariff just for that one thing. And they won't be a member alone. I thought BRICS was, you know, I said this about a year ago, and it largely broke up. But, you know, there are a couple that hang around, but I thought it largely broke up. BRICS is not, in my opinion, not a serious threat. But what they're trying to do is destroy the dollar so that another country can take over and be the standard. And we're not going to lose the standard at any time. If you have a smart president, you will never lose the standard. If you have a stupid president like the last one, you would lose the standard. You wouldn't have the dollar as you. And if we lost the world standard dollar, that would be like losing a war, a major world war. We would not be the same country any longer. We're not going to let that happen. The dollar, you ever hear the expression, dollar is king? The dollar is king. We're going to keep it that way, okay? I'm just saying, if people want to challenge it, they can, but they're going to have to pay a big price. And I don't think any of them are willing to pay that price.
Does that jeopardize the...
Thank you, Mr. President. Are you optimistic about reaching a tariff deal with the European Union soon?
Well, the European Union has been speaking to us, Ursula and the whole group, and they've been very nice. They treated us very badly until recently. Now they're treating us very nicely. It's like a different world, actually. They've treated us very badly. They were among the toughest to deal with. Actually, in many respects, they were much worse than China. Look at what they do to our companies. They sue Apple. They sue Google. $17 billion they got from Apple on a lawsuit that they didn't have a case. They have, you know, judges that are European Union judges. And they ruled, they take so much money away from our country in terms of that, in terms of other things that they do. They're very tough. But now they're being very nice to us, and we'll see what happens. We're probably 2 days off from sending them a letter. We are talking to them. I just want you to know, a letter means a deal. You know, a lot of people said, we got 200 countries. We can't meet with 200 countries. We have a few trusted people that know what they're doing, that are doing a good job, but you can't do it. You have to do it in a more general way, but it's a very good way. It's a better way. It's a more powerful way. And we sent them a letter. You read the letter. I think it was well crafted. And mostly it's just a little number in there. You'll pay 25%, 35%. We have some at 60, 70. Those are ones with massive, you know, where we have massive trade deficits because they've treated us very badly. But I would say in every case, I'm treating them better than they treated us over the years. Don't you agree with that? I do. I could have done much. I could have been much harsher. I don't want to do that. We want to have relationships, but in every case, they treated us far worse than I'm treating them. I'm treating them very good. I could go higher with the tariffs, but I don't want to hurt them. That's why when you just read it, you come up with the number. It's so incredible that prices are actually going down. Just so you know, when I got in, everyone said, "Oh, eggs are going through the roof." I was in for about 4 days, and they started screaming at me about eggs. I said, "That's Biden's problem." I didn't know about eggs, but eggs went up about 5 times. You did a fantastic job, and we ended up shortly getting. In fact, for Easter, they said go out and buy plastic eggs. You can't use real eggs. Well, we bought 200,000 eggs for the White House for the Easter egg hunt that we have at the White House, and there were eggs. We had the price down, and now the price is lower than it was before. We did a good job with eggs, but we did a good job with groceries. Our prices are down in this country. A big part of it's oil. The oil, you had a couple of places last week, you had $1.99 for oil, for gasoline. Nobody thought they'd see that. I want to get it lower if I can, but we've done a good job. You've done a very good job. Do you want to say a couple of words about that, you and Chris, about what's happening with energy?
Well, absolutely, but I would say on the pricing side, President Trump, the fact that you've endorsed and supported a policy of energy dominance, that sends a signal to the market that we're going to have more supply. You talked during the campaign about inflation being a country buster. You've broken in the back of inflation.
Interior Secretary Doug Burgum is weighing in now. This is live coverage of President Trump's cabinet meeting at the White House.
Heading into the 4th of July, these were the lowest gas prices at the pump in 4 years. And again, for Americans, this is like hundreds of billions of dollars that stay in their pockets because we lower the price of gas at the pump. And when we lower the price of energy, it lowers the price of food, it lowers the price of the clothes you wear.
It's the biggest thing.
It's the biggest thing.
It's like a big tax cut. When you get energy down, every 50 cents is like a massive tax cut, and we've gotten it down much below that. You know, we had great energy, great low prices, everything else. When the election turned over, I'm trying to be nice about it. It turned over, shockingly, but nevertheless it happened. Energy started going up, and it went up really bad, and then he went back to the Trump policy. The problem was they didn't know how to do that, and he lost it. He lost that sucker. That big sucker was out of control, and his energy prices went way up, and that's what caused it. But it was also stupid spending. They spent money like, they used to use the term drunken sailors, but I won't use that term. Although it is very descriptive, I won't use that term. I refuse to use it. But they spent money at levels that nobody had ever seen before, and trillions and trillions of dollars wasted on the Green New scam, greatest scam in the history of our country, other than maybe Russia, that might have been. But the Green New scam was the single greatest scam in the history of our country, and continues to be, but it's weakened badly. It's hobbling along because people are finally getting it. But they spent trillions of dollars on the Green New scam, getting nothing for it. Devised by a couple of young people that weren't even good college students, you know? Not even good students. Check out their marks.
Jobs. Can I ask you about the latest jobs report?
On what you said last night. You said you
The last jobs report, in the last jobs report,
Ukraine.
Mr. President, in the last jobs report, the manufacturing jobs actually lost 7,000 jobs. When will the investments that you've been talking about have an effect on manufacturing?
We're building the plants now. About 7 have started. We're going to have hundreds started within a short period of time. Lee Zeldin, who may be the most important man in this room, I'm sorry, but he's the one that gets the permits, whereas he's the one that has to get the permits for the plants and the factories, and permits that used to take 5 years, he's getting in record-setting times. AI, we're leading China a lot in AI, and if we go with this, you know, I'm allowing the plants to build their own electric. I'm allowing them to become an electric utility, so they can produce their own electricity, because we need double to be successful with AI, which is the biggest thing now. We need double the electricity that we have, which is hard to believe. We need even more than that. And they're building plants with their own electricity substations. They don't have to use the grid. And anything they build extra, they're putting into the grid. So we're supplying the grid with brand new electric sources. And you know, it's funny, when they came to see me, they never even asked for that. I told them about it. The reason they didn't, they thought that was an impossibility. You're not allowed to build your own electric. These are massive investments that are being made in building electricity for their plants. And they're going to have, I think, Doug, a lot of electricity left over. And that electricity is going to be passed into the grid and give us no more, you know, like you look at California. They have blackouts and brownouts every week. They're totally out of control. They have a really incompetent governor. Where's Chris? Is he here? Do you want to speak to the subject?
Yeah, I think a huge thing in the One Big Beautiful Bill, Mr. President, because of your leadership, is the ending of these subsidies, as you call them, the Green New Scam. That saves our country $500 billion over the next 10 years. But American taxpayers were paying twice.
Energy Secretary
They're
Chris
paying that
Wright now
money,
speaking
$500 billion
in the cabinet
in
meeting.
subsidies,
This is
and
live
they
from the
were
White
paying
House
more
on Bloomberg.
expensive electricity price. If you subsidize something, you should at least lower the cost of it. But in this case, we were subsidizing something and paying more for it. So the one big beautiful bill had two huge things: ending wasteful spending. Wind, solar, and batteries combined are 3% of U.S. total primary energy. 3% for $1 trillion, another $500 billion coming. That's just not a good investment, hurting our businesses, hurting our consumers. And the one big beautiful bill also unshackled oil, gas, and coal development in the United States, onshore and offshore. Secretary Burgum has been working tirelessly on how, by getting the government out of the way, private businesses will develop more resources in the United States, lowering costs for American consumers and making much better leverage for the United States to help our allies abroad and reduce the power of our adversaries abroad. So just a huge win on the energy front all around, and I thank you for your leadership.
We're setting records.
Russia, can I ask you a question on Russia?
There'll be nothing compared to what they'll be in about a year from now, but we're setting records. And wind is a very expensive form of energy. It's very bad for your beautiful surroundings, the plains and the valleys, and the birds are dying all over the place. You know, the whole thing is a disaster. They're almost exclusively made in China. Not that I have anything against China, because I don't have a great relationship with President Xi, but I asked him, how many wind farms do you have? He makes them, but they don't have a lot of wind farms, I'll tell you, very, very few. And wind is tremendously expensive and is very ugly. And if you own a house that's inside of a windmill, your house is worth less than half. And you hear noises. And interestingly, in New England, you probably read, where for 50 years they had 2 whales washed up, 50 years. And last summer, they had 14 washed up. Now, I'm not saying that's the wind farm that was built, but maybe it is, right? Probably is. It's tremendously expensive, and it can only be done with subsidy. You know, I know a man that's in that business, and one of the biggest in the world actually runs a company that builds these stupid windmills. And he said, I hate the business because it's the only energy where you need subsidy. He said, energy shouldn't need subsidy. You should make money with energy. So wind. The other one is the solar, those big solar fields. They're taking our farmland. Our farmers are like mortified by it. They hate it. It's very, very inefficient and very ugly too. You know, probably better than a windmill, but you go around and you see all these things that are 3 miles long by 3 miles wide, and you say, what the hell is that? And it's a lot of plastic from China. It's plastic, black plastic from China. Now, we want to be smart. We're going with, look, China right now is building 58 coal-fired plants, 58 big ones. They have 62 on the books to build. We've reintroduced clean, beautiful coal, because, you know, you can do a lot with coal now, clean, beautiful coal, and natural gas, and all of the other things that we have. But we don't want wind, and we don't want solar, because they're a blight on our country. They hurt our country very badly, and smart countries don't use it. Solar sounds good, I will say, and I like, on occasion, you'll see a roof which is made of solar brick, but it's a smaller use. We need the kind of thing that's going to fire up our plants, and it's not going to be wind, you know, that is very intermittent, as you probably know. But they've spent a fortune. They've spent trillions of dollars on this stuff. And I'll just give you one other story. A friend of mine is a very successful guy. He went back to see his mother in Minnesota, hadn't seen her in a long time, and he wasn't back for 10 years, which isn't a nice story. I mean, you don't see your mother for 10 years. She's got some difficulties, which I know the guy, he does have some difficulties. He's very successful, but probably not the nicest person. It was actually longer than 10 years, but he went back and he told me he wanted to go and look at the valley. There's a valley in Minnesota that he thought was so beautiful. And I hadn't seen it in a long time. He's driving along the road. He said, oh my, I'll use the word gosh, oh my gosh. He said, oh. He said, it looked like a junkyard. You had 159 windmills. They were all over the place. Some were old, some were newer. different companies, different shapes, different sizes, different colors. Many of them were terminated meaning closed. You can't take them down because the environmentalists don't let you bury the blades because they're made out of a fiber they say is bad for the earth. So they want you to put them up, but they don't let you take them down. But many of them were turned off. He said it looked like a junkyard. Go to Palm Springs, California, and take a look at that pile of junk. And you go into a wealthy neighborhood. Before you get there, you have to ride through hundreds of windmills that are, most of them are turned off. They're rotting, they're rusting, they're 30 years old, 20 years old, and they have a very short life. You know, those windmills have a very short life, especially the ones that are in the nice salty Atlantic Ocean and Pacific Ocean where the salt just gets under that steel and decimates it. No, it's a horrible, horrible thing for our country. And I speak out. It would be nice to say wind, because it sounds so good, doesn't it, Doug? Wind, wind. But it's not. It's these ugly machines, and they're all made. You got to see. Some are a little taller, a little shorter. They're made by different companies. They have different stocks. They have different blades. They have different everything. It is so horrible. And if you look at smart countries, they don't use it. Smart countries don't use it. And we're now a smart country. We're a brilliant country. We're not smart. We're brilliant now. We're going to be a brilliant country. We have to be, because we have to catch up for some really stupid people that did a bad job. Yes, Brian?
Yes, Mr. President, I've got a quick comments and feedback as a native Texan, someone that I grew up bringing my kids to a camp very near the affected camp now. Thank you on behalf of Texas. I've gotten hundreds of messages that want to thank. Listen, if you're in the cabinet room, you can tell the president and his team on behalf of Texans, thank you so much for the quick response and the loving, the hugs. I saw that you gave. Two quick questions.
I saw a Palestinian senator. His name is Shimmer. He's a great Palestinian. No, he's a Palestinian. He's become a Palestinian. He's abandoned the Jews. But I saw him say, it's Trump's fault. Yeah, that's right. It's Trump's fault. He was actually, do you ever see John Lovett's The Liar? Where he goes, yeah, I went to Harvard. That's right. This was Schumer. He goes, yeah, it's Trump's fault. That's right, it's Trump. I actually saw that stupid guy try and blame it on me, and I said, man, that's a tough one to take. But his career is limited because I hear AOC is going to beat him, and she's no bargain either, by the way. Go ahead.
Well, I'm just saying that's an example of America First team effort to get this country back. So that's what America First looks like for the viewers watching us at home. Two questions. Looks like we have a rogue judge, an Obama-backed rogue judge that is attempting to block the funding to Planned Parenthood, which the big, beautiful bill cuts off the funding to Planned Parenthood. Any plans to challenge that?
Absolutely. Yes, we're on it. We're on it. And I texted, I believe, I talked to yesterday Secretary Lutnick and Secretary Besson. I reached out to you to let you know that we were on it in the big, beautiful bill.
Wonderful. And then
I let her handle that question. Did you notice? I said, go ahead, handle that question.
Toss it to her. Then my second question was Secretary Rollins. You did an amazing press conference today in front of the Department of Agriculture. You talked about the Farm Act and the need to get China out of our country, owning farmland. For the viewers at home that might have missed that, can you recap what that means to national security to make sure we can grow our own food?
Well, thank you, Brian, sir, if you don't mind. Yes, this morning, Secretary Hegseth, Secretary Noem, and Attorney General Bondi and I had a press conference at the USDA. I just happened to have a chart in case it came up, but obviously the Chinese owning of farmland in our country is a massive national security issue. And for the media, you can see the yellow is where all of the farms have been purchased over the last number of years. And the red is around all of the military bases where that farmland has been purchased. So this is a massive national security issue. The press conference this morning included 3 of our greatest governors as well, Sarah Sanders from Arkansas, Jim Pillen from Nebraska, and
This
Bill
is
Lee
Brooke
from
Rollins, the
Tennessee.
Secretary of Agriculture, weighing in here with props as part of the cabinet meeting at the White House, live on Bloomberg.
Farmland, obviously, Congress needs to step up and catch up, and we're going to be working alongside of them as well. We had some of our members, great members of Congress there, but it is time, and I think that this morning was symbolic of many things. The first of this administration working every day to effectuate President Trump's leadership and unequivocal support of America First. But second, just how close we are as a cabinet. I don't know in any other administration that you'd have 4 cabinet members at the USDA on a Tuesday morning when it's about 110 degrees outside with the sun beating down on us talking about Sir Your Vision. So I think it was a great day. It was just the start. There's an executive order coming and some other things coming behind that. But protecting America's farms isn't just about protecting our farmers. It's also about national security. So that's what we discussed this morning.
I do want to say that I think we have had a really good relationship with China lately, and we're getting along with them very well. They've been very fair on our trade deal, honestly, and I hope we're going to have a great relationship. It's a big, strong, powerful country. We're more powerful than they are. We have much better military equipment than they do, but we are getting along with them very well. I'm getting along with President Xi very well. We speak often. And with all of that being said, and I understand what you're saying, but I think we're getting along with China very well.
Mr. President, you have sent more weapons to Ukraine, as you said last night. Last week, the Pentagon paused some shipments of weapons to Ukraine. Did you approve of that pause?
We wanted to put defensive weapons because Putin is not treating human beings right. He's killing too many people. So we're sending some defensive weapons to Ukraine, and I've approved that.
So who ordered the pause last week?
I don't know. What did you tell me?
I think that's a question for the Pentagon.
Go ahead.
Mr. President, on immigration, the Secretary of the Agriculture did say this morning that undocumented workers would not be covered by any amnesty of who are working on farms. You had said maybe that the ISA folks won't go after those folks on farms. So which is it?
There's no amnesty. What we're doing is we're getting rid of criminals, but we are doing a work program. Do you want to explain that, please?
Yeah, this morning we talked about, of course, this was a top of mind question. This morning we talked about protecting the farmers and the farmland, but obviously this president's vision of no amnesty, mass deportation continues, but in a strategic way, and then ensuring that our farmers have the labor that they need. Secretary Chavez-Durimer has been a leader on this. Obviously, this comes out of the Labor Department, but moving toward automation, ensuring that our farmers have that workforce, and moving toward an American workforce. So all of the above.
We've got to give the farmers the people they need, but we're not talking amnesty. Lori, do you want to say something about
that? Yeah, thank you, Mr. President. On this, thank you, Secretary Rollins, how important this is never to displace the American worker. What the Department of Labor is doing is focusing on what the law entails now, being more modernized, more streamlining, to work through the H programs. We're going to have a concierge approach to that, where we have developed a new office to answer the need of our farmers and ranchers and producers, and not to displace the American worker and follow within the law now. And that does not include an amnesty program at all. And we've seen that working, and we'll continue to have that roll out. On the other topics that we've somewhat talked about, the jobs numbers, Mr. President, 4 months in a row, we've seen those jobs numbers increase. That's an exciting time for our manufacturers. That was asked earlier. We know
hearing from the Labor Secretary now, Lori Chavez-Durimer, as part of our coverage of this cabinet meeting. This is a live conversation at the White House on Bloomberg.
Rolled out 63 new deregulations that we're going to be moving through. In the first Trump administration, it was successful with over 30. We've just rolled out 63 new ones in order to double down on those manufacturing companies, to let them know that we have signaled through this process that we will assist them in getting the workforce that they need. It's an exciting time. That one big, beautiful bill, that was the signal to my former colleagues in Congress to get this done. It's been an important time. I spent time on the ground visiting 7 states in 9 days prior to that bill being passed, because it was the most pro-worker piece of legislation that we will ever see really in this country right now. No tax on tips, no tax on overtime, no tax on Social Security. That matters to the American worker, because we don't want to take their money and give it back. We want them to keep more of their hard-earned dollars in their pockets currently, and that's what they're excited about. And as I move forward with those tariff talks, I heard a company, orthopedic company in Indiana, say to me, for the first time since you have taken office, Mr. President, their increase in their bottom line by 8% since these tariff talks have happened. Not one company has said the president is not doing a good job. These tariff talks are working. They're feeling it on the ground. The media has told a false story because what's happening on the ground is positive, and that's what we're seeing in these jobs numbers. So I really, through the Department of Labor, to come in behind all the secretaries and build this workforce is going to be key to the American worker. So thank you for what everybody did this last week. The One Big Beautiful Bill is a doubling down of this, and we're going to see these workers start to grow. And that apprenticeship program is going to be working.
That's
We'll
right.
have that
It's gonna
million
be-
apprentices across the
We, as you know, we're building plants all over the country now, which you weren't building any plants 4 years ago. You weren't building anything. But those plants, when they open up, it's going to be, you'll see numbers like you haven't seen ever. I don't think in history you'll never see numbers like what we're going to see in the very near future. Many of them are building the plants. Some are just starting right now. You know, it's a brand new administration. But, and they wouldn't be here except for two things: November 5th, the election, and the tariffs. And frankly, I guess the election was more important because of the tariffs. I mean, another person wouldn't have done this. But they're coming in because of the tariffs. They have to, they're not going to pay 25, 30, 40, 50%, 70, and 100%. And we'll be announcing something very soon on pharmaceuticals. We're going to give people about a year and a half to come in, and after that they're going to be tariffed if they have to bring the pharmaceuticals into the country, the drugs and other things into the country. They're going to be tariffed at a very, very high rate, like 200%. We'll give them a certain period of time to get their act together. But they were all here. Now they all left. They went to other places because we allowed, the people that sat in this room allowed it to happen. And I don't allow it to happen. The people in this room don't allow it to happen. So we're going to be announcing pharmaceuticals, chips, and various couple of other things, you know, big ones. We did steel, as you know, they're 50%. We did aluminum, 50%. Lumber just came out.
That's copper.
And we did cars. And now, today we're doing copper.
Copper and lumber. What would that tariff be on? The sectional tariff?
I believe the tariff on copper, we're going to make it 50%.
50%.
Any breakthroughs on
See, I'm glad he
Gaza?
didn't question it. Just
Any
sort of said, I sort of just thought, what would that be? A quick one. I didn't have much time, but he agreed with me. That's why he's Howard.
Any breakthroughs on Gaza with the Prime Minister, and there's reports that you're meeting with Netanyahu again tonight. Is that
Yeah, I
accurate?
am. He's going to come over again tonight. We're talking about Gaza. It's mostly Gaza right now. It's he's been very unfairly treated. I think what they've done to him in Israel is very unfair, having to do with this trial. You know, he's a wartime prime minister, had an unbelievable outcome, and I think he's been treated very unfairly. But he's coming over later. We're going to be talking about, I would say, almost exclusively Gaza. We got to get that solved. Gaza is a tragic. It's a tragedy. It's a tragedy. And he wants to get it solved, and I want to get it solved, and I think the other side wants to get it solved. Steve, could you talk on that, please?
We're in proximity talks now, and we had 4 issues, and now we're down to 1 after 2 days of proximity talks. So we are hopeful that by the end of this week, we will have an agreement that will bring us into a 60-day ceasefire. 10 live hostages will be released. 9 deceased will be released. We're meeting at the president's direction with all the hostage families to let them know. And we think that this will lead to a lasting peace in Gaza.
And you're doing a good job. It's a tough one. It's a tough one. A lot of hate, you know. This is called long-term hate. But we think we're going to have it solved pretty soon, hopefully with a real solution, a solution that's going to be holding up.
And can I follow up? This is, I think, the first cabinet meeting since Elon Musk has not been a special government employee, not here anymore. He's now saying he's going to create a third political party. Are you worried about the impact that that could have?
No, I think it'll help us. It'll probably help. Third parties have always been good for me. I don't know about Republicans, but for me.
Are you second guessing any of the cuts that Doge made? Since you described it as off
Look,
the rails
look,
the other
we
day?
cut hundreds of billions of dollars with Doge. We could have done it differently. I would have done it differently a little bit, maybe, but it was something that we saved a lot of money. You can always second guess. I guess some of the people in this room maybe would have done it slightly differently, and some would have done it exactly the way it was done. But it was dramatic, and it was important, And we found a lot of things like billions of dollars given to people for environmental protection where they had $100 in the account, like in Atlanta, Stacy. And then you had another one with 20 billion here, and 20 billion here, and 2 billion here, and 15 billion. And Lee, you might want to mention just a couple of those things. We really got because of Doge.
At the Trump EPA, the one big beautiful bill was filled with many big beautiful wins for the taxpayer. It delivered a sledgehammer to the Green New scam. Billions of dollars rescinded. So it's a big deal for the American taxpayer who sees money go through pass-throughs that are filled with self-dealing and conflicts of interest. They see unqualified recipients. They see reduced agency oversight, and they want accountability with their tax dollars, and they got it. So in the example of the Stacey Abrams connected NGO, they received $100 in 2023. They got $2 billion in 2024. They had to complete training on how to develop a budget that was put into their grant agreement. They, out of nowhere, started paying a CEO $800,000, a COO $450,000, 22 people making over $150 grand. Out of nowhere, this is tax dollars. So money go through pass-throughs, through other pass-throughs, through other pass-throughs, and we lose oversight over it. And you see that it's going to former Biden officials. It's going
This is EPA Administrator Lee Zeldin speaking live as part of President Trump's cabinet meeting. Live from Washington here on Balance of Power as we welcome our global television audience to the conversation. This is live at the White House.
This is about us being good stewards of American tax dollars without any apology or regret. That's why President Trump was elected last November, because there are a whole lot of people who maybe they hadn't voted Republican in a long time. Maybe they didn't even vote for President Trump the first time around in 2016, but they're regretting that vote from 2016, and they were making it right in 2024. So the One Big Beautiful Bill gave us the tools to rescind billions of dollars more. We're seeing hundreds of thousands of dollars that'll get wasted per electric vehicle as an example of this money that was going through it. They gave $50 million to a group called Climate Justice Alliance. They say that climate justice runs through a free Palestine. The Biden EPA gave $50 million to a group that says the climate justice runs through a free Palestine. We say that you're going to spend $1 in the name of remediating an environmental issue, then spend $1 on remediating an environmental issue. We say that we can protect the environment and grow the economy. We want to help grow more baseload power in this country. So why is it that it took this long for this team to get assembled, to be able to fix the mess that we inherited? But gosh, we love showing up at our jobs every single day, first thing in the morning, because all day long we get things done for the American taxpayer. And Congress did its part last week by passing One Big Beautiful Bill to deliver this accountability and to cut off the Green New scam. So maybe it's a bad day for Stacey Abrams. Maybe it's a bad day for all those well-connected Democrats getting paid off. But you know what? God bless America. Because at the end of the day, President Trump is here, J.D. Vance is here, and the greatest cabinet ever assembled to deliver that much-needed and highly demanded accountability.
Mr. President,
That was a very good and that's from the heart. That's from the heart.
On Ukraine, the Ukrainians have asked the international court to go after Russia for using toxic chemicals in the fight. Germany and Germany and the Netherlands have had intelligence saying that. What does U.S. intelligence believe, and what do you believe about the use of chemical weapons? And would you agree that that's a case for the court?
Want to ask John maybe to discuss it if you'd like, John?
Well, Mr. President, obviously, chemical weapons, if it's documented in its use, it's illegal. It's against all international laws of armed conflict and treaties. And obviously, I can't share in this room with this audience the intelligence that I can share with you privately. But obviously, you're not going to stand or allow for any violations of international law by anyone.
That's right. Thank you.
This is CIA Director John Ratcliffe just wrapping remarks here in the cabinet meeting. Live on Bloomberg.
Former great
Sean Duffy now,
very
the Transportation Secretary.
Decided to go out and make a couple of bucks. He made a lot. And he got bored with that, though. He likes serving people better, the people. And could I ask you to just discuss a very important subject to me, and that's the modernization of our equipment at airports so that planes aren't crashing into each other and bad things don't happen. It should have been done many years ago. We were going to do it, and then the election precluded that, unfortunately, but we're doing it now. Could you tell them where we are?
Yeah, if I can start with Newark. You guys all covered what happened in Newark. We had outages for a couple of 30-second outages a couple months ago. We have, in 2 months, Mr. President, it's historic speed, laid new fiber lines for communication and tested those in the next month. So those new lines for the Philly TRACON that controls the Newark airspace, they're up and running. Lightning fast speed. June was the most on-time June ever in the history of Newark for air travel. So that's going incredibly well. By the way, we shouldn't have dealt with this because Joe Biden and Pete Buttigieg had moved the center from New York to Philadelphia. They didn't test the lines. They didn't do the work, which is what brought us all these problems. But in the big, beautiful bill, we got $12.5 billion. This is a historic investment in air traffic control. And so what the money is going to allow us to do is move from copper to fiber all over the country. So new copper lines. We think we can do that in a year and a half to 2 years. We have radar that dates back to the 1950s, some of it from the 60s and 70s. We get brand new radar across the country as well. We have some infrastructure money to build TRACONs and centers, the en route centers that control the traffic across the country. So this is a massive new start to rebuild air traffic control. And again, this is dilapidated. Americans think that their government takes care of them and makes the investments that are necessary to make the country work. And for 30, 40 years, the investments weren't made. And so under your leadership and direction, we are making those investments. And per your direction, right now we are interviewing what we could call a general contractor or an integrator. One company to manage. It's a massive project. The FAA is not qualified to manage this kind of a project. So we are now going through the process of finding who that one company will be to manage the whole project. We'll interview those companies together and make that selection. So we'll write one big, beautiful check to one beautiful company that'll be responsible for this whole build. But if I just make one last point, this is not enough money. We're going to need more. But this is a massive new start. The biggest investment. We'll need some more money on top of it, but a great start from the big, beautiful.
It's a starter. It was very important to us. And just to cover that, there have been accidents, and my pilots, I would often hear them say, "Oh, good," and they would use a different system, a different country to land in New York. They'd use the radar and other things from a different country. I said, "What's that?" He says, "Oh, our system is so bad." And I knew that. We were all set to start. And Boudet Edge came in, and what they did was so crazy because they hooked in copper into fiber, into steel, they had all different systems. They had hundreds and hundreds of contractors, different contractors for different airports. They spent billions of dollars, and they made the system worse because you can't hook copper into fiber. That doesn't work that way. You just can't do it. It's not doable, but they tried to do it. Didn't work out too well. And in the end, it was just a complete disaster. We want to have one great company. Now, Raytheon's going to bid. IBM's going to bid. We have 5 or 6 bidders that really are good and do this stuff. And we want one, because I know about overruns. I look at the railroad out in California, headed up by one of the worst governors in our country, who I used to get along with, actually, but he's just, when you lose 25,000 houses and you would have had your cities burned down. If we didn't step in, Los Angeles would have been burned to the ground. But you look at that, and I said, I really know how to build, and you got to have one guy, one contractor, one great one, whether it's IBM or Raytheon is good, but you have 4 or 5 that are really, really great, and they're all bidding against each other. But you don't want to have one doing the wire and one doing the digging and one doing the demolition and then they're all saying they all blame each other because they're saying they were late and therefore you have to pay me millions of dollars more money. I know the system so well, and we're going to have a great company do the whole thing. We're going to get a fantastic price. Maybe we'll get them. They're very big and very strong, and maybe we'll get them to make a contribution toward getting it done at the right price. But we're going to have a great system. When we finish, we will have the best system on earth, done by one of the 2 or 3 best companies. There are only a few companies can do this. This is not. But if you would have seen what this other group did, they were going crazy. They had, I heard 3,000 contractors. And then when it all came together, guess what? It didn't work. It's a disaster. So we're going to have in a pretty short period of time, it'll take us about 2 years to build it. And we'll have a contract given out probably over the next couple of months. We have some great bidders, some great companies that want to do the job. You're going to have great air traffic control.
Just to make one last point on this. So the last administration signed a contract with an American company to fix the copper to fiber, and that contract was a 15-year contract. The system is failing today, but that's how idiotic and incompetent the last administration was. And under your leadership, we're saying, listen, we don't have time. We don't have 15 years. We don't have 5 years. We have to do it right now. And so the president always talks about on time and on budget. We have embraced that. We are going to be on time and on budget. And by the way, you mentioned a train out in California. Stay tuned for probably give us 5 days and you'll have an answer on what's going to happen with the $4 billion that we potentially have invested on a train that's going to go nowhere. It's going to be $120 billion that'll never connect San Francisco to LA. Again, the last administration wasted so much money on projects that never work. If you're going to have high-speed rail, you're going to invest billions, we should actually have high-speed rail in America, not boondoggles that fund political friends and allies and family.
They have from San Francisco, inside of San Francisco to inside of Los Angeles. Should have never been built because airplanes do it better. And you could drive it. You could drive it. No problem with driving it. The roads aren't even crowded. So they were going to do this. Somebody's idea. Somebody got paid off a lot of money, and they started it. It was going to cost a very small amount of money, and it ended up costing literally hundreds of times what the original. And now what they did is they said, well, going into the city is too big a deal, so we'll leave it 25 miles short of the city. So now they're leaving it. They're not going to finish it, really. It's not the same project. So now they're leaving it outside of San Francisco and outside, short of each. They just want to get it done, and I've never seen cost overruns. You know, if you have a cost overrun of 10%, you should be ashamed of yourself. 20%, you should not do any more jobs. This is a cost overrun of 2,000%, something like that. It's unlimited, and it's not finished. And maybe it will never get finished. And I told Sean, look at it from every standpoint, but we don't want to, you know, we have federal money going into that, and it's like throwing it out the window. So whatever you can do to stop it.
$15 billion and not one track has been laid. $15 billion and we're 16 years into the project, not one track.
Mr. President,
on New York, you're the most prominent Republican in the country from the city. What do you want to...
Anywhere else? I don't want to be a wise guy. Perhaps I could. Maybe Marco.
But how do you want Republican voters in the city to vote in the upcoming mayoral election? Should they vote for Eric Adams? Should they vote for Sliwa? Should they pick someone else?
Look, number one, you have a communist running, and you shouldn't vote for him. He's a disaster. He's leading. He's got the Democrat nomination because that shows you where the Democrats have gone. He actually wants to take over the grocery stores of John Catsimatidis, who's a great guy, a rich guy, grocer, does a good job, wants to take over. He actually called me the other day. He's concerned his stores are going to be taken from him, and they won't be run like John runs them, believe me. He runs a good operation, but he actually said he wants to run his own grocery stores. No, this is a man who's not very capable, in my opinion, other than he's got a good line of bullshit, and he's convinced them to go with him. Now, as you know, Cuomo, who does have capability, is running, but he got knocked out, and now they're running as, you have Eric Adams, the current mayor, you have Cuomo, and you have Curtis Sliwa. And Curtis runs every 4 years. He seems to be a fixture on the running scale. But you know, it's I'm not getting involved. But I can tell you this: I used to say we will not ever be a socialist country, right? Well, I'll say it again: we're not going to have. if a communist gets elected to run New York, it can never be the same, but we have tremendous power at the White House to run places when we have to. We could run D.C. I mean, we're looking at D.C. We don't want crime in D.C. We want the city to run well. Susie Wiles is working very closely with the mayor, and they're doing all right. I mean, in the sense that we would run it so good, it would be run so proper, we'd get the best person to run it. The crime would be down to a minimal, would be much less. And, you know, we're thinking about doing it, to be honest with you. We want a capital that's run flawlessly, and it wouldn't be hard for us to do it. And we've had a good relationship with the mayor, and we're testing it to see if it works. But New York City will run properly. We're going to bring New York back. I love New York. You know, I loved New York for a long time. Then we had a bunch of crooked people in there. You have an attorney general who's a total stone cold crook, New York State, Letitia James, a total crook. All they do is want to go after political opponents. They do what's ever expeditious for them. She's the one that took out Cuomo because she wanted to run for governor, and then she ended up getting 1% of the vote. She polled at 1%. She dropped out, went back to attorney general. You have a lot of crooked things going on in New York. We're going to straighten out New York. Maybe we're going to have to straighten it out from Washington. But when I see a communist who has actually gotten a Democrat, pretty much gotten the Democrat nomination, they also went to that new form of voting, which is a beauty. You go in there in third place, you come out in first. That's that form of voting that they have gone to. You know what I'm talking about. It's not too good. We're going to do something for New York. I can't tell you what yet, but we're going to make New York great again also. We're going to make it great again with the country. What we've done in this country in the last 6 months, nobody has ever seen it. And I told the story. The king of Saudi Arabia is over there. They gave us $5.1 trillion between Saudi Arabia and UAE, Qatar. 3 stops, $5.1 trillion coming into our country as an investment, biggest investment ever made. And it's all going to good stuff. I mean, all real big, good stuff. Energy projects, big things. But they all 3 told me essentially the same thing. We thought your country was dead, and now you've got the hottest country in the world. We're right now riding the hottest country. We all, and you can all be proud of it. We're in the hottest country. This is the hottest country in the world. There's nobody close. Made hotter by some great pilots and great machines that nobody else has. Those great, big, beautiful machines, they rode those machines right into the toughest territory. And nobody knew what the hell happened. And then they hit their targets perfectly, and it was complete and total obliteration. And that's why that war ended, Steve. They told me that's why the war ended. The war ended when they saw that, it was over. And we're very proud of it. But we have the hottest country in the world right now from a country that was close to dead. And if I didn't win, if you would have had the other person win, we all know who she is. Whether it was she or Biden, they're the same. He may have been more competent than her, and that's hard to believe, right? But if you had that ideology in, I don't believe you would have had a country anymore. I think you would have had a country that was broken up. But we had a dead country. Now we have the hottest country in the world, and everybody knows it, and everybody said it. Mr. Vice President, do you have anything to say?
Well, thank you, Mr. President. I just want to say that I'm very proud of the whole team. I think everybody has worked together. You see Pete and Marco and Steve working on some of the diplomacy, Christy and Pam working on the border. We just have a really solid team, and we've done a lot of good work. And in particular, I want to congratulate the White House staff led by the President on getting the One Big Beautiful Bill passed. I was personally skeptical. Sorry I never told you this, but I was skeptical we'd be able to get that thing done by July 4th. We did it because we worked together and we worked very well. So it's an honor to be a part of it, but I'm really proud of you guys for doing a great job.
The beautiful thing about it, it had something for everyone.
That's right.
Most people said it had to be broken into 7 bills. It's so big. The problem was that some of those 7 have nothing for anyone, but they had to be done for the country. You know, sometimes you have to do things for the country that aren't necessarily popular. We had a couple of them, and that wouldn't have worked. So the One Big Beautiful Bill, many people said it could never be approved. Too big, too everything. Is too much. but it had something very big and very important for everyone, and it's great for the country. And remember, the Democrats have come up with a false narrative, just whatever. It's just a line that they send to everybody, and they print. I think in the case of this, it's death. Everyone, just whatever. It's just a line that they send to everybody, and they print. I think in the case of this, it's